Of course, auto is also in focus because in addition to the defense story, we're keeping one eye on European car registrations and what that market share actually looks like from European automakers versus Tesla versus BYD, et cetera, et cetera. We're going to dive into the details. And of course, one eye on Spanish banking, always BBVA and Sabadell digesting the announcement from Carlos Corpo himself yesterday, Guy.
Absolutely. Right, here we go. Wednesday session. Let's take a look at what we are going to see. We are anticipating a fairly quiet start. European markets are open. The opening trade gives us a FTSE 100 that is absolutely flat as a pancake right now. That is kind of what we're anticipating to persist actually throughout kind of the early parts of the session. Elsewhere in Europe, you may see a little bit more of a bid, but not by much. You're not talking about a big rise today. The stock 600 is up by 0.1%. Same for the Spanish market this morning as we digest the defense story there, what is happening with the 5% or 2.1% according to the Spanish, and what is happening with the banking sector as well. The French market's up by 0.2%. The German market's clearly got nothing going on because it's already open and is up by 0.3%. Feels like we're in a kind of holding action today, but there are plenty of more catalysts potentially coming. We're waiting to see what happens next in the Middle East. We're waiting to see what happens with the trade story. That is accelerating towards us at a rapid rate. And today, we very much focus on what is happening with the defense story, Kriti. What's happening with the sector story and the single stocks?
Well, it's a fascinating one because right at the top of my screen, I'm seeing two major sectors that are leading, and that is technology and that is defense. No surprise there. It is quite literally a defensive rally on our hands, but a marginal one, higher by, to your point, only 0.2% on the broader benchmark. Your biggest contributions, weights to the upside, whatever you want to call it. ASML and Rheinmetall are two of the biggest ones, which I think really tells you where this market is headed and the fact of how heavily this NATO summit is playing into these markets. To the downside, though, I'm seeing a lot of healthcare stocks that are taking a beating. BBVA, for example, also one of your weights on this market as well. So really going to keep an eye on this. But to your point, a mixed one in terms of sectors.
Yeah, you've got 353 stocks up, 207 down, 38 unchanged. You're not getting, it's a reasonably balanced market. It doesn't feel like it's a market that's got huge amounts of catalysts associated with it. It's interesting that Rheinmetall is up, but Kongsberg Group, for instance, is down. Even the defense sector is reasonably split. You're seeing, as you say, some of the heavyweights, Novo, Nestle, L'Oreal, adding to the downside. The mix on the upside is fairly eclectic as well. ASML, HSBC, Ferrari and Siemens within the top four stocks. I'm struggling to find a clear sense of direction that I can take away from all of this. Even within sectors, you're seeing a fairly decent split. Engine makers are up, Rolls-Royce and Safran both catching a bid as well.
This feels like a hodgepodge kind of day. A jambalaya of stocks is, I think, what I'm going to call it.
Okay. Jambalaya.
Yes, a jambalaya.
That's the first time I've ever heard. Yeah, but it's the first time I've ever heard it used on air to describe the stock market.
Bringing a little southern flavor to the European opening trade. Let's talk a little bit about these markets, though, and how you navigate it. Of course, geopolitics are front and center. Bonnie Baweja all over this conversation. Chief strategist over at UBS joins us this morning. What do you do in this market? Where do the next leg of gains or drop come from?
I think you've got to be a little bit careful, just given the fact how far markets have rebounded, right? Going into July 9th, there is no tariff fear priced into the market. So if you look at a basket of stocks that primarily get their revenues from abroad, so these would be the most tariff-impacted stocks, you take away from that the impact of all macro variables, and what's left on the table is the tariff impact. And on a scale of 0 to 100, tariff fear is at 0, right? So this is very different from where we were on April 2nd. Extremely different from where we were on April 9th when the markets bottomed out. At this point, tariff fear is back at 0. And on July 9th, we may get tariffs going up, going down? We don't know. But at this minute, what we do know is that tariff fear is completely priced out. So given that this market has already climbed significantly higher walls of worry, given where we are going with tariffs on July 9th, we think it is, the caution is what is warranted right now. So at this minute, we won't be chasing the markets higher. I recognize that we are within touching distance of all-time highs on the S&P. I'll be there on the NASDAQ. We're 1% on there. But hard data is now beginning to get impacted. It's really interesting that the gap between hard data and soft data is at 27-year highs. Our numbers are telling us that hard data implies global growth at 3.6%, which is slightly above average, and soft data implies global growth at 1.5%, which is deeply recessionary. And that gap is likely to close with some early signs that hard data is now beginning to get impacted. I don't think that's priced into the markets. I don't think there's any tariff fear in the markets. Ergo, we are a little bit cautious on equities on both sides of the pond right now.
That's almost verbatim what Jay Powell said yesterday in terms of the hard and the soft data and the tariff read-through. But my question to you is, what is a more dangerous outcome here when that tariff data and that tariff impact does actually hit? Because it will, inevitably. Is it if corporates absorb the costs? Is that the bigger hit to equities? Or is it that the consumers passed on and it's more of a demand hit? Is that the bigger hit to equities?
See, the margin hit, so it's a great question because margins are at about some 90 percentile of their history, right? I think the consumer hit is going to be much more dangerous because if we find that quite a few of these the tech companies that have led the gains are actually quite cyclical, we find that Meta, Alphabet, Amazon are actually quite cyclical. If the US consumer begins to get hit and we begin to question the hegemony of these big AI companies, that I think will be quite a big hit for the US market. So I think the channel that we really need to watch is real disposable income. That has been very strong in the last several months, but you could see a hit both through nominal wage growth coming down and also through prices going higher.
Susie Wiles has just arrived at the NATO summit. The White House Chief of Staff, I'm assuming that Donald Trump will follow fairly shortly. Whether or not he comes in through that route, I don't know. That looks maybe a little open, a little public, but we will continue to monitor what is happening at NATO. You've got this tension between Europe, Banu, and the United States on tariffs, on defense spending. Again, the market doesn't seem to know what to do with it. As you say, it's pricing the tariff story at zero. Do I need to think more? When I think about Europe, do I need to think about the fact that it's going to have to defend itself, that it's going to have to spend more money? And is it a choice between guns and butter? And I just I don't know where Europe goes next in terms of its fiscal position.
It's a great point because not many people speak about the choice between guns and butter. They just think more guns equals to more growth equals to great for the long term. Actually, I think you're absolutely right. I think there is a choice in fiscal terms between guns and butter. So the more we spend on defense, the less we spend on others over the long term. Today in Germany, we don't have that problem because Germany is just increasing its expenditure on transport, on infrastructure, and on defense at the same time. Now, this is being reflected to some extent in the defense stocks. The rotation away from the US into Europe, I think, is going to be a temporary rotation, right? Because at this minute, if you look at the cyclical data in Europe, that's fine. In fact, at the margin, getting very slightly better. But the cyclical data in the US, and I really want to sort of be at pains to sort of elaborate on this, I do think that cyclical data in the US is deteriorating. Soft is extremely weak, hard is deteriorating. So I think that will take precedence over the next 3 months. The S&P is more in harm's way than is Euro stocks. But beyond that, it's really hard to argue that the value trade is going to do well over the next 5 years.
Sure.
And you do need the value trade to do well for Europe to outperform US over the secular horizon. So I think this is a tactical rotation into Europe. I don't think this is a secular rotation.
I hear all you're saying, and it sounds completely logical. Mm-hmm. The problem is, if I'm a PM, an institutional portfolio manager at the moment, I'm underperforming. The market is doing okay and continues to defy all expectations in terms of what is. Isn't there a danger at some points that PMs are just going to, I've got to chase this?
Everybody gets stopped into the trade. There is that danger, but I think if I were a PM today, so first, all institutional investors are quite bearish right now. Most retail investors are just following the strategy they have followed from 2020, which is to buy the dip.
And it's working.
And it's exactly right. So those folks are winning. CTAs are winning. The momentum trade is winning, right? Except at this minute, as I said, the cyclical data is turning in the US. The hard data is beginning to get weaker. You see that in orders. You see that in consumer spend already. We have PCE on this Friday, but retail sales was already weak. The details of NFP are weak enough that
it's coming slowly, though. That's the problem.
I think it's actually now it's coming. I think the markets are up because we have climbed that wall of worry in the Middle East, and oil prices came straight back down. I think that's why the markets are up. I think we'll struggle to go well past the highs. And I think the risk-reward really is skewed, I think, in the next 1 to 3 months, not over the secular horizon, but in the next 1 to 3 months, it's skewed to the downside, because I do think earnings expectations, if you look at earnings expectations, over the next 3 years, so we have data all the way till 2027 Q2, a CAGR of 11.5 to 11.6%. That's very high numbers. And this is not just the Magnificent Seven, by the way. Of course, that's the higher part. But if you look at the not-so-magnificent 493 companies, even there, the CAGR is about 9.7%, which is a very high number. It's at the higher ebb. So markets are extrapolating the very strong growth we've seen in the US since 2021. That's what's being priced into earnings out here. That's what's being priced into margins. I think the consumer in the US is likely to weaken. I think investment sentiment, both residential and non-residential, with this degree of uncertainty, I think it's going to be weak.
But Banu, markets don't follow reason, to your point. They're not looking at earnings expectations on a day-by-day basis. And when the volatility hits, the momentum trades go into a defensive play, whether that's technology in the United States, to your point, or whether it's defense here. It's ultimately a liquidity story, the hyperscalers in the States or federal contracts here in Europe. What is the defensive trade if both of those two sectors take a bigger tariff or geopol hit?
Yeah, so if you look at the liquidity story in the US, again, a lot of retail inflow, a lot of CTA inflow, and that has supported the market. And I think that will likely continue. But I think at this minute, given that economic data is turning, I think the pessimism of institutional investors will overwhelm the sort of optimism or sort of buying the dip attitude from retail investors. I think that is likely to push the market a little bit lower in the near term.
What happens, there's a bunch of defensive trades out there that people think are going to be reasonably immune to that turn once we, gold appears to be one of them. Yet my experience over a multiple series of cycles is that even gold gets sold. And what I'm hearing in the market as well is that there's a mismatch between allocated bars and unallocated bars, and you're going to end up with some sort of a squeeze because nobody's going to be able to, the unallocated bars, there's going to be a problem, and you end up effectively with a run in the gold market. How crazy could things get?
If you look at how gold has performed in the last 3 or 4 years, which of course it's done extremely well, this is gold on a bad day, because gold has done this despite the fact that real interest rates, which is the single most important driver of gold, has been going higher. I think life for gold changed the day the Central Bank of Russia was sanctioned in 2022. Right? Since then, global central banks, global supranationals, sovereign wealth funds, and large pension funds and real money managers have been asking themselves, what is money? If gilts, bunds, treasuries can be taken away from somebody's reserve, what should we be buying? They don't have a great answer, but they do have one common answer, which is to increase allocations to gold. Retail in China is doing that. Retail in India has always done that. I think real money is doing that, and I think supranational central banks...
You have to be able to drop it on your foot and go, ow, for it to be real, though.
But I do think that gold has got another 10-15% upside from here. And precious metals as a whole, I don't think they're frothy, right? I mean, look at the gold-silver ratio. Yeah. Usually when you see froth in precious metals, you see silver massively outperforming gold.
My question really is, how do I buy it, though? Is there a mismatch within the market? And could we see some dislocation?
I don't think we should be buying it only through the miners. I think the miners will do well, but I think physical is where it's at, and I think that part of gold will do well. I think the miners will follow up, but I don't think this is a financial trade. I think this is a physical trade in gold. I think we should be looking for another 10-15% upside. So that's how you play defense. And what's happening, I mean, going back to Kriti's point, is that cyclicals have significantly outperformed since April 9th, right? Whereas the economic, I mean, cyclicals are implying ISM at about 63. ISM is is 50 or sub 50. So I think that short covering trade has already taken place. So this is why I'm saying that we have got to be a little more cautious at this minute. I think retail and CTS is what has driven it. You give it a little bit of vol. July 9th could be a vol trigger. You give it a little bit of vol, and the momentum trade can turn, and that's why I think we have to play defense at this minute.
It's always great to see you. Thanks for stopping by to see us. Banu Buwaja, Chief Strategist over at UBS. Quick look at the core six before we talk about some single stocks that we need to be focusing on this morning. This is where we are at the moment. Reasonably becalm markets. It's interesting to see Ferrari catching such a bid this morning. I just wonder whether that's, I'll come back to that. Is that part of what is happening with the European-US trade story? I don't know. Airbus, some of the airlines, some of the aerospace companies are on the move as well this morning. Let's get some more details, talking of which the defence trade is certainly one to focus on. Babcock on the move. Joe's got the details.
So we have got Babcock in focus, as you say, Guy, really on trend with this NATO summit going on. Babcock in their earnings today, upgrading their margin target, beating on sales, and also announcing a £200 million buyback and lifting the dividend as well. So smashing estimates across the board. This is a submarine maker and Navy ship maker that joined the FTSE 100 just a couple of months ago. So it's doubled in value already this year and up another 14% for Babcock in the defence sector. So really a strong one on that one. Then in the renewable space, it's a back and forward in terms of the policy outlook over in the US, but the latest reporting suggesting there could be some watering down of some of the measures that we're going to cut tax credits for the renewable space. So we are seeing a bit of a rebound once again in this sector. So Nordex, Ørsted, Vestas, EDP, all of them gaining on this, but it's kind of, as I say, a back and forward on that one. But for the moment, it's a little bit better in terms of sentiment. Then a stock really hit hard over in Paris today is Worldline. Now, there was some reporting out saying that the company potentially being looked at in terms of some of its accounts once again, which was related to compliance and regulation, something we saw a few years ago for the firm. But the company has put out a statement today, Worldline, saying that they have followed regulations and are going to comply with those probes that are going on. So Worldline hit today, down 10%, a bit of a shock for that one. Then in terms of delivery, we had the update from FedEx yesterday, pretty weak in terms of the parcels, potentially a bit of a tariff impact and how that's going to affect the international deliveries business. So seeing a bit of a move lower today in Deutsche Post, coming down nearly 2%. Not too much movement in the others, but Deutsche Post, DHL, the big rival, getting a bit of a hit following FedEx. And then a couple of morning calls, as we mentioned earlier, Stellantis getting a buy over at Jefferies. A lot of that related to the new products in North America and a bit of destocking as well. So a decent gain for that. We're up 3%. And as Critty mentioned earlier, we did get that data on EU car registrations. Keep an eye on that as well. And finally, WPP. This comes down to underweight at Barclays due to uncertainty on the strategy after the CEO recently stood down. So Barclays says that is a risk, and they go underweight. WPP down 1% in London this morning.
All right, Joe Easton from our equities team, we thank you so much. Coming up, we're headed right back to the NATO summit. Can those leaders agree to hit Trump's defense spending target? We speak to Latvia's foreign minister coming up next. Stick with us. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
Heads of government continue to arrive at the NATO summit, which is taking place in The Hague. We await the arrival of Donald Trump. The US president will be with us shortly, we anticipate. Let us turn our attention to some of the other nations, though, that are in focus. Oliver Crook is covering the event for us from The Hague. Let's go to him now.
That's right, Guy. We're awaiting Donald Trump really in the next 30 minutes to arrive here. The person for whom everybody has been waiting, and really sort of the declarations that he has to make about this new renewed commitment from the NATO allies that we expect to commit to 5% of GDP on defense spending. And I'm very pleased to be joined by the Latvian Foreign Minister, Baiba Braja. Thank you so much for joining us on the sidelines of this event. I'd like to begin with what we're expecting in the next couple of hours, this agreement to spend 5% of GDP on defense. Are you concerned about the timeline? Because this is over a 10-year period of time. There has not been a commitment to do it sort of every single year increments. Do you think that that might be a way to get around some of the spending for some of the countries involved?
I think it's important to have that flexibility because, yes, Latvia, the Baltic states, Poland, a number of others will reach the 3.5%. We have reached 3.5% hard military spending, hard NATO definition military spending already. We will go to 5% next year. But for the others who have already quite significant capabilities, for them to reach NATO defense capability targets, because each country have a specific list of targets that they need to reach, whether that's air defenses, long-range fires, and so on and so forth, it's first necessary to produce them, to have them, right? So it's not like tomorrow at lunchtime you can have what you have written on the paper. So that's why also when leaders agree a declaration in a few hours, it also provides for the annual evaluation of that commitment and how the implementation is going. So this is very important because it allows sort of flexibility in time, because you can have maybe more one year, something less next year, depending on the production capability. But it's also defense industry, because it's not enough just to have money. It's not enough to have 155 munitions that is costing 2,000 a few years ago. Today it costs 8,000. So you can raise defense spending as much as you want. If there is no industry producing at scale what we need, then we have a problem.
And one of the comments that Donald Trump made on his way over here on Air Force One was sort of questioning the commitment to Article 5. There are different interpretations to Article 5, saying that he might support some of his friends, that he'll give a definition of that. Is that sort of rhetoric? Does that concern you?
I mean, there's an ironclad commitment by the U.S., by everyone. It will be confirmed in the declaration when it's accepted. But again, the task of the NATO alliance, as the strongest defense alliance, is to make sure that we have all the intel information, that we have the situational awareness, that we have everything in place on our side in planning against possible Russian threat, because that is, again, confirmed as a main threat to Euro-Atlantic security, that we don't even need to reach the situation where Article 5 needs to be involved.
Right.
So it's secure, the chief of the armed forces, the Supreme Allied Commander, its national military commanders, political leaders, who really have to be in the culture of readiness to make sure that both our forces, our intel, our internal readiness, because what Russia is doing, a lot of sub-conventional activities and attacks in our countries, that it's all there, because Russia is constantly testing us. Are we ready? Are we ready? Do we understand what they are doing? So catching them early is very important, and then no need to discuss Article 5.
And we're expecting a meeting with Trump and Zelensky today. What would you hope to come out of that meeting? What do you see the U.S.'s role in this going forward? forward? And as if they step back, as we anticipate, what does Europe now need to do?
Listen, let's wait for the meeting. I'm sure they will come out and say themselves, but the fact that President Zelensky is here, he was at the leaders' dinner last night. Yeah. He has had extensive public and political engagements. It's a very clear message. Ukraine's self-defense is important for NATO. Strengthening Ukraine's capability is important for NATO. But also learning the lessons, integrating in our military and political decision-making what we see, how Ukraine is able to counter nuclear weapon states with 140 million inhabitants versus Ukraine's 40 million. For more than 3 years, Russia has not been able to reach its objectives in the war.
And also important for NATO will be the fortification of the eastern flank of NATO. Poland and the Baltic countries have asked for more money to help finance that from the European Union. Do you think that you will get that money? Do you think you'll get more Europeans on board to finance that?
Interestingly enough, also, Norway was for the first time last year awarded EU funding to strengthen its border with Russia. Finland is doing that, the Baltic states, Poland. So it's, you know, it's the whole northeastern flank that very clearly is strengthening both the sort of border in civilian, but also military terms, so anti-mobility, early warning, technological investment. We have built a fence on our eastern border, both with Russia and Belarus, because quite clearly we realized that it was not only about military issues, but also instrumentalization of migration, and that's another task.
Do you think that the EU will help finance that? Do you think that you'll get more countries on board?
The EU has been financing
more than
90 million euros have been invested from the EU common budget, but nationally we invest a lot.
And then a question on Belarus, because we saw a number of political prisoners that have been released, some of them being Latvian. Can you give us an idea of kind of what is going on here? Do you expect that there will be a rolling back of sanctions potentially?
We have thanked President Trump for the, push, and his special representative Kellogg and Jim Cole for all that they've been doing there, and John Cole, because we also have political prisoners. We still have not released everyone that they hold. Belarus holds more than 1,000 political prisoners altogether, not only Belarus people, but also others. So this is a first step. It's a good step. And we have asked for the U.S. to continue and to push Belarus leaders to really make sure that political prisoners are released. And now we don't have a pressure on the sanctions or something else. But that's something that Belarus authoritarian regime needs to understand, that we will not rest. We have people who are arrested unjustifiably, and they should be freed.
Well, Baiba Braja, thank you so much for your time. That was the Latvian foreign minister here on the sidelines of the NATO summit, as we expect Donald Trump to arrive really within the next 30 minutes.
Bloomberg's Oliver Crook in The Hague, as he said, talking to Latvia's foreign minister. He has a slew of other interviews. He's going to keep us posted throughout the day. Live coverage on the ground from The Hague. Coming up next on the program, we're going to dive into the market impact when it comes to defense stocks specifically. If you start to see a pullback in spending away from that 5% target, how does that show up into a market that's considering it a done deal? We're diving into the details next. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence.
the hardest part of being the CFO is?
Telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
This is the opening trade. Welcome back. We're about 30 minutes into today's session. Green on the screen across the board. Stock 600 that's starting to pick up a little bit of momentum, but only higher by 0.4%. Your outperformer this morning is the CAC 40, and that kind of makes a lot of sense. The underperformer in the last couple of sessions outside of the FTSE 100 and the oil story has been the French index. So perhaps a little bit of steam getting picked up there. We are, of course, live covering from the NATO summit from The Hague as well. We have NATO leaders arriving ahead of, I think, the big one, which is, of course, Donald Trump. We're also hearing currently at the moment from the Belgian prime minister. He was currently at the, prior to him, we were hearing from the Norwegian and the Finnish presidents as well. Guy, really talking about, you know, how far and how quickly they can get to these defense targets.
Yeah, I thought the conversation that Ollie had with the Latvian Prime Minister just a few minutes ago, really interesting as much as she said, yeah, we can spend more, but the cost is going up. Yeah. So therefore we spend more. Do we get, is there a kind of, what is the relationship between spending more and getting more kit? I think is one of the key questions. And Europe faces this challenge of building the industrial base as well. You want to be able to spend more but get more. Yeah. And that's the challenge that Europe now faces after years of underinvestment in building ammunition, in explosives, in all the kind of stuff that we now need. Costs are rising quite dramatically. The inflation rate within this space is enormous.
Not only costs are rising, but there's a lot of pressure on budgets right now. There's massive debt loads. We're revisiting dynamics in certain markets from 2011, 2013. We'll see if that sticks.
Yeah, it's pretty obvious. You can see that margin story in the next chart we're going to show you, which is European defense stocks just outperforming. The number of orders that are coming through, I think Rheinmetall got another one this morning. We saw it at the Paris Air Show very strongly last week. That was a really strong theme, that orders are coming through thick and fast. There are differences depending on you're a German manufacturer, an Italian manufacturer, Leonardo, for instance, or whether you're Thales in France or Dassault. It's really interesting. But this is the picture. You can look at what is happening with the defense basket and what is happening in Europe right now. The purple line there is the stock 600, and you can see that line is firmly at the bottom. So let's get a sense of kind of where we go from here and whether or not the outperformance that we've seen out of this space is going to continue. Benjamin Heelan, head of European Industrials Research at Bank of America, joins us now to discuss. Ben, it's been a great run. European defense stocks have had a fantastic run. The orders have been coming in. That's been priced into the stocks. Can it continue?
I think it will slow down, right? After the performance that we've had in the first half of the year, we're not going to have a similar level of performance in the second half of the year. I think what you will see in the second half of the year is you mentioned a little bit there about budget pressure. We're going to see a big debate about which countries are going to get to these targets and by when. I was at the Paris Air Show last week, and one of the big recurring themes was Germany. The Germans want to spend the money, right? And they want to spend the money quickly. We saw that with the budget last week. And so if you have exposure to the German government, I think you can expect when that budget gets approved in September, you are going to see material order momentum. You're going to see a lot of prepayment support to help with that CapEx build out. You guys were just talking about kind of building out the defense industrial base there. But if you have exposure to some of the other governments, whether that be France or Spain, where the speed with which you're going to be getting to those defense targets is definitely in doubt, there's going to be a bit more of a question mark around it. The other element, I think what we've seen is it's been an acutely European story in the first half of the year. I think in the conversations I'm having with companies and with governments, it's becoming a much more global story. Lots of focus on Japan and India and Australia. And so I think what you will also see is we will see a much more focus on the capabilities in the second half of the year, where there is a real structural shortage, air defense, missiles, relative to just tanks and ammo.
Does Europe need all its defense companies to continue doing what they're doing right now? I asked the question. I had a conversation with Eric Trappier, CEO of Dassault, at the Paris Air Show. And he basically said, we're prepared to go it alone. We have a French requirement which will build the next generation of aircraft for, the next Rafale or whatever they're going to call it.
Yeah.
Is Europe spending wisely at the moment? Yes, we want to increase defense budgets to 5%. But are we getting enough bang for our buck in Europe when we spend that 5%? There's no point spending more money if we just get less in return for that. Where does the rationality come from in Europe? Where does it get delivered from in terms of allowing Europe to rearm itself, but to do so at a sensible price?
Yeah. I understand that point of view from the Dassault perspective. The reality is that a lot of the intellectual property in developing and designing a 6th-gen fighter jet program lies with Dassault, Safran, Thales in France. The challenge is that France doesn't have the budget flexibility to be able to afford these capabilities standalone, right? The reality is that developing a 6th-generation fighter jet with a significant autonomy component is going to be an extremely expensive venture. And so I think that, they're going to need cross-European support in order to do that. Where are you seeing that rationality come in? So as an example, the Rheinmetall-Leonardo joint venture, which was announced last year, where they are building a land vehicle center of excellence, essentially in Italy, is a good example of how you can collaborate across different governments, bring intellectual property together, and basically build a platform in Europe that you can export from. There's a lot of synergy. So while that's not cross-border consolidation with one company buying another, it is effectively consolidation because you're putting the best parts of a Rheinmetall vehicle in with the best parts of a Leonardo defense electronic system, building a great product that can be leveraged across Europe and also exported. So my view is you'll see a lot more JV structures announced in Europe over the next couple of years. You've seen Rheinmetall announce things with Lockheed Martin, with Anduril, just at the air show last week. And I think that's where Europe is going to go rather than consolidation, because to your point, we need to drive more efficiency in the defense industrial base in Europe. The money is growing, but it's pointless growing if we're just going to have 52 different types of battle tank in Europe. That is not going to be about getting the best bang for our buck.
Well, Ben, as you were speaking, we're hearing some comments here from the Belgian Prime Minister saying two key things. One, that the U.S. is currently focused on the Indo-Pacific. That's something we've heard before. But also saying that if Spain can fulfill their targets under 3.5%, we can try too. And Ben, this feels like a dangerous precedent that Spain is setting, to your point around the deficits, around the budget constraints there as well. My question to you is, if we do start to see more of these countries fall in line below that 5% target and eventually get there, does that set us up for some sort of correction when it comes to the defense sector? Are we looking at a drop in the very stocks that have driven this rally?
Yeah, look, the reality is it's an absolute risk, right? I mean, it is a risk. You know, we had this 2% target since 2014, and there were only 4 countries that were meeting that objective, right? And that's why I mentioned at the beginning of my remarks that funding, which governments are really going to get to that 3.5%, I think is going to be a big debate. Now, if you asked me 4 or 5 weeks ago, do I think Spain is going to spend the 3.5%? I would have said no, right? And I don't think Italy gets there. I don't think Portugal gets there, and there's going to be a debate around France, right? In the UK, obviously, we have committed to the 3.5%, but that's in 2035. We've really pushed the timeline around that. And so I think which governments are going to get there, Eastern European governments are clearly focused on getting there, and a lot of them are already there. The German government are clearly focused. We saw that in the budget that we announced. But yeah, geographic exposure of some of these defense companies is going to be a big focus in the next couple of quarters and years, right? And I can see that, you know, if you have significant exposure to one government that is decided they're not going to get to the 3.5% versus other governments, that's going to be a key theme in the market. So there is risk around that, yes.
Ben, in the Draghi report, when the concept of defense spending was, I would say, reintroduced and really taken hold of by a lot of European leaders, there was a line in there that said 70 to 80% of European defense spending is ultimately leaked back to the United States. Obviously, this is something that European leaders are trying to address, but that's still the level we're operating here at? That if these European governments do end up spending, 70 to 80% is leaked back to the States?
No, so we don't think it's really that high. I think those numbers were skewed by the F-35 orders that came in the wake of the Ukraine invasion. As an example, France procures basically 99% of everything from France, right? You know, we have a lot of these capabilities in Europe. But I think, look, there are basically 3 capabilities, right? Which is basically missile defense across the Patriot system, the HIMARS rocket artillery system, and then F-35. Those are capabilities that we don't really have like real competitors of right now in Europe. And so we are still going to be reliant on the US and that US relationship for some of this high-tech equipment. We don't have a stealth fighter jet. The F-35 has shown over the last 3 months, 4 months, significant capabilities that we just don't have in Europe. It's going to be a lot of reliance on the US for the next 3 to 5 years. At the same time, there is still a very, very strong Buy Europe mandate. There is a very strong build the defense industrial base mandate. And so that's why I think you are seeing these US companies starting to investigate these joint ventures, Rheinmetall I mentioned with Lockheed and Anduril, as a way of maintaining access to the European market on a 10-year view. So there's still going to be some reliance, but I don't think it's anywhere near where those numbers are.
Benjamin Heelan, head of European Industrials Research over at Bank of America, joining us this morning. We thank you so much. It's a crucial time, Guy, when we're talking about the defense sector, and I think this is a really important one that we're talking about here because, of course, we are having a question around the spending story, but we're also awaiting comments from Donald Trump. He is at the NATO summit. He's due to arrive at the actual venue itself, so we are awaiting that specifically. This is going to be crucial in terms of whether or not he is actually able to make sense of this 5% and actually able to get some of these questions on board, especially in the face of Spain. Now it's kind of throwing some cold water on the idea that they're going to get to 3.5%. They're pushing for 2.1. We just heard the Belgian Prime Minister there, Guy, talking about as well the idea that they might follow suit. If Spain can do it, we can do it too. How long before that catches Donald Trump's ire?
Absolutely. We're about to find out. He is arriving, it looks like, at the NATO summit in The Hague. We are awaiting his comments. He will be making opening remarks with the NATO Secretary General. We are anticipating that those will be coming very, very shortly, potentially within the next 8 minutes. But we have just now seen the beast arrive. The car is in front of the building where the NATO summit is taking place, so we can anticipate that those comments will be coming pretty shortly.
Absolutely. And speaking of maybe an early indication of what Donald Trump may or may not say, we are getting headlines from Politico here. Marco Rubio commenting in that interview, just as we're speaking there, that Spain's NATO exemption is, quote, a big problem, and Spain that it is not sustainable. Again, those comments coming out of Politico. In the meantime, let's get some market analysis about how we should be thinking about this space. Markets Live executive editor Mark Cudmore joins us this morning. Mark, walk us through what the defensive trade in this market is. Is defense still a defensive trade. Your take?
I'm not so sure it is a defensive trade, given that the exceptional surge we've seen in some of the valuations of those stocks. This has been a long-running narrative, and I actually think it's quite a bullish and aggressive story. You know, we're talking about the kind of quibbling about what Spain will get to in terms of percentage of GDP spend, but the overall story here is that Europe is moving to a much more aggressive fiscal spend on arms over the next decade, or potentially longer, than it was only a year ago. And I think this is a really, really big structural tailwind for Europe in terms of that fiscal expenditure. Now, the slight qualifier to that is it's going to take a long time to come through, and there's a risk that some of those sectors might get a little bit too ahead of that investment because it's very much a structural tailwind rather than a short-term tailwind. And there are certain stocks that have traded the story as if it's about to all arrive in the space of the next couple of months.
More broadly, can Europe continue to outperform the United States? I find it fascinating that we've stopped doing it over the last 2 or 3 weeks. European equities have been going sideways. Europe is struggling to keep the momentum going. Mark, I've seen so many European rallies fizzle out. How close are we to that happening once again?
It's really important to answer this question whether you consider the currency side. So if you think of a dollar investor buying European stocks unhedged on their currency exposure, then they've made, over the past 5 months, I don't have my monitor in front of me, roughly 12% on the currency exposure alone, ignoring how the relative stock markets have done. And I think that'll continue to be a tailwind going forward. And part of the reason why I very strongly believe that US stocks will continue to underperform, as they have for the past 5 months, is because of that currency side, the longer-term dollar depreciation. So over the last 5 months, we've seen, US stocks are back at a record. They're very close. So they've done basically flat. But the rest of the world has added about $8 trillion in value. And that $8 trillion of underperformance for US stocks has basically largely come from the currency side as playing a part. So if you assume as a US investor you're going to buy European stocks unhedged, I think they'll continue to outperform US stocks, yes. But if you take it into pure performance in local currency terms, no, I'm not sure European stocks can sustainably outperform US stocks.
Mark, in our last 40 seconds or so, what did you make of Jay Powell's comments yesterday around the tariff impact?
Look, I think it's one of these classic situations where he's being forced to say lots of things because the questions that people are dying to interpret sentiment. But essentially, he didn't really stray from anything that's been communicated before. I think there's a market that is keen to see that the Fed might be going to cut. What is perhaps most interesting is we're starting to see a very divided Fed. It was the comments from other officials at the same time, kind of contradicting Powell, that shows this is a Fed. Some of the Fed members are really feeling the pressure from Trump, inclined to cut sooner, but it's absolutely a divided Fed, which makes July very exciting.
Yeah. Another factor to throw into these markets. Great stuff, Mark. Thank you very much indeed for holding with us this morning. Mark Cardmore. Remember, you can get all of Mark and the rest of the team's commentary around what is happening in these markets, live blogs, MLIV Go, on your Bloomberg terminal. Coming up, we're going to take you back to the NATO summit. I think President Trump is in the building. We will come back. We anticipate that he is going to make comments with the NATO Secretary General. We will bring those to you live in a few minutes' time. This is Bloomberg.
We're micro investors. So as micro investors looking to invest capital, whether it's in private equity or in direct lending. What we're looking for are opportunities to deploy capital at attractive risk return. When we wake up in the morning, we don't seek to avoid risk. We seek to price it correctly. And so in an environment like this, for sure, if you're looking at a portfolio company opportunity, when you think of the value creation plan, you're factoring in now the uncertainty, which undoubtedly will impact the extent to which you're willing to pay for that asset. Now, in our existing companies, in our existing portfolio, the vast majority are services companies. And services companies don't have basically the input issues. But I will say that when we look and we roll up all this data for all of our portfolio companies, and it's quite rich, it's just down now below 1 million employees globally around the world. We're 2,300 at Carlyle itself. But in our portfolio companies, we roll up this data every month. For example, the inventory component of PMI was up about 4 points. I know that's not really news that anybody probably would have focused on, but we could see that happening months ago. So immediately when it looked like the new administration was going to come in and there was the possibility of tariffs, you could see purchasing managers immediately mobilizing to start bringing goods in faster because of the uncertainty factor.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Ruhordern in Buenos Aires, Argentina, and this is Bloomberg.
Welcome back. You're watching the opening trade. We are 49 minutes into the equity market session, which is doing absolutely nothing at the moment. As you can see, a little bit of underperformance coming through in the London market, if my eyes are not deceiving me. And in terms of elsewhere, you are looking at the market that is basically drifting sideways. It's a similar story for some of the other asset classes as well. We've got oil picking up a little bit, but basically we are, after a strong start to the week, just holding ground a little bit now as we await what is the next catalyst. Maybe that comes from the NATO summit. We're about to hear from President Trump potentially.
It's fascinating because already you're getting some pretty sharp commentary when it comes to the idea of just how much spending is enough spending. And Spain has really thrown a wrench into those conversations. Already hearing Marco Rubio make some of those comments to the likes of Politico. Bloomberg's European correspondent, Oliver Crook, is, of course, live on the ground covering this for us. He's at The Hague, watching all of these arrivals, monitoring the conversation. Ollie, let me come right to you here. How much momentum does this conversation have that maybe we don't need to hit 5% to get to where we want to go?
I mean, I think that it is very difficult to imagine a world in which, NATO allies in the United States are going to accept, a sort of full stepping out and backing down from that commitment of 5%. There's been a lot of attempts to sort of fudge the numbers a little bit in terms of trying to find sort of workarounds. And again, let's just remind people how NATO works and how this sort of spending is delegated. It comes down from the top, and they don't talk about the amount of money that a nation needs to spend, but amount of the capabilities that they need to provide. And that is what Spain is trying to say. Spain is trying to say, listen, we can achieve our obligations under NATO, the capabilities, while not reaching the 5%, or we should say the 3.5% on hard military spending, but we can do it at 2.1%. There is, of course, a lot of skepticism about that, and as you mentioned there, we heard from Marco Rubio in Politico a little bit earlier today saying that he doesn't think that agreement with Spain has reached, that Spain has reached is sustainable, and frankly, it puts the rest of NATO in a very tough spot, Spain in a lot of tough spot with their other allies of NATO. So this is certainly going to be a continued active conversation. Obviously, Donald Trump, we believe, is now in the building. We just saw what looked like the beast who arrived here at the NATO summit, and we'll watch very closely if there's any transaction between Donald Trump and Pedro Sanchez, who seems to be the sort of final holdout. But overall, we have to say that this is a NATO summit that has been choreographed in large part to flatter Donald Trump, both in frill and in substance. The frills, he's had dinner with the king and a number of other world leaders. He was the only leader that was invited to stay at the president, or I should say, as the royal palace, where the king also sleeps. This is a very rare honor that they bestow. And of course, the substance is that 5% NATO spending goal. And that is something that, frankly, seemed completely inconceivable even 6 months ago, and now is becoming the new reality for NATO.
Is it going to be? What do we think is going to come out of this summit? Ollie, what is the end game that people are talking about? All I've heard is that we're going to see a very slim communique that comes out that everybody can broadly get in line. If that's the only achievement, is it enough?
Well, really, it's about preserving the status quo and what the entire world took for granted for NATO and the Article 5 coverage that that applied basically for the last 50 years. If NATO can walk away with that, basically not changing of that, that would be, I think, a large success. We already had the President of the United States, Donald Trump, on the flight over here on Air Force One, starting to talk about Article 5. You know, there are different interpretations of Article 5. Does the United States necessarily step up? He says that he'll give his definition of Article 5. That'll be something that everyone will be closely watching. That is on the sort of downside. But again, Guy, really what is trying to be achieved here is the preservation, at least on NATO. I mean, forget the G7, but at least on, say, NATO, the sort of previous world order, if they can do that, if they can satisfy Donald Trump, that will be success at this meeting. And I believe that if they get to that 5% level, they potentially will satisfy the United States and President Trump. That being said, when is Trump ever satisfied? He may have some other demands. We'll have to see what he says at about 3 p.m. this afternoon.
In terms of, how much do we know about the choreography? We now understand that he's going to be seeing Zelensky tomorrow. Ukraine looks like it's being pushed to the right in terms of the timing. In terms of the choreography for the rest of the day, what am I watching?
Yeah, so you're watching for any comments that we're expecting from Donald Trump potentially in the next few minutes. We've got a very close eye onto that. There will be a number of bilateral meetings, and one that was sort of watching very closely is this meeting between Trump and Zelensky. It was not clear that they were going to meet at the summit. It wasn't clear that Zelensky was even going to attend the summit because, Guy, to what exactly you're alluding to, it's been pushed right down the agenda. There's also the potential friction point, Guy. We will watch this very closely. If there's any interaction between Emmanuel Macron and Donald Trump. Remember, Emmanuel Macron a couple of days ago called the air raid against Iran, dropping of those bunker busters over Iran. He said that it was illegal under international law, so this could be another point of friction. But as you say, Guy, this has all been choreographed by Mark Rutte to basically have a seamless in and out for Donald Trump, a short set of meetings, so that nothing can go really terribly wrong. And really, they're going to try to sort of bury the conversation around Iran and keep this just focused on the NATO alliance and how strong it is going forward.
Ollie Crook, thank you very much indeed. Oliver Crook joining us from the NATO summit. Let's bring in Valerie Teitel just for a quick comment. The markets, we're all watching what is happening. And what are the markets going to be watching today?
Look, I mean, there was already a reaction in the German bond market yesterday to the fact that there was a Reuters story about having them bump up Q4 issuance. So I do think the market is going to react to any headlines around more defense spending. Frankly, it's something that has been weighing on the bond market. You know, fiscal worries aren't just something that's taking place in the Treasury market, but here in Germany, here across Europe as well.
It's a fascinating one. When we talk about that read-through, though, in terms of what you're seeing perhaps in the German bond market relative to maybe what these are getting from the States, what's leading here, Europe or the U.S.?
Well, in terms of the big fiscal surprise, it did come from Germany earlier this year, but now it's all the focus on how quickly they can roll out this spending and whether it will impact GDP sooner rather than later. But that's still a big question for the market. I don't think we're going to get answers like that from today's NATO summit, but that's definitely something weighing on the bond market's mind.
Absolutely. Bloomberg's Valerie Teitel walking us through maybe what the bond market is thinking as we kind of sit on our hands a little bit, monitor what's happening out of NATO. Of course, you are looking at a live shot at the moment of comments coming from the Greek Prime Minister. We have been seeing a series of them. We know that Donald Trump is in the building, so we're going to keep a very, very close eye on what he has to say and how this idea of a spending target is received. That does it for the opening trade. The Pulse is up next. Ken Moelis, the founder, chairman, and outgoing CEO of investment bank Moelis & Company, is going to be joining Francine Lacqua on the Pulse. Full coverage in the hours ahead from The Hague as well. Stick with us. This is Bloomberg.
from the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
NATO Secretary General Mark Rutte says the U.S. is, quote, totally committed to Article 5. This after America's commitment to the alliance was thrown in question over defense spending targets. Will be live at the NATO summit shortly. Bloomberg learns an early report from U.S. intelligence has found America's bombing likely did not cripple core components of Iran's nuclear program. Plus, the EU plans to impose retaliatory tariffs on U.S. imports, including on Boeing aircraft, even if the U.S. applies a baseline levy on the bloc's goods. Now, good morning, everyone. Look, first thing is first, we look at the markets. We also had the testimony to Congress from Jay Powell yesterday. It continues for a second day today. Now, European stocks, Asian markets, pretty much actually rising, again, driven by hopes for Federal Reserve interest rate cuts, but also some kind of hope of truce in the Middle East. I'm looking at oil rebounding after a 2-day decline. Brent actually trading a little bit higher, above $68 a barrel. Treasuries on the dollar, little change. Now, traders definitely shifting now the focus to the U.S. economy, with some expecting a little bit of a grind higher in markets. Let's see how this plays out in European markets. So quickly, let's get onto that map to give us an indication of whether the Euro Stoxx 600 are up, and overall they're advancing some 0.4%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
So good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, we're joined by Ken Moelis, one of the most recognizable deal makers on Wall Street, founder, chairman, and chief executive of global investment bank Moelis & Company. Ken, it's so good to have you here today. I mean, there's a lot to talk about. We're looking at NATO. I know you're also stepping down from Moelis, but overall, I mean, there's just so much out there. Like, how do you cut out the noise from the policy matters that matters to investment?
You know, that's a great question, by the way, and it's good to be here when nothing's happening and nothing's to talk about.
At all.
But what's interesting is if you keep your eyes on the long term, I'm very optimistic. I think the problem with the world today is, you know, pessimists get the headlines. I mean, everybody trying to point out everything negative that can happen. But if you really look at this over a number of years instead of a number of hours or a number of days, I think the world very optimistic. I mean, even what's happening in the Middle East is, you can look at it negative, or you can look at it and say, this is an opportunity for one of the most optimistic changes in the region that we've had in a long time.
But there's a lot of turbulence, right? So a lot of chief executives that you service, where you put deals together, will be, if not freaking out, certainly sitting on their cash or not wanting to sell.
That would be a mistake. I think, again, I think the pessimists get the headlines and optimists build businesses. And if you look at it, it's funny, you read these headlines about all the problems, and then you see that the optimists who come up every day and understand that the world is getting better every day. And if you actually look out in the next 6 to 12 months, I actually think you'll see, tax rates are not going up in most of the major economies. Europe is right now talking about opening up spending. I think European growth rates are going to go higher, which will result in European stock markets, I think, reflecting better growth. I'm very bullish on Europe, by the way, and I think some of I call it the provocation of the U.S. election, might have actually caused some things in Europe to accelerate growth and become very optimistic. So I'm very positive about that. Lower regulations, lower energy prices, European growth. If you take your eyes off of the day-to-day warnings, and you get out of your Twitter account, you'll start to build, you'll see that this is going to be a good year, I think.
What about fragmentation? I mean, geopolitics, the rise of inflation. I mean, I feel like I'm the pessimist, and I'm never the pessimist, but there needs to be some kind of balance, right, in how you see the world.
I think the inflation's coming down. Look, the U.S. 10-year is coming down. Inflation in the European region is under control. I know there's been, what do tariffs do? I look at tariffs as, really, I think tariffs are a tax. When you actually break it down, tariffs are a different way of taxing items. Taxes are deflationary, are not pro-growth. It's a choice made politically on how to tax people. We can debate that, but I actually don't think it's inflationary.
What's your outlook for deal making?
I think deal making is going to accelerate dramatically. You look at, again, the flood of capital into private credit, and private credit is, look, there's a whole line about a real estate developer, if they can obtain money, they'll build. I think the same joke could be made of private equity going forward. If they can borrow money, they're going to buy companies. And I think private credit, the acceleration and the money coming in, is just going to provide the opportunity and the pressure almost to go back out there. There is a lot of growth. I think the whole AI power, there's a tremendous amount of growth out there, and I think we're going to be back in a pretty significant deal-making environment.
I mean, again, when you look at actually the rise of AI, what does it mean for private equity, private credit investment in the software space?
Usually these things have, again, the headlines are all, oh, woe is me, and then the opportunity is businessmen use these tools to create better products, better margins, better work environment. I'm hoping, I think my new CEO coming in, Navid, said, we hope that AI will improve the lives of our associates and analysts as some of the real drudgery of the work becomes obtainable through AI. Again, when I joined 45 years ago now, I used to go down to the library and pull annual reports out and then write down in pencil what they said. So, again, we've come a long way to improving life.
Ken, when you look at some of the concerns, I guess, surrounding, for example, the Middle East, I know you've done a lot of businesses in the Middle East, you've done a lot of investments. I mean, this, you're quite optimistic longer term, but does this turbulence impact, oil prices? Does it impact actually some of the sentiment in the region?
Yes, and when you say long term, we're talking 6 to 12 months. I mean,
long term, very long term, given these financial markets.
That's become long term. Yes, I think oil prices have declined dramatically. But by the way, that's a basic input for every product in the world is energy prices. And again, all I hear about is what if the peace doesn't hold? I haven't heard one person said, what if the 90 million population of highly educated, motivated Iranians come into the market? What if the 200 million barrels of reserves, which has probably had no technology applied to drilling? I mean, I can't imagine what the tech has gone into Iranian drilling. What if those reserves come on the market? What does that mean to energy? So nobody's talking about the positives. And what's unusual about the world is that those things are usually what everybody gets up in the morning and works toward.
But what does that mean? I mean, again, where do you see the best values? If you're looking at trade and tariffs, and this is something that we haven't really touched on, are we going to redraw the way that deals are made? So is it going to be from friendly country to friendly country? And what does it mean for a shop like Mullis?
Well, I do think, by the way, and I know there's been a lot of speculation about Europe over the last 10 or 15 years. This should be a 5-year fantastic period for Europe. The UK has been especially very undervalued in the market. The undervaluation, though, has come from the lack of growth. The public markets want growth, and there just hasn't been enough growth. I think with what we're watching this morning, people walking up the mic and trying to say how much their governments are going to spend, this is a very different Europe and a very different program. So, yeah, I do think you could see cross-border activity accelerate. I think you could see growth in Europe accelerate. And the U.S. tends to find a way to grow. And I think, given that the West Coast is still the center of AI and the center of some of that, I think the U.S. continues to have pretty good growth.
So, Ken, on your view of the UK, like how's business here in the City of London? Is there anything that the UK government could do to attract more bankers?
Well, I don't know if they want to attract more bankers. If they attract more growth and more business, they will attract more bankers. That might not be their goal, by the way. But yes, I do think it's funny. I mentioned the fact yesterday at a meeting that optimism builds businesses, and you could tell the UK, I would say, has been very down. The business community has been down for the last 2 years. It's interesting when I come over here a lot, and the change when you leave New York and you land here in what's going to happen. I think that's changing. I think the government is going to help. I think just the growth in expenditures from European governments is going to help. Look, the UK has a great intellectual base, has a great business base, has great capital markets. And I'm very bullish. If you want more bankers, we're hiring them. So we're putting people in. We just moved committed to a new space, expanded our space dramatically, and we're hiring.
And is this to service UK clients?
Yes,
or is
UK.
it just for also international investment that's coming from abroad to the UK?
No, this is UK. I mean, we probably have 140 people here. I wouldn't be surprised if that's up 50% in the next few years. And again, we service a lot of Europe from here, but we're expanding in Europe as well. We think it's a great time to do it.
Ken, your take on the Middle East? I mean, I know a big chunk of your business, of course, in the Middle East. You're expecting it to settle. Again, what time frame?
Very rapidly. I think you and I spoke about this. One of the things I noticed, and the world should notice, is that Saudi Arabia stayed, even in Ukraine, Russia, and Israel, Iran, has stayed, I think, the rock of stability. And I think that was a great message that the Middle East wants to be about business. They really want to grow their people, grow their worth, the net worth of the bring people into the middle class. What just happened has the possibility of just being a phenomenal stabilizing event. And if we can get everybody into thinking about capitalism and growing their people into middle class and the way what Saudi Arabia has been doing with their population, this would be a remarkable event. Now, I'm not saying it's going to happen, but I think there's a better chance than there's been in the last 40 years in my adult lifetime.
Do you worry about, U.S. exceptionalism being put in question? So not even coming to an end, but just, question marks from allies around the world and big investors?
No, in U.S. exceptionalism, I don't know.
It's a big word. To mean everything and anything.
Look, the U.S., I think the reason the U.S. does so well is they get up is rewarded an optimistic view of the future. Failure is not penalized with a death sentence in your business career. Yeah. It's amazing on the West Coast of the United States, you could fail 5 times and everybody will still throw money at you. Very few places in the world, people will look at that as experience, not not total failure if you're a quality person. So, look, I think the U.S. has that. I do think there are elements of, it was interesting today, the New York City mayor election, in which a very significant outlier event seems to have happened where you say the battle is still on, but between the political future of where the country wants to go. But I'm pretty optimistic that that's a New York City problem. I think the country wants to go to growth.
Okay, so it's not, I mean, this was basically the Democratic primary, right, in New York, and it's gone definitely more socialist than middle stream, let's put it that way.
Yes.
You don't think this is the way the Democratic Party at large is going?
Well, that's a great question. The Democratic Party will have to answer that. I believe the Democratic Party has to come up with a pro-growth agenda. They have gotten themselves into the agenda is how anti-Trump you can be. That's not an agenda that people want. Well, and what happened in New York is the candidate that threw in that it's just a race to be how anti-Trump you can be. You're going to throw in some pretty devastatingly negative policies out there, and you're going to win, because if that's the race. So I think the party's waiting to be defined with a pro-growth, I think pro-private economy message, but they have to find that, and I think it's a dangerous time for the Democratic Party.
Ken, when you travel around the world, how often do you get asked about Trump policies to help them make sense of actually where the U.S. goes in 1 year?
All the time, every meeting, every day.
And you explain? How do you explain it?
Well, look, as I had the fortune or misfortune, you could say, I banked Trump in a lot of the in the early '90s. I got to know him and did some things. Look, he's got a method of negotiating, and I think you could see it. But it's start out with a very difficult maximalist position. I think his secret ingredient is to take that position further than most businessmen would be willing to take it on the risk parameter. By the way, it's dangerous. I'm not saying everybody shouldn't do that. It's tended. It works for him most times. Sometimes it doesn't. But that's the way he's done it. And I think what's appealing about him to the American people right now is just the radical authenticity. They feel like they're seeing the real person out there. I mean, yesterday when he was getting on the helicopter and he started cursing at the Iran and Israel at the same time, I don't know if he plans that, but ultimately I think there were a bunch of people on both sides happy that he was yelling at the other side.
Yeah, so it encompasses everyone. What are you most looking forward to, actually, as you transition from being CEO to executive chairman of the company?
I'm glad you said it. Said the leaving CEO. Now I'm not going anywhere. I love this business. The trouble with if you put your name on the door and you create a company, it's a long transition. And it's much better to start earlier than later. And I think we surprised people. I started a year or two before people thought. I have a lot of energy. That's the best part of it. And look, I'm here with clients in London. I'm going on my way to Paris. I think you get to spend more time with clients. And I think I've stuck my friend and co-founder Navid with some of the inside dirty laundry that you have to take care of every day. So I wish him good luck with that. And I look forward to being out with clients more.
Ken, thank you so much. I hope you come back really soon. Ken Moelis, they're founder, chairman, chief executive of global investment bank Moelis & Company. Now, we're just getting some live pictures from the NATO summit in The Hague as world leaders arrive for talks. We're expecting, of course, to hear from President Trump and NATO Secretary General Mark Rutte shortly. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
We will be a responsible ally, as we've always been. The issue here is that the coverage of those capabilities will come at a cost. And what we're saying is that this particular cost for Spain, as we've estimated within our Ministry of Defense, will amount to a specific number, which is, in terms of percentage of GDP, 2.1%.
Well, that was the Spanish Economy Minister, Carlos Cuerpo, speaking exclusively to Bloomberg about Spain's resistance to a goal of spending 5% of GDP on defense. Now, earlier, we also asked the EU's Foreign Affairs and Security Policy Chief, Kaja Kallas, about the summit's goals and the situation in Iran.
The international law says, gives you good two reasons where you can use force. One is self-defense, and the other one is by the mandate of the Security Council. So those who use force have to also justify that it complies with the international rules.
And are you satisfied that it does, or you're not sort of in a position to make that appraisal quite yet?
Well, that is not up to us to say, really. Of course, we have said that the Atomic Energy Association needs to have assessment and also get an access to the nuclear sites and everything that is concerning Iran. Europe has always been very concerned that Iran does not acquire a nuclear weapon. We have been very clear on that.
And onto the business of NATO, are you confident that everybody will sign on without caveat, without exception to the 5% NATO goal? Are we going to get that, or do you think that Spain is going to pose a problem there?
Well, we have heard, of course, Spain raising the issues that they are raising. I think it's important that we get the decision of moving to 5%. It's a very ambitious target, also requires a lot of difficult decisions from member states. That is very clear. And, the trouble with the defense spending is that you need to do it while you have peace. And actually, people don't need or don't see the necessity of the defense spending. But when you actually need it, it's too late because of everything. And right now, the understanding for everybody is that we need to invest more in order to deter aggressors from looking our way.
And have you spoken to Pedro Sánchez? Are you afraid that this could potentially endanger the whole sort of project here?
Of course, NATO Secretary General is working on that. I tried to keep the European countries together, and we have also put forward, different means how member states can do this. Opening financial possibilities for member states to actually spend more, and also how we can do more jointly, joint procurement, joint projects, because the defense is regional, not national anymore.
Well, that was the EU's Foreign Affairs and Security Chief, Kaja Kallas, speaking with Oliver Crook at the NATO summit in The Hague. And Oliver joins us now. So, Ollie, what are we actually expecting this morning as leaders arrive?
Yeah, Francine, we're watching the leaders arrive right now. I believe we have Giorgia Meloni now arriving, as we've just seen, a number of other leaders. Keir Starmer, we believe Donald Trump is in the building. We saw the beast go by. We didn't see him walk in. I'm expecting to hear from, Mark Rutte and all of these leaders that are here, assembled really in what feels like the court of Trump, right? He has now arrived in the Netherlands. This has been an event that has been highly choreographed to please Trump, and all of its sort of substance and its frills has been directed at Trump. On the frill side of things, you saw this sort of text messages that were sent by Mark Rutte to Donald Trump Trump overnight, speaking in highly sort of Trumpian language with all caps, praising the president's leadership and saying that he could have a big win here in Europe because they're expecting the substance of the summit to include that 5% GDP defense spend from all of these sort of allies within NATO. Now, the fly in the ointment has been there's been some disagreement about whether or not Spain can actually achieve its military goals and its obligations to NATO without reaching that 5%, or I should say without reaching the 3.5% of that 5% that is supposed to go to hard military hardware. That has been a very sort of open debate. We heard from Marco Rubio out in Politico basically saying that that's not good enough, Spain, and that you're really letting down your NATO allies. So we'll see what Trump has to say about that. We'll see if there's any interaction between Trump and the likes of Pedro Sanchez, who just walked into the building. And of course, there's the other sort of issue, the issue of Iran, that hangs over this. I think that for the most part, the Secretary General, Mark Rutte, would not like to bring that up. But, you know, there was a little bit of conflict between his views, Trump's views, and Emmanuel Macron's.
Ollie, we're just looking at at pictures. We were expecting a press conference of the U.S. President Donald Trump and the NATO Secretary General Mark Rutte delivering remarks. The camera work on this is a little bit hazy, but I think they're just, you know, trying to get to the two leaders who are talking. Let's listen to some of these remarks.
This would not have happened in 3 stages. When Europe became president in 2016, 2017, you forced Europeans and Canadians to pay more. At this moment, the result of that phase is 1 trillion extra aggregate defense spending by the Canadians and the Europeans. Then came phase 2, when you became president in January last year. Phase 2 is that all the countries not yet on 2% have now committed to the 2%. This is the old goal from Wales in 2014. 7 were not on 2%. Some were saying somewhere in the 2030s. Now this year, all of them, including Canada, including Italy, including Belgium, they have all now committed to the 2%. And now comes the big splash. Today, we will decide to go to 5%. We have to keep ourselves safe from our adversaries, but also because it is fair to equalize with the United States. With this 5%, the Europeans and the Canadians will equalize their defense spending with the United States. So this is not about American taxpayers paying more. This is about Europeans, Canadians paying more. And again, this would not have happened. I'm really saying this here, and some people might criticize me, but then when I speak with them, they all say, yes, you're right. This would not have happened if you would not have been elected in 2016 and re-elected last year and back into office in January. So I want to thank you.
Well, thank you very much. It's a great victory for everybody, I think. And we will be equalized very shortly, and that's the way it has to be. It's going to be a lot of money, too, a lot of defense.
Trillions extra.
Yeah, and we have a great relationship, and we've had a great relationship from the beginning. Highly respected man, and yeah, we appreciate you being here, too, everybody. We really do. We have a tremendous group of people on my left and a tremendous group of people on my right. They might be even better than my people. I don't know. Let's have a fight. Let's figure it out. Anyway, but we appreciate it, and we've had a tremendous relationship, Mark and I, and we've really worked on this subject for a long time. And when Biden was here, it just died like everything else died. And now it's, you're going to take, I guess, a vote today, right?
Absolutely. Today we will decide unanimously to do this. That's my absolute conviction.
So we can't talk about it until the vote's taken, because sometimes, you know, strange things happen with those. But I think you're going to
I'm not too worried.
I think you're going to do very well. Everyone's very happy about it. Go ahead, yes.
Mr. President, how is the Iran-Israel ceasefire going, in your opinion?
I think very good. I think very good. Israel came back yesterday. I was so proud of them. Because they came back, you know, they went out because they felt it was a violation, and technically they were right, but it just wouldn't have worked out very well. And they brought the planes back. They had gone on to another journey because there was a little bit of a violation, and I said, you got to get them back. And they came back, and it was a great thing, and it's going very well.
Mr. President, what is your response to the foreign minister saying he still wants to enrich nuclear?
Hello, Katie. She's so great, this one. Any question she asks, I'll answer. Well, maybe I better not say that. What was your question?
What is your response to the Iranian foreign minister continuing to say Iran will enrich uranium and pursue nuclear weapons?
Well, I don't know if they've said that, but I'll tell you, the last thing they want to do is enrich anything right now. They want to recover. And we won't let that happen, number one. Militarily, we won't. I think we'll end up having somewhat of a relationship with Iran. I see it. Look, I've had a relationship over the last 4 days. They agreed to the ceasefire. And it was a very equal agreement. They both said, that's enough. They both said it. But no, they won't do that. The last thing they want to do, Katie, is enrich. They're not looking to. They're not. Can you imagine after all that they're going to say, "Oh, let's go and do a bomb." There could be a day in the future, and then somebody else taking our place will be saying, "Don't do it," and maybe they won't do it as well. I don't know, but they're not going to have a bomb, and they're not going to enrich. And we believe all of the stuff is down there. We don't think they had nearly the time, because to get that out is a very difficult thing. It's not like moving a package or taking this carpet up and moving it. It's very difficult. It's very dangerous to do. We believe it's all down there. We had a tremendous victory, a tremendous hit, and because of that, I don't think they would have been down there, because they knew we were coming. When they know we're coming, they're not going to be down in that 30 stories underground. So. No, I think it was just a tremendous victory for everybody, including Iran. Look, they've got a country, and they've got oil, and they're very smart people, and they can come back. Israel got hit very hard, especially the last couple of days. Israel was hit really hard. Those ballistic missiles, boy, they took out a lot of buildings, and they've been great. Bibi Netanyahu should be very proud of himself, and they've really been great. But they're not going to be building bombs for a long time.
Mr. President, what's your reaction to the intelligence reports saying that the Iranian nuclear sites were only partially devastated, not entirely?
Yeah, well, they said it was actually, the report said it could have been they don't know. I mean, they did a report. I could have Pete talk to it because his department did the report. They really don't know. I think Israel's going to be telling us very soon, because Bibi is going to have people involved in that whole situation. We hear it was obliteration. It was a virtual obliteration. When you take a look at the ground above, don't forget, the flame is all underground. But everything above, if you look at the before and the after picture, everything above is burned black. The trees, everything. There's one building, but that's a building that sunk substantially into the granite, so that, the fire goes right over it. I believe it was total obliteration. I believe they didn't have a chance to get anything out because we acted fast. If it would have taken 2 weeks, maybe, but it's very hard to remove that kind of material. Very hard and very dangerous for them to remove it. Plus, they knew we were coming. And if they know we're coming, they're not going to be down there. There aren't too many people that are going to be down there. Pete, do you have something to say about that?
Well, Mr. President, when you talk to the people who built the bombs, understand what those bombs can do, and deliver those bombs, they landed precisely where they were supposed to, so it was a flawless mission.
Flawless.
Right down where we knew they needed to enter. And given the 30,000 pounds of explosives and capability of those munitions, it was devastation underneath Fordo. And the amount of munitions, 6 per location, any assessment that tells you it was something otherwise is speculating with other motives. And we know that because when you actually look at the report, by the way, it was a top secret report, it was preliminary. It was low confidence. All right, so this isn't, you make assessments based on what you know.
They said it could be very devastating, very serious.
Moderate to severe, and we believe far more likely severe and obliterated. So this is a political motive here.
Is there a leak investigation?
Of course, we're doing a leak investigation with the FBI right now because this information is for internal purposes, battle damage assessments, and CNN and others are trying to spin it to make the president look bad when this was an overwhelming success.
We had a tremendous success, and this is the New York Times. I call it the failing New York Times. It's going to hell. And CNN, which, as you know, very few people are watching. And you would think they'd do the opposite. You would think they'd want to say, this was an unbelievable success. And the thing that hurts me is it's really demeaning to the pilots and the people that put that whole thing together, the generals. That was a perfect operation. And when you look at the holes, and this was done from 52,000 feet, there was no moon, there was no light, and those 3 holes are right together. And also, and nobody talks about this, we shot 30 Tomahawks from submarines, in particular one submarine, but that was 400 miles away. And every one of those Tomahawks hit within a foot of where they were supposed to hit, took out a lot of buildings that Israel wasn't able to get. We took them out with Tomahawks. We don't even talk about that. This was a devastating attack, and it knocked them for a loop. And, you know, if it didn't, they wouldn't have settled. If they had won, if we didn't take it out, they wouldn't have settled. Somebody mentioned that to me last night. If that thing wasn't devastated, they would have never settled. Marco, do you have something to say?
No, first of all this stuff about the intelligence, this is what a leaker is telling you the intelligence says. That's the game these people play. They read it, and then they go out and characterize it the way they want it characterized, and they're leakers. This is the game they play. So that's number one. Number two, here's a fact. The conversion facility, which you can't do a nuclear weapon without a conversion facility. We can't even find where it is, where it used to be on the map. You can't even find where it used to be because the whole thing is just blackened out. It's gone.
It's wiped out.
It's wiped out. Then we dropped 12 of the strongest bombs on the planet right down the hole in 2 places. Everything underneath that mountain is in bad shape. And I refer you to the statement of the IAEA, Mr. Grossi. You know what he said? He said there was Iran, the way it looked the day before the attack, and what their nuclear program looks like now. 2 very different things. They are way behind where they were just 7 days ago. Now, anything in the world can be rebuilt, but now we know where it is. And if they try to rebuild it, we'll have options there as well. But all this leaker stuff, these leakers are professional stabbers. That's what they are. They go out and they read this stuff, and then they tell you what it says against the law, but they characterize it for you in a way that's absolutely false. There's no way Iran comes to the table if somehow nothing had happened. This was complete and total obliteration. They're in bad shape. They are way behind today compared to where they were just 7 days ago because of what the president did.
Marco, can I just alert you to one other aspect? So the great thing is you took out the nuclear capability of Iran. This was crucial. You did it in a way which is extremely impressive. But the signal sends to the rest of the world that this president, when it comes to it, yes, he is a man of peace, but if necessary, he is willing to use strength, the enormous strength of the American military. So I think that signal to the rest of the world, this is far beyond Iran, is extremely important. So let me also point us to that aspect of what happens.
They went down, Iran went down to the site afterwards. They said it's so devastated, and they settled when they saw what we did to it. And frankly, if we didn't do that, they would have had a lot of ammunition to keep going. They wouldn't have settled. Somebody brought that up, and 2 Iranians went down to see it, and they called back, and they said, this place is gone. So it's just fake news by CNN, which has got no ratings. It's a failed network. Anybody here from CNN, by the way? Because you're a really disgraceful network. MSNBC, I think, is actually worse. But they're all pretty bad. But yours is good, Katie, I'll tell you.
Mr. President,
You know what Marco reminded me that he did such a nice job there? It was 9 years ago I had to debate this guy. He was not easy. I think he even got better. But when you were into your little thing, I said, this is when I had to debate this guy. You think it's easy to debate him? It's not easy.
How long do you think that the Iranian nuclear program has been put back by these strikes? Years or totally obliterated?
I think basically decades, because I don't think they'll ever do it again. I just don't think they're going to do it. I think they're going to take their oil, they're going to have some missiles, and they'll have some defense. I think they've had it. I mean, they just went through hell. I think they've had it. The last thing they want to do is enrich. They've been trying to do it. By the way, it's hard to enrich. And, you know, when you look at a site like that, very, very hard to build. Very, very hard, very expensive. They spent trillions of dollars trying to do this thing, and they didn't come up with it. And we're actually getting along with them very well right now. But had we not succeeded with that hit ended the war. That hit ended the war. I don't want to use an example of Hiroshima. I don't want to use an example of Nagasaki. But that was essentially the same thing. That ended that war. This ended that with the war. If we didn't take that out, they'd be fighting right now.
Mr. President?
Yeah.
If the Iranians do rebuild, would the United States...
If they rebuild?
Would the United States strike again? And I have also
Sure.
a question about Russia.
But I'm not going to have to worry about that. It's gone for years. It's very tough to rebuild because the whole thing has collapsed. In other words, inside, it's all collapsed. Nobody can get in to see it because it's collapsed. You can't go in to see a room that has, 10 million tons of rock in it. And the tunnels are totally collapsed.
But if they rebuild?
Well, they've already looked at the tunnels. This was an unbelievable hit by genius pilots and genius people in the military, and they're not being given credit for it because we have scum that's in this group, and not all of you are. You have some great reporters, but you have scum. CNN is scum. MSDNC is scum. The New York Times is scum. They're bad people. They're sick. And what they've done is they're trying to make this unbelievable victory into something less. Now, even they admit that it was hit very hard, okay? but it wasn't hit on. It was hit brutally, and it knocked it out. The original word that I use, I guess it got us in trouble because it's a strong word. It was obliteration, and you'll see that, and it's going to come out. Israel is doing a report on it now, I understand, and I was told that they said it was total obliteration. You know, they have guys that go in there after the hit, and they say it was total obliteration. And, you know, I don't want it for me. I want it for the pilots. I want it for the military. They did such a good job. If you were in the Situation Room with me, with the generals and all of the people that did such a good job, and then they get demeaned by these idiots at CNN who can't get ratings, the place is dying. Nobody wants to even waste their time going on their shows. So they form with the New York Times, who's dying also. Without Trump, you wouldn't have a New York Times.
And then just changing gears to your meeting with Zelensky later today, can you give us any preview of what the two of you might be discussing?
No, well, we'll discuss the obvious. We'll discuss his difficulty. He's got a little difficulty. Zelensky, he's a nice guy. I mean, I'm going to meet him today. I don't know. I assume we're going to be discussing Ukraine.
Yes.
I mean, it seems like the most likely subject.
Any restart talks there or anything that you might do?
Well, we're going to see. I mean, I've spoken to Putin a lot, and he actually was very nice. He volunteered help on, as you know, on Iran. I said, no, I don't need help on Iran. I need help on Russia. Okay? I said, do me a favor. Help us on Russia, not on Iran. But he was very nice. We're going to talk about that. We're going to talk. I think progress is being made. I think great progress is being made on Gaza. I think because of this attack that we made, I think we're going to have some very good news. I was talking to Steve Witkoff, who, by the way, is terrific, and who knows more about this subject than anybody, the subject of what we were just talking about. He was on last night with Jesse and with Laura and with Sean. And, boy, Susie, he has a great take on it. He just explains it so easily. He's really very knowledgeable. But he did tell me that Gaza is very close.
One follow-up on Iran. Both you and Secretary Rubio and Hegseth mentioned the lead. But can you clarify, is the intelligence correct or is the intelligence wrong?
Well, the intelligence was very inconclusive. The intelligence says we don't know. It could have been very severe. That's what the intelligence says. So I guess that's correct. But I think we can take that we don't know. It was very severe. It was obliteration. And you'd think that a media outlet would say, isn't that a great thing? I mean, more importantly for the pilots, for the military, you take their guts out. You take their absolute guts out. They had a tremendous attack. It was a complete obliteration. The other team, the other group, Iran, said, let's stop this. And you know what? Israel said it too. Very smart. They fought like hell, and then they said, let's stop. And they're going to build themselves. And I really see it as sticking. I mean, we may do papers on it, Marco. Maybe we're going to do papers. I don't even know if you need them. They're not going to be fighting each other. They've had it. They've had a big fight, like two kids in a schoolyard. You know, they fight like hell. You can't stop them. Let them fight for about 2-3 minutes. Then it's easy to stop them.
And then Daddy has to sometimes use strong language to
You have to use strong language. Every once in a while, you have to use a certain word.
I think we have to join the others.
Yes, we're going to join some other group. Yes, thank you. Katie, one
last question. Do you believe that
she's so good. That's the only reason
Thank you, Mr. President.
She used to be very difficult. Go ahead.
Do you believe that this strike on the Iranian nuclear program will lead to the release of the hostages in Gaza?
I think that it helped a little bit. It showed a lot of power. Yeah, I think it helped. But we're going to get separately, even before this, we were very close to making a deal on Gaza. I think this helped, yes. Okay? Thank you, Kevin. Thank you, everybody. Thank you.
Well, that was, of course, the Secretary General of NATO, Mark Rutte, with the U.S. President Donald Trump speaking in The Hague, and then they have a busy day meeting with a lot of world leaders. The key takeaway is probably that, you know, the NATO leaders are trying to play down some of the concern over Trump's defense commitment. And you have seen through multiple talks with multiple leaders of Europe really trying to talk down the fact that there was concern in certain factions in Europe that maybe the U.S. is not as strong as an ally as in the past. Now let's bring in Oliver Crook again. So, Ali, if you listen to that, I mean, you know, Donald Trump not only addressed NATO, but he addressed Iran, he addressed Gaza. What were your main key takeaways?
Yeah, so notably, obviously, Mark Rutte began the conversation, the Secretary General of NATO, trying to really keep the conversation focused on the defense pledges that have been made or that will be made later today by the NATO allies, hitting that 5% and trying to get sort of some buy-in from Trump, saying that, you know, this is a good thing, we're happy about it. And Mark Rutte said that basically this is a commitment that NATO would never have arrived at without the President of the United States, which I think is a fact that is, I think, pretty widely acknowledged. I think that that is certainly true. Didn't get too far for, you know, and Trump seemed to be in pretty good spirits. He said, you know, I have great people with me. There are great people here in Europe. Maybe they're even better than my people, being quite lighthearted, if a little bit subdued. And then he was asked pretty immediately about the ceasefire in Iran with Israel, asked whether or not that was holding. He said that it was going well. And then it went very swiftly on to the intelligence that we report that we've seen this morning, that potentially the damage that has been wrought on those Iranian nuclear facilities was not quite as bad as the Trump administration has said. And he was asked basically for most of the press conference about that, continuing to defend that they had been obliterated, while at the same time saying that basically the intelligence report that went out was inconclusive. So that was really occupied the bulk of the conversation. He was also asked about whether or not he was, or his meeting with Zelensky, what he expected to get out of that. He didn't really give much information on that other than saying that he's been in contact with Putin, and Putin's been very nice. He also then went to go on to talk about Gaza, and I think this was a little bit of the concern going into this meeting, that the focus wouldn't just stay on NATO, but again, Trump also reserved the right to basically say what he wanted to say about NATO in Article 5 until after the vote, because he said, you know, anything could happen in these votes. And that was sort of the summary of what we just heard from the President of the United States sitting alongside Mark Rutte, the Secretary General of NATO.
Ali, thanks so much. Oliver Crook there with the very latest. Again, Donald Trump going beyond NATO, saying, look, a ceasefire between Iran and Israel is going well. He also believes that the last thing Iran wants to do is enrich anything. And he says, I think we'll have somewhat of a relationship with Iran. Now, the EU plans to impose retaliatory tariffs on U.S. imports, including on Boeing planes, if President Trump puts a baseline levy on the bloc's goods. Now, officials expect the U.S. to keep some duties in place even after trade negotiations are concluded. Now, to talk trade and tariffs, we're joined by Anahita Toms, partner at Baker & McKenzie, and Myron Brilliant, senior counselor at DGA Group. So thank you both for joining us. Myron, I mean, yours followed geostrategic, actually, relationships. What did you make of, first of all, just the body language between Mark Rutte, you know, representative of NATO, and Donald Trump? Can allies still rely on the U.S., and that must have a read across also for tariffs?
Well, thank you for letting us on today. But let me just say three quick things. One is, I think that it's clear that this is a diplomatic and political victory for President Trump. The commitment of the NATO countries to go up to 5% is something he pushed hard on. And I think the fact that we have the Secretary General endorsing President Trump's leadership is a clear indication of a victory. The second is it's in the context of 3 wars. He's coming off a very important week in which he has, I think, for now, has a fragile ceasefire between Iran and Israel. That's good. We'll have to see if peace can come out of this. We'll have to see what happens next. But it's an important victory for him in the domestic context. So he's speaking to a domestic U.S. audience here as much as he's speaking to the NATO audience. What he's trying to convey clearly is that we had a military success. Right. Now we're moving on to a ceasefire, and I led the charge to get that done.
Yeah.
And he's trying to tie that together. He's a little defensive on what was accomplished.
Yeah.
Naturally, we're going to find that out in due course. But what's really important is he's focused also on the road ahead.
And Anahita, if he does actually have this win in terms of defense spending, does it make him cool off trade and tariffs?
I don't think that it will cool off there. I think it's an ongoing process, and this is the uncertainty, of course, that our companies face in the European Union, but also globally, because as I always say, it's not just about tariffs, it's the uncertainty that breaks.
Yeah, but it's unclear to me whether actually Trump wants the money from tariffs and trade, or whether he just wants the deal, whether he wants to be the person to make sure that Europe just gives him what he wants.
Well,
and this would be seen as a win for him.
It could be both, right? He wants to raise revenue to offset the huge tax bill that's coming through the Congress this summer. But he also has been very clear from day one, he feels that there has to be fairness in the trading system, and the United States has been ripped off. Whether you agree with him or not, he's been consistent on his approach about tariffs. The Europeans have to get on board with the fact that they're going to have to make some concessions. We're closer in these trade talks between the two sides.
Yeah.
There's a framework on non-tariff barriers, not just on the tariff issues, but there's still questions from Europe. They want to be treated as on an equal footing with the United States. And you're right. I think uncertainty is what, is causing a hold up on capital investments. Companies want certainty in the process. So whether it's 10% or some other number, stability out of this is important. We'll have to see what July 9th and 14th brings.
Yeah, but then we could also have an extension, right? And this is the difficulty, is that there's of course, trade and tariffs, and then they get negotiated again, and then they get pushed away.
Indeed, it can happen. We get another extension, and is something that, of course, companies would like to see another extension to prepare further. But I think what is really clear is you need more strategic planning, you need scenario planning, because it's not just tariffs, of course, it's economic sanctions, export controls, foreign direct investment restrictions. So you have the whole toolkit that you have to take into consideration when you do supply chain mapping nowadays.
I agree with that, but I would just add a word of caution. I don't think we're going to get a big comprehensive deal done by July.
Between Europe and the U.S.
Not going to be possible. I was in the middle of the TTIP negotiations that failed in 2016. We're not going back to that. But what we are capable of doing is having a better dialogue on the Digital Markets Act. We have a better dialogue on the carbon border adjustment issues. We can deal with shipbuilding. We can get some non-tariff issues discussed between Europe and the United States, which have been aggravating, including in areas like autos that are important to the Europeans.
It's things that the U.S. just doesn't want, full stop.
Well, the problem the Europeans face is what is enough to get past this sort of period of instability, uncertainty. So something has to be framed out by July that gives both sides confidence that we're on the right path. I mean, at the end of the day, the UK-US deal was not a big deal, right? But it moved us past a sense of instability in the U.S.-UK relationship. There's still outstanding questions around steel, but we move forward. And I think what American business wants, and probably European business, is a sense that the two governments are committed to working together, that the outline of the deal is done, we bring the tariff threats down, and we make some progress on non-tariff measures. That would be a win.
Yeah, I mean, the UK-US deal, frankly, wasn't great. I mean, it's still much higher tariffs than we had pre-Liberation Day for the UK. So it was kind of like an appeasement. And actually, the US was much less aggressive on the UK than the rest of Europe.
Especially when you look at other comprehensive deals. This is just a mini deal, I would say. And I agree with you. I do not expect a comprehensive T-type agreement with the European Union, but more than what we have seen with the UK, I think is also in the interest of the United States.
Can Europe look further east?
Well, I think when you look at the companies, they have been looking for other options all the time, not just for China, Vietnam, but also India is a free trade ally in the sense that we are negotiating with India a comprehensive deal. And what is also interesting, if we look at the global landscape, how unlikely countries are negotiating suddenly now. China, Japan, Korea. So I think that the tension that we're seeing here leads to countries looking further, but at the same time, the U.S. is such a strong market. We will never look we have to take the U.S. always into consideration.
Myron, we know that the European Union also wants, China to resolve all of the export issues around rare earth magnets before a meeting with their leaders next month. Where does this leave the U.S.? I mean, does Europe now have to choose between China and the U.S., or can they do a bit of both?
Well, it's a good topic to raise because obviously another component of the U.S.-EU negotiations is how to deal with China. And there have been differences in approaches, partly driven by the German dynamic in this equation. But not only. I think that the United States and Europe can get closer on how to manage through, because we both need rare earths in a variety of industries, from tech to autos to other industries. So we need to keep the supply of rare earths. That was what was negotiated in London and previously in Geneva. But we still have export controls that are coming down the pike. And they're going to be issues that the United States and Europe have to kind of figure out how to work with, because not only export controls, we have 232 actions coming that also impact the EU, US, and the obviously relationship with China. And they're in semiconductors, they're going to be in pharmaceutical products, and this is another area of tension if we don't get alignment strategically between Europe and the United States.
But Myron, so let's say defense spending goes up to like 5% of GDP for most European countries. Does that soften the Trump administration stance on Europe?
You know, Trump has been very good about taking a win, pocketing it, and then going forward and trying to continue to push the agenda in other areas. I think it creates the right mood, but it doesn't solve the ultimate problem that he has on the trade agenda. Again, Europe has a $230 billion trade surplus with the United States. Obviously, we have a roughly $5 trillion economic partnership. $2 trillion of that is trade, 16 million jobs. So both countries are tied together in very strategic and important economic ways. But Trump feels that Europe has gotten away, you know, too much, and he wants to get something out of it. He wants to win. Europeans want to be on equal footing, but Trump wants to win out of this. So there's going to have to be a meeting of the minds on that at the end of the day.
And Anahita, one of the other questions that we always ask is actually, you know, the person to negotiate on behalf of Europe is the Commission President, Ursula von der Leyen. We understand that Donald Trump would like to negotiate directly with the leaders. Yep. Are we going to see a little bit of that actually at the NATO summit that, again, is the biggest sticking point when it comes to trade and tariffs?
Of course, they will be involved, and they will be significantly involved. Of course, our new chancellor has been to the U.S. He has close ties to the U.S., so he will definitely has a say in this. But Ursula von der Leyen has the right and the obligation to negotiate, of course.
All right, thank you both for joining us. Anahita Tomzer, partner at Baker & McKenzie, and Myron Brilliant, senior counsel at DGA Group. Now back to our top story. U.S. President Donald Trump again disputed an intelligence report that found the airstrikes he ordered on Iran had only a limited impact on the nuclear program. Now, he spoke a short while ago at the NATO summit.
Look at the before and the after picture. Everything above is burned black, the trees, everything. There's one building, but that's a building that sunk substantially into the granite, so that, you know, the fire goes right over it. It was, I believe it was total obliteration. I believe they didn't have a chance to get anything out because we acted fast.
Well, joining us now is Rosalind Matheson, our EMEA news director, who's also been manning the NATO summit blog. Ros, why is Donald Trump still disputing the Pentagon view?
What's interesting, so of course he just sat down a short time ago with the NATO Secretary Mark Rutte, and he used some of that to talk about NATO, but also again to come back and dispute these intelligence findings from his own Pentagon, I would add, that cast doubt on how much damage these US bombing did of these Iran nuclear sites. And what the Pentagon report is saying is in line really with what the UN nuclear monitors, the IAEA, are saying, which is, yes, these strikes did some damage, but we're really unclear how deep the bombs went and whether some of the centrifuges were damaged or not. And the question is then, how much did you set back Iran's nuclear program? Is it by a matter of just months? Is it by years? Is it more? Donald Trump using the conversation a few minutes ago to say that he thinks they've set back the Iran nuclear program by many, many years. However, again, the Pentagon report, the IAEA, is saying it's too soon to tell, and it doesn't appear that they've done that because, again, what we've got is 400 kilograms of fairly higher enriched uranium on the move, potentially somewhere in Iran. The monitors have lost track of it. They don't know where it is. That might give Iran the potential to move fairly quickly to build a nuclear weapon if they wanted to, perhaps within a matter of a year. So they do possibly still retain some ability there on the nuclear front. But Donald Trump really coming out his own intelligence findings there, disputing them and saying obviously that media have been overplaying them and therefore being quite critical as a result.
Ross, thank you so much. Ross Matheson, there was the very latest, of course, on this NATO summit. NATO leaders meeting in The Hague against the backdrop of conflicts in the Ukraine and the Middle East. We heard just a couple of moments ago from Rutte and, of course, Donald Trump. A pretty fiery exchange. We're now waiting for the family picture in The Hague. Their leaders about to join Mark Rutte on set. We'll continue following this NATO summit very closely. Donald Trump also casting doubts on Article 5. Up next, Bloomberg Brief, and this is Bloomberg.
to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Wednesday morning. President Trump insists Iran's nuclear sites were completely destroyed, despite a Pentagon report that says otherwise. Oil rebounds following the biggest two-day slump since 2022. The Nasdaq 100 hits a record high. And it's the second day of Chair Powell's testimony. Treasuries tick higher as he opens the door to an earlier rate cut this year. Now, it is off the back of a Nasdaq 100 record high. Your S&P 500 just 0.8% away from another all-time high. Futures basically unchanged this morning. Some outperformance continues from the Nasdaq 100, but that's all thanks to lower oil prices that had traders pricing in the ability for the Fed to cut more. That is despite a Jay Powell who sounded basically the same as after the last FOMC meeting, that they can continue to wait. You're seeing oil, crude future, Brent futures up 1.4%, but again, that's after a big nearly 13-day, two-day slide. Your 2-year yield, that's lower by about 4 basis points. Your 10-year yield unchanged, both of these around the lowest level since early May. Let's get underneath the surface with your stocks to watch this morning is Bloomberg's Joe Easton. Hey, Joe.
FedEx shares down around 5% in pre-market trading today. The earnings actually didn't look too bad in terms of the quarter, but it's the outlook that's soft, and as Morgan Stanley describes it, it is squishy, which is a word I don't think gets used enough in analyst reports. But that stock sliding, they haven't given a proper guidance for the parcels unit, and that is weighing on the stock this morning. Then over in autos, we've got a bit of a boost for Stellantis today, upgraded over at Jefferies, who says that the North American models actually selling better than expected, gaining market share for the maker of Jeep and other cars as well. So that stock sharply higher, up around 4% at the moment. And then finally, BlackBerry, the company I didn't know still existed until this morning, but apparently they do, and they're doing well in their auto software business. That stock up 11%. It's not the phones that we all know from 20 years ago. It's all about software. That stock higher as well this morning. And as usual, check out the Before the Bell opening wrap for a sum up of all these news and more, Danny.
I missed my BlackBerry phone. That keyboard, it was so great. Bring it back. Joe, thank you very much. Joe Easton there with your check on BlackBerry and other stocks you need to watch in the pre-market. This hour, we're going to be speaking to Callum Pickering of Peel Hunt on Fed Chair Jay Powell's testimony and Sitar Sundar of JP Morgan on the continued market resilience. Now, no rush to cut rates. Here's what Fed Chair Jay Powell told the House Financial Services Committee yesterday on the first day of his semi-annual testimony to Congress.
The effects of tariffs will depend, among other things, on their ultimate level. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
Callum Pickering, chief economist at Peel Hunt, writes, given the lags associated with monetary policy, because tariffs are likely to hit inflation earlier than employment, they set the Fed up to react late to economic weakness. I'm pleased to say that Callum joins us now. Callum, good morning to you. Thank you so much for joining.
Good morning.
So we heard from Hammock yesterday as well, who said, I would rather be slow and move in the right direction than move quickly in the wrong one. Is that the right or the wrong calculus to be playing right now?
That's probably the right calculus. I think we have to remember not just the outlook, but also what's happened. We have just gone through, around the world, in the US, a very bitter period of inflation in 2022 and 2023 that was partly the result of central banks, including the Fed, keeping monetary policy too easy for too long once inflation risks started to emerge. The result of that is that inflation expectations are not properly anchored. Even if we say, well, they're roughly on target, the reality is they're jumping around a lot whenever we get inflation surprises, especially to the upside. That means you have to be very, very cautious of working on the assumption that you can just look through this inflation. So unfortunately, credibility is at stake here for the Fed. It's probably right for the Fed to say we have to tolerate a bit more economic pain than we ordinarily would in order to make sure we don't have to worry about inflation risks. But I think once the Fed starts to move, actually you're going to see a succession of cuts. And so I think the market eventually will be happy with that. It's just a question of the timing of the first cut that's difficult.
To your point, Callum, in that quote we read from you, the order of things would be first you get that inflation hit and then you get that unemployment hit. Does that leave them being too late? Does more economic pain come than necessary because of just the timing and the order of the data we're likely to get?
I think that's exactly right. When you think about the dual mandate for the Fed, you have the inflation side of the mandate, the employment side of the mandate. Typically, the Fed reacts more quickly and more aggressively to risks to employment than it does risks to inflation, but not this time around. That said, and I think this is a critical point, even though you have a serious policy problem, which is tariffs are a self-inflicted policy shock, the US economy is just not ready for a recession. It doesn't have the business cycle characteristics. It doesn't have the excess inventory. It doesn't have too many houses built. It doesn't have too much capital investment. It doesn't have too much credit excesses. And so you can probably take a shock without just automatically thinking this is going to trigger a recession. And I think that's why actually the market has rolled back its worries about a US recession. That said, the Fed should be, under these circumstances, anticipating the economic weakness and just cutting rates, but it can't. And so that's the problem. My base case for this year, I probably think we'll get around a 1.3% rate for real GDP. That's half of where we were last year. If the Fed could move in anticipation, you wouldn't have to see such a low number, but I think that's off the table.
Well, Callum, you say that the Fed can't, but there's certainly some Fed officials who would like to move, who would maybe like to move as soon as July. It's a rare bit of non-consensus for an FOMC that tends to really unite and gravitate around one view. What do you make of Bowman and Waller really sticking out now as voices, more dovish voices, saying that July could be a live meeting?
July should be a live meeting. The meeting is not until the end of the month, and we have got basically 6 weeks of labor market data coming through. I just noticed in the Consumer Confidence Board survey yesterday, if you look at the balance of hard to get versus easy to get jobs, which provides a signal for the unemployment rate, it's now flashing an amber warning sign that the unemployment rate is going to rise. So I think there's a danger, actually, that we get some negative surprises on the labor market data. But conversely, we might see upside surprises on inflation. I think what these Fed members are doing is they're sending the signal for the future direction of policy. I think the dots are the best guide here. 2 more cuts before the end of the year probably means you go September and then at some point in Q4. I think the labor market would have to fall off a cliff before the end of July for that meeting to be a meeting where we can confidently expect a cut.
It gets back to this problem, though. If you have the share of respondents saying that jobs were hard to get, the most severe since COVID, but that's not actually playing out in the hard data yet, Callum. Yep. It's this continued thing of how much can you trust the surveys? You're putting some weight on it. Why, when others have said, look, the surveys are unreliable, they're political, and it's not translating into the actual economic reality?
So last year, we had the signal in the survey, in this particular survey, this net balance in the conference board. We also broke the SARM rule, you'll remember, last year. We had this 0.5 percentage point rise in the unemployment rate. The Fed grew nervous. It reacted. It gave a 50 basis point cut. And I think we should keep in mind, if we didn't get those aggressive cuts late last year, economic conditions today would be worse, not better. And so the balance of risk today would be, under all normal circumstances, pushing the Fed already towards interest rate cuts. I think the difference this time around versus last year is last year was a bit of a mystery. Why are we getting this weakness in the labor market data? We still have lots of reasons to expect growth to be strong. This time around, if we see the weakness and we can point to the problem, which is, ouch, tariffs are going to shock both demand and supply, actually then we have some rationale as to why this signal might be justified. I think we need to be cautious, of course, but if we do see it in the hard data, we should start paying a bit more attention.
Callum, I want to leave it with this, because you also write in your most recent research about the impacts of the uncertainty in the Middle East and maybe that turning into certainty. But I wanted to pick up on one piece that you wrote about, this issue of authority and credibility in Washington, D.C. What does it mean to have, if this is indeed the resolution, and there's no further issues, or at least not to the extent we've seen, what does that do to the credibility of Washington, D.C., and why is that so important at this moment as they're negotiating various trade deals?
If markets conclude that Trump and Washington's policy in the Middle East has been a success, it partly counters the negative hit to credibility that has come so far from the haphazard and heavy-handed approach to trade tariffs. Where, of course, on the other side of the Atlantic, whether we like it or not, the US economy is the conductor of the global economic orchestra and the market orchestra. In the end, we dance to America's tune, and so it matters for all of us if the US administration has credibility. And so when we're confident that looking ahead, the administration in the US will make decisions that are good for markets, good for the economy, that are pro-growth, then around the world we can start to take on risk. So I think this matters much beyond US shores. Even if the US economy weakens as a result of tariffs, the hope actually that in future you'll have better-minded decisions, I think is good for risk, and it's good for global outcomes.
Callum, a masterclass as always. Thank you so much for joining this morning. Callum Pickering of Peel Hunt. Let's now get you some other top stories that are trending on the terminal this morning. A stunning upset in the Democratic primary for the New York City mayoral race. Former New York Governor Andrew Cuomo has conceded to 33-year-old lawmaker from Queens, Zohran Mamdani. Mamdani's platform includes freezing rents and cracking down on bad landlords. The result isn't official yet. The next round of vote tallying is on July 1st.
Tonight was not our night. Tonight was Assemblyman Mamdani's night, and he put together a great campaign. I called him, I congratulated him, I applaud him sincerely for his effort, and let's give him a round of applause.
Europe's car market picked up slightly in May, driven by demand for electric and hybrid vehicles. However, Tesla continues to lose market share. Its deliveries in Europe fell 28% last month. Growing competition and CEO Elon Musk's political persona has hit demand. Elsewhere for Elon Musk, SpaceX launched a historic private astronaut mission to the International Space Station. The Axiom 4 is carrying the first ever people from India, Hungary, and Poland. Originally slated to launch on June 11th, the mission faced 2 full weeks of delays. Coming up, mixed messages. The Pentagon says only limited impact was done from Iran's nuclear facilities, while President Trump calls them completely destroyed. We'll discuss that coming up next on your Bloomberg Brief.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
That hit ended the war. That hit ended the war. I don't want to use an example of Hiroshima. I don't want to use an example of Nagasaki. But that was essentially the same thing. That ended that war. This ended that with the war. If we didn't take that out, they'd be fighting right now.
Mr. President?
Yeah.
If the Iranians do rebuild, would the United States...
If they rebuild?
Would the United States strike again? And I have also a question about
But I'm not going to have to worry about that. It's gone for years. Very tough to rebuild because the whole thing has collapsed. In other words, inside, it's all collapsed.
That was President Trump speaking about an hour ago from the NATO summit at The Hague. Joining us now is from Jerusalem is Bloomberg's Dan Williams. Dan, that report might contrast with some of the other intelligence we're hearing. What is our understanding at this point as to the damage done on Iran's nuclear sites?
Well, I think it's very hard for anyone to know who's not there, to know categorically. I imagine the Iranians themselves don't know. They probably haven't had a chance to dig anything out. The dust has only now settling from the war. We're talking just over about 30 hours since the ceasefire was called. And in terms of more impartial, perhaps more neutral assessments, that would require the entry of nuclear inspectors that Iran does not appear disposed to allowing in anytime soon. Right, what we have now is intelligence assessments based largely, as I understand it, on satellite imagery. Even this DIA report that was leaked to some media, including Bloomberg, stipulated that this was an initial preliminary report. Now, when we hear from President Trump, when we hear from his defense secretary categorical statements like the obliteration of the Iranian nuclear program, it's worth remembering that the U.S. ally, Israel, that had an obvious stake in seeing these sites destroyed and was at war with Iran when the U.S. weighed in really to deliver the knockout blow, as was hoped by the U.S. and Israel, to these sites. Israel itself has taken a measured approach. It said definitely there was significant damage, but the full assessment has yet to be made. The analysts are still looking over it. So it would appear that the jury, to a degree, is still out, but the allies appear to think that given the U.S.'s use of the biggest conventional weaponry, the most powerful conventional weaponry available against these sites, a lot of damage was done, potentially damage beyond anything the Iranians could hope to retrieve or recover from in the near future.
Well, you could even hear from the American president there that he doesn't think a rebuild would happen. He is confident in the destruction, maybe confident enough to post this on Truth Social, Dan. China can now continue to purchase oil from Iran. Hopefully they will be purchasing plenty from the U.S. also. It was my great honor to make this happen. How big of a surprise that Trump seemingly might relax some of the sanctions on Iran now?
Well, it's a big surprise to oil traders. It's a big surprise to U.S. policymakers. Sanctions against the Iranian energy industry, oil exports, has been a centerpiece of international policy when it comes to Iran containment, and certainly U.S. policy going back several administrations. As I understand it, the White House was quick to, should we say, roll back those comments to say that there is no review of sanctions in the works. And I understand that the president himself suggested that his intention was to bring to China's attention that he, as he put it, evaded or prevented a closure of the Strait of Hormuz. This is something that might have happened had this conflict escalated further. And in preventing that kind of disruption, he actually helped China by preventing disruptions to China's energy supply. Again, there's also a backdrop of what looks to be a Trump administration review of trade ties or trade or diplomatic negotiations with China over their long-standing trade war. So it would appear that this is another mixed message by Trump. Perhaps he's dangling, both for the Iranians and for the Chinese, the benefits of playing along with how he'd like to pursue those two parallel tracks. It's something I imagine will become clearer as the days coming up unfold.
Dan, thank you so much for that. That's Bloomberg's Dan Williams in Jerusalem. Let's now go live to The Hague, where Bloomberg's Oliver Crook is there. He's been at the NATO summit covering the meetings. Oliver, I'm just going to imagine that a lot of this has been overshadowed by the Middle East with Trump's journey there to the Netherlands.
Yeah, that's right. We just had that press conference where Mark Rutte, the Secretary General of NATO, and President Donald Trump sat together. Rutte really kicking off the conversation, saying that basically there's a big milestone here for NATO, really sort of unprecedented historic day, where NATO is set to agree to spend 5% of its GDP, particularly the European allies, on defense spending going into the future. This was, of course, one of the key demands of the Trump administration that Donald Trump started to make a few months ago, and frankly, an idea that would have gotten basically zero traction 6 months ago and been thought of to be completely ludicrous, frankly, and is now being adopted as policy at NATO. And so, you know, Mark Rutte wanted to give Trump the credit for that, and I think that that's actually fair credit to give. I don't think anyone in Europe would have gotten to that level, or most of the NATO alliance would have got to that level without President Trump. And Trump sort of gave a little sort of lukewarm endorsement to all of that, saying that, you know, let's wait till the agreement gets ratified because anything could happen over the next few hours. But then, as you say, Danny, that conversation was quickly sidetracked onto the question of Iran, about whether or not the damage had been quite as extensive as the Trump administration had claimed. But Trump was saying that basically that intel that was leaked was only a preliminary report and we don't know, while at the same time basically affirming everything that he's been saying over the last few days, that the nuclear facilities had been completely obliterated. But of course, the main order of the day is that the NATO agreement to spend 5% of GDP. There's been a bit of disagreement among some of the members of NATO, namely Spain, who said that, listen, we could meet our NATO commitments without quite getting to that level. That has got some criticism from Marco Rubio, who's also here. We also have Pete Hegseth here. So we're going to be watching that over the next couple of hours as the sort of question of Iran also overshadows the events. And we should say, Danny, that Emmanuel Macron a couple of days ago said that Donald Trump had actually broken international law by that bombing raid over Iran. So we'll watch for any one-on-one conversation between Donald Trump, Emmanuel Macron, and of course Pedro Sanchez in Spain, who's been sort of the obstacle in some of the discussions here in NATO.
Yeah, and we're just looking at live pictures of Trump in The Hague alongside. We also saw the French president president, Canadian, and Keir Starmer from the UK, all speaking with each other, those three in particular. Oliver, thank you so much for your excellent coverage there at the NATO summit. A quick check on commodities this morning. Yes, there is a rebound, but that comes after 2 days of a nearly 13% decline, so this does little to erase that. Brent crude up 1%, NYMEX crude about 1% too. Coming up, we're going to look at the headlines, what's on the top of the major publications, including the stunning result of the Democratic primary for New York City mayor. That's coming up next on your brief.
In case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting that. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. You know, with all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Let's look at the front pages this morning. First up, the New York Times leads with the New York City mayoral primary. Zohran Mamdani, the presumptive winner of the Democratic primary, has promised to lift the city's working class and serve as a model for the future of his party. He vowed to use his power to stop masked ICE agents from deporting, quote, our neighbors. His supporters warn that the fight is not over. He will now need to compete against incumbent Mayor Eric Adams in November. Next up on the Journal, the Israel-Iran conflict reviving Chinese leaders' interest in a pipeline that would carry Russian natural gas to China. The Power of Siberia 2 pipeline project had long been stalled due to disagreements over pricing and ownership, as well as China's reluctance to deepen its energy dependence on Russia. The outbreak of the war in the Middle East has led Chinese officials to reconsider. Elsewhere on the front page of the Washington Post, the latest on the month-long battle between the Trump admin and Harvard. Two officials told the paper that the White House is ramping up negotiations after the elite school racked up legal winnings in court. The admin hopes for a deal by the end of the month that one insider says could be a, quote, blueprint for the rest of higher education. Coming up, we catch up with JP Morgan's Sidara Sundar on the outlook for this equity market.
to see over the next 3, 6, 9 months how the tariff discussions play out and what does it mean.
I do factor in some effects of tariffs now on inflation, on prices.
I like the idea of the 10% tariff across the board.
I've spent my entire career focused on fiscal discipline. I don't think these people have the foggiest notion what they're doing. And I think DOGE is doing tremendous damage to government.
Elon Musk is probably the inventor of our age, but who understands that we're in the midst of the most profound convergence among technologies.
When we are facing a once-in-a-generation technological disruption,
we cannot close this retirement gap without private-public partnership. We have to have good policy.
Do you think, Dawn, that the market is correct to be, as of now, pricing in 3 rate cuts in 2025?
I would take the other side of that bet.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Wednesday. President Trump insists Iran's nuclear sites were completely destroyed, despite a Pentagon report that says otherwise. Oil rebounds following the biggest two-day slump since 2022. The NASDAQ 100 hits a record high. And it's the second day of Chair Powell's testimony. Treasuries tick higher as he opens the door to an earlier rate cut this year. So after a more than 1% advance yesterday, the NASDAQ is at a record. The S&P is less than 1% away from a record. We are a little changed this morning to slightly higher, more outperformance from the NASDAQ. A lot of the decline in oil helped yesterday in the hopes of getting risk on. Yes, it is higher by 0.8%, but that follows a two-day decline of 13%. Yields, those are also bid on the front end, down by about 4 basis points. Your 10-year yield, little change, both around the lowest level since May. Again, lower oil prices helping with that, more dovish Fed speak, having traders price in more rate cuts to come, about 60 basis points of cuts priced in for this year. Let's get some stocks on the move pre-market. With that is Joe Easton. Hey, Joe.
Hey, Danny. So we've got FedEx shares down around 6% in pre-market trading this morning. The company giving guidance yesterday that Morgan Stanley describes as squishy, an adjective I think should be used more in analyst reports. But the details of it are the parcel business not growing as much as expected. Potentially, a lot of that is due to tariff concerns, people potentially cutting back even as those tariffs get watered down. So at the moment, we are seeing FedEx lower and UPS, I should say, slipping as well in the pre-market today. Then over in the car space, we've got Stellantis, the maker of Chrysler, Jeep, and all those other car brands, getting an upgrade over at Jefferies. The first time they've had a buy rating on that stock for around 9 months. They reckon the North America business is improving, gaining market share, potentially making up for weakness in Europe. And finally, BlackBerry, a company I did not know existed still until this morning, but the company is doing well in software. It's all about automotive software, so selling into the car market. It's not the old phones that we all remember from 20 years ago. It's all about the software. So BlackBerry shares up almost 14%, 13% now in the pre-market. Keep an eye on that one ahead of the open later today, Danny.
A blast from the past. Joe, thank you very much for your work this morning. Now, elsewhere, Fed Chair Jay Powell faces the Senate Banking Committee today. Here's what he said in yesterday's hearing before a House panel.
Policy changes continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
Treasuries are muted this morning, but there was a rally yesterday on those comments. Bloomberg's Mike McKee joins us from Washington. Mike, it is a Treasury market that started to price in more cuts, but was this really a more dovish Powell?
It wasn't really a more dovish Powell. It was more of the same Powell that we've gotten. I got to go to the dress rehearsal for this last week at the Fed's news conference. His opening statement today, from which that soundbite was taken, was almost word for word the same as what he said in his statement at the press conference. The Fed hasn't changed its views yet, although a couple of members are a little more open to the possibility of an earlier rate cut. Powell tried to straddle the line and say, if things work out where inflation doesn't rise too much and unemployment does start to rise, we could cut earlier. But he didn't put any timing on it. And the Fed is still looking at 2 rate cuts by the end of the year, he said, which was what was in their dot plot last week. So not much changed there, but maybe in the market's perception.
Well, in the run-in to this, Mike, you had a lot of harsh public criticism, be it from the president, the vice president. This was expected to be a grilling match. Was it? And will we get that in day 2 today?
No, he got asked a couple of times politely by members of the House Financial Services Committee about why they are waiting and not moving now. But I don't expect the Senate to be anything different because the senators tend to be more deferential anyway. And he has a good relationship with members of Congress. He spends a lot of time up on Congress, meeting with individual members. There was one junior member yesterday in his first term, and Powell said, I don't necessarily have an answer to that question, but I will come see you, and we'll talk about it. So he retained some goodwill up there, and it's probably not going to be a grilling, probably not going to be a whole lot for markets to chew on today.
Mike, we really appreciate it. Thanks for bringing us the latest. That is Bloomberg's Michael McKee in Washington. Now let's turn to this equity market. JP Morgan Sitara Sundar anticipating a strong year ahead for equity, writing, quote, U.S. equities are expected to remain resilient and potentially reach new highs over the next 12 months. This optimism is being driven by strong corporate earnings, particularly from major tech companies. I'm pleased to say that Sitara joins us now. She's head of alternative investment strategy at JP Morgan Private Bank. Very prescient because you wrote that before we hit all-time highs in the NASDAQ, and we're also almost there on the S&P 500. So is this a rally you want to continue to ride?
I think so. Look, I think the entire sentiment so far this year has been this push and pull dynamic between bullish indicators, which has been strong earnings growth across the board. Obviously, like tech has been leading the way, but we've seen breadth and strength in earnings growth from financials and other more cyclical-oriented sectors. But we've also had more bearish indicators, too. We've seen a confluence of volatility around trade policy, geopolitical uncertainties. But when we look at that entire mosaic, at the end of the day, when we're thinking about equity markets moving forward, we have to look at the signal through the noise and focus on what the fundamentals are telling us. So when we look at the next 12 months, earnings growth is definitely going to decelerate, but still be strong. We're still seeing and expecting mid-single digits to high single digits earnings growth. And we're expecting that breadth to continue to broaden. And from my perspective, when we're thinking about investing within equity markets here, you need to see that breadth. You need to see more players come to the table. So while we still expect that tech is going to lead the way forward, and actually, I was honestly surprised to see this when I was looking at this yesterday, tech is now one of the best performing sectors so far this year, which if you think about that and the volatility that we've seen in that space, that secular growth, the optimism around artificial intelligence, that CapEx spend, that incremental news that we're getting from companies that artificial intelligence is actually being adopted a little bit more and actually leading to increased productivity, we're actually starting to see the stock market focus a little bit more on those fundamentals, which makes us constructive moving forward.
I have to say, I did see some notes yesterday that kind of made me feel crazy that were like, oh, geopolitical tension is ebbed, therefore buy tech stocks. It feels kind of crazy in that context to buy, but it is what worked. It was the old leadership of NVIDIA, AMD, Broadcom, things that led us higher yesterday. If that is one thing that is sure, that the AI continues to dominate, the spending is there, why do you still see breadth? Why is it not concentrated more into that leadership?
So it's a phenomenal question. When we think about artificial intelligence, I think the biggest point that I can tell investors is that it's bigger than just a technology story. It is a platform technology in which innovation across all sectors is going to be built upon it. That's why we're so constructive on it. Honestly, if it was just a technology play, I think that's a little bit more difficult. Obviously, the S&P 500 and even broader equity market indices, a majority of it is technology. But the thing that gets us the most excited is that artificial intelligence, agentic AI, which is still in the early innings, but we're starting to explore that a little bit further, and the application layer, that has impact not just on technology and software, which obviously we're very constructive on, but increasing efficiencies and automation when you think about the industrial complex, robotics, when you think about manufacturing, and that's a confluence of two different things. One, reshoring, bringing manufacturing back to the United States, but also increasing efficiencies within that ecosystem. It has the ability to permeate across all these different sectors, which is why we, and I think the street, are so optimistic on this trend. And that also means, though, that we need to start seeing other companies outside of just technology-oriented companies start to adopt this. And that's what we've seen so far this year.
Right.
Financials, even our own firm is starting to adopt artificial intelligence, LLM, trying to incorporate all of those types of technologies into our ecosystem in order to improve productivity, which we're seeing in real time.
So that's one of the things that is sure in this market. There's still a lot of uncertainty, and there's some real risk this summer. July 4th, the One Big Beautiful Bill deadline. July 9th, the trade deadline. Then you get into August, and you get the deadline for the Chinese tariffs, too. How do you position ahead of all that uncertainty?
100%. Portfolio resilience has been something that we've been talking about ad nauseum, understandably, so far this year. So what does that mean? The biggest thing for us is that what a resilient portfolio looks like over the next cycle is honestly going to look a little bit different than what it looked like over the past cycle. So when we think about the environment that we were in before, it was in the post-GFC period up until 2022, above average economic growth, especially within the United States, low inflation, and near zero rates. That led to a different type of portfolio construction where stocks and bonds were doing what they were supposed to be doing in terms of being negatively correlated. We still expect them to be negatively correlated moving forward, but that traditional 60-40 portfolio may not be enough to hedge against all the risks and the uncertainties that are out there right now. So the biggest uncertainty that we're really monitoring is thinking about what the confluence of below potential GDP growth, still solid, but below potential GDP growth, plus slightly higher rates than we were in the past cycle, and slightly higher inflation. So when we look at those things, trying to hedge against that elevated inflation risk and looking for inflation-protected income is where we're really focused. And what that means, it can either mean something like gold, where the intrinsic value is associated and tied to prices to a certain extent, but also in areas like infrastructure and alternative investments, because you have two different things. You have inflation-protected income because you have embedded inflation escalators within infrastructure, but also you have secular growth. Because of all when we talk about artificial intelligence, you need power to be able to associate and to power that entire trend. And now about 60% of the global infrastructure ecosystem is actually power oriented. So you finally have secular growth and that defensiveness with the inflation-protected income. So when we're talking to clients moving forward, it's about adding that resiliency, but that definition of resiliency is changing.
Yeah, and resiliency, I think a lot of people, again, appreciate as we head to whatever the summer brings us. Tara, thank you so much for joining this morning. Stay cool. Thank you so much for coming in studio. Tara Sundar of JP Morgan Private Bank. All right, now let's get you some other top stories that are trending on the Bloomberg Terminal this morning. It was a stunning upset in the Democratic primary for the New York City mayoral race. Former New York Governor Andrew Cuomo has conceded to 33-year-old Queens lawmaker Zohran Mamdani. Mamdani's platform includes freezing rents and cracking down on bad landlords. The result isn't official yet, and the next round of vote tallying is on July 1st.
Tonight was not our night. Tonight was Assemblyman Mamdani's night, and he put together a great campaign. I called him, I congratulated him, I applaud him sincerely for his effort, and let's give him a round of applause.
and a warning from the EU. Officials say that it will retaliate and impose tariffs on U.S. imports, including Boeing's, if President Trump puts a baseline levy on the bloc's goods. The EU is rushing to clinch a deal with Washington before tariffs on nearly all of its exports to the U.S. jump to 50% on July 9th. Meanwhile, the U.S. and Mexico are negotiating a quota system to reduce tariffs on a certain volume of steel imports. The move would alleviate crushing duties for some Mexican steel that's essential to U.S. automakers and other industries. Mexico is the third largest source of imported steel to the U.S. Coming up, President Trump disputes an intelligence report on damage done to Iran's nuclear program. We'll have the details for you next on your Bloomberg Brief.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO? It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function. It's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is?
Telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
That hit ended the war. That hit ended the war. I don't want to use an example of Hiroshima. I don't want to use an example of Nagasaki. But that was essentially the same thing. That ended that war. This ended that with the war. If we didn't take that out, they'd be fighting right now.
Mr. President?
Yeah.
If the Iranians do rebuild, would the United States...
If they rebuild?
Would the United States strike again? And I have also a question about...
But I'm not going to have to worry about that. It's gone for years. Very tough to rebuild because the whole thing has collapsed. In other words, inside, it's all collapsed.
I won't use that example, but it's basically that. President Trump speaking at the NATO summit in the Netherlands in the last hour as he reiterates that Iran's nuclear facilities have been completely destroyed. Meanwhile, the Pentagon saying that there was only limited damage. Joining us now is Bloomberg's Bill Ferries. Bill, a lot of back and forth. What do we understand? What is the latest readout from these various reports at the moment?
Hi, Danny. Thanks for having me. The latest news that we know from the Defense Intelligence Agency is that their initial assessment is that in fact those deeply underground fortified facilities were probably not destroyed. That includes the facilities that hold those centrifuges that enrich uranium up to a nuclear bomb grade. That's at least the initial assessment. Of course, there was a lot of damage done at the surface, but it does seem that the initial intelligence report says that those facilities may still in fact exist. Now, it doesn't mean they're doing any work. That doesn't mean they're enriching uranium. But it does make an important distinction when you talk about whether the Iranian nuclear program has been really destroyed or not. It does seem so far U.S. officials, the U.S. intelligence agencies don't think it has been.
Well, perhaps in Trump's confidence that it has been destroyed and we've reached an end to this conflict. He had this on Truth Social yesterday, Bill. China can now continue to purchase oil from Iran. Hopefully they will be purchasing plenty from the U.S. also. It was my great honor to make this happen. Just how much of a surprise was it, Bill, that Trump is seemingly relaxing oil sanctions on Iran?
Yeah, that does have a lot of people scratching their heads. I mean, to begin with, China never actually stopped buying Iranian oil. China doesn't recognize U.S. sanctions on Iran's oil industry. They have continued to be the biggest single purchaser of Iranian oil and have really kind of helped that industry sustain itself in Iran. So I'm not sure. The president may be referring to the idea that it's perhaps the oil will keep flowing now that there's been this at least temporary ceasefire. But again, on the sanctions front, the president in this case doesn't have the authority to revoke sanctions on Iran's oil industry without a lot more paperwork, a lot more consultation with Congress. Our initial reporting is the Treasury Department continues or will continue to enforce sanctions against Iran's oil industry. So maybe President Trump is signaling his intention to make some changes, to push for changes in that sanctions regime, but it certainly hasn't affected China's behavior so far.
Bill, elsewhere on Truth Social, the president also putting this out, calling on senators to, quote, lock yourself in a room if you must, don't go home, and get the deal done this week. The deadline fast approaching for next week for the One Big Beautiful Bill Act. Bill, does it seem like we might get something of an agreement, especially when it comes to state and local tax deductions?
Well, we do have Treasury Secretary Scott Bessent, who was up on the Hill saying that he thinks they can strike a deal on those SALT taxes within the next 24 to 48 hours. That is one of the bigger hangups right now between the House and the Senate versions of this bill. The Senate does seem to be moving towards an agreement where they keep that $40,000 state and local tax deduction, but they perhaps change the income threshold at which it applies. Right now, the House version says it applies to people making $500,000. They could adjust that down a bit and have it phase out a little bit earlier, save some money that way. So we'll see. It's not the only issue holding up this bill, but the Senate's goal so far has been to have a vote this week that could include this weekend. That would get it back to the House for a vote that gets it to the president's desk by July 4th.
Bill, thank you very much. That is Bloomberg's Bill Ferries. Now let's get to a stock that we've been keeping our eye on. FedEx falling almost 6% in the pre-market trade, 5.7% to be precise. Its first quarter profit missed analyst forecasts. The parcel company said it wasn't providing a profit outlook for the fiscal year due to uncertain global demand. Joining us now with the latest is Bloomberg's Katie Linzell. Katie, what was your takeaway?
So really looking at FedEx, there are sort of two interesting takeaways that we have here. Firstly, the forecast really not being what analysts were expecting, so disappointment there. We can point to sort of softer demand for packages, a sort of weaker US consumer, so quite a lot of disappointment coming out of there. And then also, if we look at the fact that FedEx was saying they were unable to actually forecast for full year guidance, which is very rare for FedEx. Normally they're able to provide that kind of forecast, that kind of guidance for investors and analysts. In this case, they were saying they're keeping it to the current quarter. So that really gives us a feel for how, for many businesses trying to operate in this kind of trade environment, the kind of uncertainty around tariffs, it's very difficult to kind of strategize going forward. So that was very useful, I think, for us all to see.
Well, to that point, Katie, is FedEx a bellwether at this point for businesses trying to navigate this environment?
I think it's useful to look at the company in that kind of context. Yes, FedEx has a huge range of clients, looking from manufacturers through to consumer goods companies and retailers. So really, they're able to get a gauge on not just the sentiment coming from other businesses, but also from the consumer, which is really useful. Also, their most profitable trade route, or the most profitable part of their business, is looking at that profitable trade route from US to China. And that is very, very important for them. They were able to report that in May, they really saw a sharp deterioration in that part, and also that they don't expect volumes to pick up materially. So in that way, yeah, it's a very important company for us all to focus on in this context of tariffs.
Of course, then you get the head scratcher for some reason, cruise lines in the U.S. still doing well and still having demand. So unevenness out there. Katie, really great to have you on. Bloomberg's Katie Linzel, thank you so much. Coming up, more earnings in day 2 of Chair Powell's testimony. We'll have your trading diary up next.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Let's get you set up for your trading day on this Wednesday. Chair Powell will be resuming his congressional testimony, this time before a Senate panel. That starts at 10 a.m. We'll also get new home sales numbers. Those are also out at 10 a.m. Also get some earnings. Micron will be reporting earnings after the market close. A quick check on your bond market this morning, because we continue to see a real bid into the front end. Yes, 10s and 30s are a little changed, but check out what's happening on the front end. It had been anchored by a do-nothing, wait-and-see Fed, but we are down by about 3 basis points. You've had some commentary this week, specifically coming from Bowman and Waller about cutting sooner. Oil prices also coming in, helping on that front too. All right, that's it for your brief this morning. Surveillance takes it from here on Bloomberg.
Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come, while we've invested in the convention center. The reason we focused on housing and getting rid of the vacant housing. The reason we focused on violent crime. And now Baltimore is having among the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Even though equities are very expensive, there's more liquidity in the system today than there was pre-pandemic.
This market is just pushing you into risk, and it's been really hard to resist that momentum.
You need to be risk off to be back to risk on.
It's looking pretty bullish right now. You still have to be careful.
The market will respond when the circumstances change, for the better or for the worse.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, Chair Powell isn't going anywhere fast.
For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
The Fed Chair Jay Powell remaining unmoved, sticking to script on Capitol Hill. Little sign is hurting tech stocks, the Nasdaq breaking through all-time highs as equities keep climbing the wall of worry, filled with key self-imposed deadlines for taxes and for trade.
Yeah, yesterday was all about hope in this disinflation story and belief that we are going to see it, and this comes with the de-escalation in the Middle East. Yes, there are these potential risks out there, but a lot of people feel like we have priced them in, and given the fact that we haven't necessarily seen the huge inflationary shock to a lot of the recent data, it gives people the sense the Fed can cut without necessarily seeing the weakening in growth that a lot of people were worried about.
And now we're getting closer and closer to these two key deadlines. July 4th, the ambitious deadline for the tax bill. July 9th, the expiration of the global tariff pause. And I have to say, the tariff story is hardly being discussed in the notes that I've read so far.
Which is ironic, considering the fact that we're hearing about retaliation potential from Europe recently. If there is a sort of baseline 10% tariff that the U.S. probably will impose on them. So at what point does that rev back up? There is a feeling that as long as there are good faith discussions by some of the trading partners of the United States, that there will be a kicking the can down the road. Nonetheless, tariffs will be higher. How has that trickled through to expectations? And at what point are we just being a little bit sanguine to risks, considering that it's been very hard to trade on any of them?
Was that a better tone over in Europe at the NATO summit? The president getting a warm welcome from Mark Rutte, a friend of this program over the years who we've spoken to. I think we always knew that he was going to be a closer ally of this president, Donald Trump.
Warmer tone, I think, is putting it mildly. Talk about, well, we welcome somebody who is able to push us into doing what we knew was right all along, and this is the right path forward. I would say yes, with one exception, Spain. Spain seems to be the outlier to absolutely everything, and I find it really interesting to see how they're saying, look, we don't think this is a good policy for us, so no, we're not going to spend 5% of our budget and carve us out. And otherwise, there was this feeling of, we agree with you, Russia, China, both existential threats. We need to be building up our military force.
And thank you for spurring us to action.
We'll get to Anne-Marie in just a moment on that story. Equity futures so far coming off some decent gains. The S&P 500 just about unchanged. Coming up this hour, Jay Pawlowski of TPW Advisory with the Nasdaq back at all-time highs. The former Deputy National Security Advisor Victoria Coates on today's NATO summit, and Greg Dacko of EY on Fed Chair Jay Powell's second day on Capitol Hill. We begin this hour with our top story. Reports questioning the damage done to key Iranian nuclear facilities. The president pushing back.
Mr. President, what's your reaction to the intelligence reports saying that the Iranian nuclear sites were only partially devastated?
They don't know. I mean, they did a report. We hear it was obliteration. It was a virtual obliteration. When you take a look at the ground above, don't forget, the flame is all underground. But everything above, if you look at the before and the after picture, everything above is burned black.
Joining us now is Anne-Marie from the NATO summit. AMH, some strong pushback from the president and his team.
Absolutely. The president and his team are really disregarding this leaked report in both the New York Times and CNN and a number of other outlets. This comes from the Defense Intelligence Agency. It's part of the DoD. And what it goes into is that some of these core components of Iran's nuclear program, they say, wasn't hit to the extent that they feel that the president was talking about when he talks about obliteration. And they're saying basically that now Iran's nuclear program is set back just months. What I would say is you have to look at some of the other data we are seeing and voices we are hearing in this debate. I would go to the IAEA's Rafael Grossi, who was on our program last week. He said that it's been significantly damaged in terms of Iran's capabilities. He says there is a question now whether it's months or years if Iran was going to rebuild. And he says we just don't have enough data. He needs to get his inspectors on the ground. I think that's a constructive view to take. DIA is just one of more than a dozen intelligence agencies. This is preliminary in the intelligence world. What the Defense Secretary Pete Hegseth will tell you is that preliminary means it's low confidence at this moment. So the president's team is pushing back because they want to get more information, and it's just too early for some of this sensitive data collection to really understand the extent and the damage that was degraded in terms of Iran's nuclear capabilities.
This was certainly a dominant part of the conversation earlier on this morning. Just a secondary story is the alliance itself. Anne-Marie, is this alliance where the president wants it to be?
It looks like it is. I mean, if you just go off vibes right now, his discussion with Mark Rutte, he said, we started this together years ago. We've been working on this. It does seem like the president is walking into this NATO summit very different than some summits I've covered during the president's first term, with a lot of optimism that they're going to get to the finish line that this administration would like to see, even if you have some potential spoilers like Spain who do not think they need to hit that 5% target. That 5% target, though, we should note, is going to be over a very long period of time. And it's not just hardcore defense spending when it comes to things like armor and weaponry and tanks and what you think of when you think of a defense industrial complex. It's going to be split. 3.5% for hardcore defense, then 1.5% on some of the industries that support it. Maybe in the United Kingdom, they're going to use some of that for, say, border patrol. You can use that for some countries when it comes to cybersecurity, some infrastructure that might be needed to support their defense complex. So that is a way that some of these countries are going to be able to meet that target. But that target certainly is important for the president. You had Marco Rubio, Secretary of State, speaking to Politico before the summit kicked off today, and he says this NATO meeting is Trump's summit.
AMH, thank you. Appreciate the update. More from Anne-Marie later this morning, and more from the president as well. Expecting a news conference at 9 a.m. Eastern Time, so a few hours from now. Here on Wall Street, here's the big view at the moment. Jay Pawlowski of TPW writing the following: one should employ the stoic strategy to investing in the age of Trump. It is an investing superpower to ignore what Trump says and focus on what he does. Jay joins us now for more. Jay, good morning, sir. Help us focus on what's important here. We've had a rally off the low of, I think, around 30% on the Nasdaq 100. And some people who didn't participate just scratching their head and asking, why? How did this happen?
Well, John, great to be with you and Lisa. And look, it's all about earnings in this case, right? Earnings have been good, have been better than expected in Q1. We're coming up on earnings season going forward. And as long as earnings are okay, the market can ignore a lot of the bad news. But in our view, what's really been important over the last week is the confirmation of some key signals about the new dynamics playing in the global cross-asset markets. And we look at the Israel attack on Iran and then the U.S. attack on Iran and note three things. First, Bitcoin didn't rally, so really reinforcing its view as a liquidity proxy. Second, the dollar didn't rally, which is really very interesting, even though it was on a 3-year low. And third, and perhaps most importantly, the U.S. Treasury market really hasn't rallied. It's improved about a dozen basis points over the last week, but pretty de minimis. And that to us really suggests the key point, which is that the rest of the world has over-allocated to the U.S. and has no more need of U.S. assets, even in a Middle Eastern crisis, which is quite unusual versus the last 20 years of history or so. And so for us, that really reinforces our main point, which is we are in the beginning of a secular leadership change away from the U.S. to the rest of the world, underpinned by a sustained period of capital repatriation out of the U.S. back to the rest of the world. And look, you talk about NASDAQ. Sure, NASDAQ has finally caught up to a new all-time high. That's great. Chinese tech is outperforming NASDAQ year-to-date by about a ratio of 4-to-1.
Jay, when was the last time that you were less overweight or more underweight the United States assets and U.S. assets more broadly than you are right now?
That's a good question, Lisa. It's been quite a period of time. We have been overweight non-U.S. assets. You know that. We've talked about that on this show, for probably a year or more. We've been bullish on China for the last year now, year and a half. John, you and I talked about European banks. Again, an example, European banks are up 30% year to date. XLF U.S. banks are up about 5%. So the game has been offshore. We think that's going to continue. We think we're in inning one. But the real interesting thing now for us is the focus on a weak dollar and what that means for emerging markets, namely the ability to cut rates to support their growth cycles, which is, again, historically not the case. Usually you have crises, dollar rallies, EM can't cut rates because it's afraid of what will do to the currency when a strong dollar. In this environment, very different. So we think global growth is in a long cycle, and we think the real opportunity set up here for the second half of this year going into 2026 is emerging market debt and equity and commodities. We think commodities are really interesting across the cycle, across the spectrum right now.
Jay, there's a real question here, especially as we head into a couple of key deadlines, July 4th and July 9th, whether we're being overly complacent about particularly trade. John was making the point earlier, why is no one talking about tariffs at a time when we potentially have a lot of disagreements coming up? Are we underestimating the risk that we are not adequately pricing that in, not only to U.S. assets, but globally to areas that are going to get hit pretty hard if some of these tariffs go on?
No. Short answer, no. Tariffs have already been discounted by the market. What moves the market is uncertainty, and tariffs are certainty at this point. We know that. So the market's already priced it in. Corporates have close to record margins. If you have a 10%, 15% tariff on things, that's digestible, unlikely to be much more. The government, the U.S., is kind of handcuffed in what it can do because it can't really afford inflation. And inflation pushes up rates, higher rates blows out the deficit even more and creates a problem. What we're focused on is not tariffs, not the Fed. It's all about the fiscal space. Who has the space to grow, to spend on AI, climate, and defense? Just talked about defense in Europe. That's a prime driver for European growth, for German growth. And that's what's driving the markets, the recognition that U.S. upside is capped in terms of no fiscal space, capped in terms of higher interest rates, capped in terms of weak dollar, premium valuation, center of uncertainty, and the rest of the world doesn't have any of that. So that's really, that's really the opportunity, not tariffs. Tariffs, not spending any time at all thinking about tariffs.
Well, Jay, let's finish on the commodity story. So you mentioned that weak dollar, euro dollar back to about 116. When you talk about commodities and maybe fold in that FX story, which commodities are you thinking about? Is it the precious metals or is it something beyond that?
Yeah, John, really for us, it's a global growth long cycle with a weak dollar. Commodities are the play on global growth, play on a weak dollar, play on emerging markets able to support their economies. Commodities look to us and others, technicians, to be breaking out, broadly speaking, the Goldman Sachs Commodity Index, breaking out relative to itself and its own history, breaking out versus the S&P. And so that's important, right? So you have a fundamental case, a technical case, and assets that completely underallocated to. Commodities have underperformed stocks for years and years. So we like the whole complex. So we're exposed to precious metals, precious metal miners, copper miners, agriculture, energy, really the entire space. And when we look at our portfolio, our model portfolio over the last month or so, commodities are right up there. 3 of the 5 best performers are in the commodity space. And even oil. Sure, oil pulled back given the what's going on in the Middle East, the truce, et cetera. But it's held up very, very well, given all the supply that is supposedly coming on from OPEC Plus and others. So if we're right on global growth, we're right on emerging markets being able to support their growth cycle, then energy should do fine. So we see the whole space as an area of opportunity. And just as an example, we have been, to be frank, close to double weighted commodities versus the benchmark that we track ourselves with.
Hey, Jay, always appreciate the update. Thank you, sir. It's good to see you again. Jay Pawlowski there of TPW Advisory. I have to say, crude is a trade for the brave, at least over the past few days. But the overall framework for Jay at the moment is Germany's got the space to stimulate, weak dollar story, strong euro, and play commodities because we're going to see a global economy rebound, and he's not even thinking about tariffs.
Yeah, he said markets have priced it in. And I'm thinking, what is it? Is it no retaliation? Is it a baseline 10% tariff? And then it starts raising this question, does it mean that people are writing off the possibility of any kind of re-escalation of trade concerns? Is there a sense that President Trump always de-escalates and that will be the ostensible outcome at a time when I'm old enough to remember April 2nd, when that roiled markets in a profound way and caused a lot of institutional investors who are long-standing practitioners to say this undermines a lot of their baseline expectations. So I don't know. I think that's a very interesting take.
Not even 3 months ago. Equity futures right now, unreal, isn't it? Equity futures on the S&P just about unchanged. Let's give you an update on stories elsewhere this morning, particularly an update here in New York City with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. We start with a major surprise, as you said. Sohran Mamdani is poised to win the Democratic nomination for New York City's mayoral race. This after a commanding win in the first round of voting. The New York State Assemblyman is running on a progressive platform amplified by social media and policies like vowing to freeze rents and making buses free. Former New York Governor Andrew Cuomo has conceded to his upstart rival. And we turn to another shocker, President Donald Trump surprising oil traders and even his own officials yesterday when he announced that China can continue to purchase oil from Iran, a move that potentially undermines years of U.S. sanctions on Tehran aimed at cutting the regime's main source of revenue by making its top export off limits. And a check on shares of FedEx. They are falling 5.7% in the pre-market after the delivery company forecast weaker than expected profit for the current quarter. And although it typically provides a full year forecast, FedEx said it would only share its outlook for the current quarter due to the uncertain global demand environment. That's your Bloomberg Brief. John?
Yahara, thank you. Did China ever stop buying Iranian crude? And Rita Sen's going to join us in about 15 minutes to have that conversation. Up next on the program, virtual obliteration.
Mr. President, what's your reaction to the intelligence reports saying that the Iranian nuclear sites were only partially devastated?
We hear it was obliteration. It was a virtual obliteration.
Up next on the program, the former Trump Deputy National Security Advisor, Victoria Coates. From New York City this morning, good morning.
brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The volatility over the past few months has been absolutely phenomenal. The Nasdaq 100 is back at all-time highs, record highs, for the first time since February. But just think about where we've been. A 30% rally off the April 8 low after a 20% plus decline off the previous high. This morning, equity futures just about unchanged on the Nasdaq 100. On the S&P 500, we're going absolutely nowhere. Under surveillance this morning, virtual obliteration.
Mr. President, what's your reaction to the intelligence reports saying that the Iranian nuclear sites were only partially devastated?
They don't know. I mean, they did a report. We hear it was obliteration. It was a virtual obliteration. When you take a look at the ground above, don't forget, the flame is all underground. But everything above, if you look at the before and the after picture, everything above is burned black.
Here's the latest this morning. President Trump pushing back on New York Times reporting that his airstrikes against Iran had limited impact on its nuclear program. Trump posting on Truth Social overnight the nuclear sites in Iran are completely destroyed. To discuss, the former Trump Deputy National Security Advisor, Victoria Coates, joins us now for more. Victoria, welcome to the program. It's good to get your input on this and your experience. For people not familiar with it, could you share with us how long typically it takes to get the kind of battle damage assessment in our hands that we would actually have a high degree of confidence in?
Well, good morning, John. Good to be with you. This can take weeks, if not months, to get a full accounting of what happened. Because bear in mind, the Iranians are not sharing information freely with the rest of the world on what was done to them last Saturday night. And furthermore, as the president said, these sites are underground. So it's not something you can just look at from above. So we're going to be doing a lot of different things to try to gather this information, including watching what the Iranians do. And this is the critical thing. Even if the damage was less than we had hoped, and I don't think it is. I really think we should take our information from the chairman of the Joint Chiefs of Staff, maybe not the New York Times. And Chairman Kaine said he thinks the damage was quite significant. But even if it wasn't, what was demonstrated by the president's action and Israeli actions is we can go back any time. The Iranians can't defend themselves from us, and so if there wasn't sufficient damage done in the first run, we can take another shot at it.
Victoria, there is some speculation that that type of threat is going to force any kind of nuclear program, an enrichment program, underground into secret locations that are out of sight. And I wonder how crucial or how much of a part of some of the negotiations of the ceasefire that President Trump orchestrated between Iran and Israel included ongoing oversight not only by the IAEA, but by U.S. nuclear specialists.
Well, Lisa, I think that's a conversation to come. I mean, the ceasefire was very much about the immediate military hostilities, primarily between Israel and Iran, coming to a close. But these are the discussions we have to have, and that's why the leverage that the president has gained over the last couple of weeks and Israel has gained over the last couple of weeks is so critical. If we were having this conversation 2 Wednesdays ago, I mean, you almost would say, gee, the Iranians have the upper hand here. Now they are completely exposed, completely vulnerable. They're going to need to make concessions to get back to the table rather than the other way around. So the conversations about how they are going to constitute any civil nuclear program they may wish to have going forward are going to be a lot tougher on them than they would have been.
With all due respect, I mean, one of the arguments has been that if they just preserve their regime, they are able to continue with some of their goals, including the enrichment of uranium, without the oversight. Are you saying that this isn't an imminent concern, that this isn't something that you foresee being an issue for the next number of months, and that's something that they can get to later, not now?
Well, no, if I understand your question correctly, I mean, this issue of how we're going to structure oversight of the Iranian nuclear program was not something that was dealt with in the ceasefire. And it wouldn't have been. That was a military arrangement. That is something that is a technical negotiation, I assume will be overseen by Steve Witkoff and his team going forward. But the president is in a much stronger position now to enforce his red lines of no enrichment. Witkoff reinforced that last night in an interview as a bottom line for the administration, that they were not going to give at all on enrichment, and they don't have to now. So I think that is the discussion that will come up. As to regime survival, that's really up to the Iranian people, rather. That was not the mission of the American administration in here to change the Iranian regime. I mean, I have my views on them. I wouldn't be sad if the Iranian people made that decision, but at the same time, the point of this exercise was to degrade the nuclear program, and in my opinion, that was achieved.
The president is certainly in a strong position at this NATO summit. In the meantime, China has been very quiet. Russia has also been quiet. How do you think about the consequences beyond Iran of the strikes over the weekend?
Yes, the collusion between China, Russia, Iran, and North Korea that took place during the Biden administration was one of the big strategic kind of changes that the incoming Trump administration had to deal with. We didn't look at it that way during the first term. So that has been a major problem, and China gaining strength from those kind of, you call them vassal states, that's hard to call them allies. And the weakness in that relationship has been really exposed because China really doesn't have the capacity to do the kind of force projection that the United States demonstrated Saturday night. That's really ours alone. Neither does Russia. And Russia's also lost their bases in Syria. So their ability to help Iran is fairly limited, and they don't seem eager to do what they might even be able to do. And on top of that, you have this extremely strong NATO summit this week for President Trump, a real show of unity in the transatlantic alliance, which he was supposed to be destroying, but instead has made stronger than it's been in decades. So I think this is a very powerful moment for the president, a very strong message to both China and Russia that the United States is much stronger than we have been.
It's well framed. Victoria, it's good to get your thoughts as always. Victoria Coates there, the former Trump Deputy National Security Advisor. Worth reflecting on where we were in the president's first term when he went to these NATO summits and told them they had to do more. When he was laughed out the room at various places for criticizing countries like Germany. And then to see that image of it sitting there with Mark Rutte, the former Dutch Prime Minister, now NATO Secretary General, essentially telling him, you were right and we're changing.
And with all of the members saying we're changing because of existential threats, because you were right, not necessarily because you are forcing us to do so.
Up next on the program, Amrita Sen of Energy Aspects, as President Trump says China can buy Iranian crude.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Coming into Wednesday, our record highs on the S&P 500 this morning. Equity futures just about unchanged. On the Nasdaq 100, we're positive by 0.1%. 3 hours away from the opening bell. Let's get you some morning movers with Danny Berger. Hey, Danny.
Hey, John. One of the biggest gainers in the pre-market this morning is Stellantis, getting an upgrade from Jefferies. Jefferies saying that this company is starting the process of turning around when it comes to Europe and the U.S., North America. It's doing a good job refreshing its lineup, renewing that, and helping with some of their stocking issues. Also saying the new CEO has had plenty of time to come up with a viable plan and hit the ground running as he takes the helm. So those shares up 3 3/4%. To the downside this morning, there is QXO. This is a building supplies company. They're hoping to raise $2 billion via a share sale, a dilutive event. Therefore, you see shares declining nearly 6%. It's raising that money in part should it want to fund a takeover bid. Currently bidding for GMS, another building supplies maker, but Home Depot also reportedly in the market for that one too, so might get something of a bidding war. Finally, wrapping things up with FedEx, who had earnings after the bell yesterday. A tough set of results when it came to its forecast for this current quarter. The profit missed estimates. It also usually gives a yearly forecast. It declined to do so this time. The CEO citing the uncertain environment and the U.S. and China shipments that deteriorated sharply. It is their most profitable route. And of course, given the tariffs, given the uncertainty around that, that has fallen off of a cliff. So shares down over 5.5%, John.
Danny, great work. As always, more from Danny in the next hour. On our radar this morning, our top story, President Donald Trump pushing back on reports the U.S. strikes on Iran likely only set the nuclear program back a couple of months, saying they are, quote, completely destroyed.
And the president's team pushing back harshly on that, saying, according to them, things have been more obliterated than that, or virtually obliterated. Victoria Coates was just on talking about how she does actually think that this did set the program back significantly. The big question now, and this really is the focus of markets and of strategists, how much did this actually thwart their efforts? And frankly, how much can it get them back to the negotiating table to get some oversight in a consistent way as we try to figure out a path forward?
I think we have to stress, and you mentioned Victoria, she did a great job of this, it takes time, weeks, maybe even longer, to have a full battle damage assessment in your hands that you can have a high degree of confidence in. And the Pentagon report that a lot of media outlets are citing is an initial assessment which the Pentagon itself wouldn't have a high degree of confidence in. And that's something that we should highlight this morning. It's not the president versus the Pentagon. It's an initial assessment, and it's going to take time to have something much deeper, more thoughtful, much clearer about what's happened here.
And these are details on our larger objective, which we've heard from both the president, the IAEA, which is how to create some sort of new oversight regime. There also is a question, even if there is disagreement over how much damage was actually inflicted on this program, what this does diplomatically heading into NATO and what this does in terms of a sort of deterrence around the world doesn't abnegate that. I really do still think this shows that the focus very much is on what kind of oversight there is in this nuclear enrichment program.
Yeah, what's super concerning for me and for you too, and I think for Anne-Marie as well, we don't know where the highly enriched uranium is, and no one seems to know.
There's 400 kilograms or 880 pounds of highly enriched uranium at 60%. It doesn't take very much to get it to 90%. There is concern about centrifuges that have been outside of the reach or the oversight of the IAEA, and this is what's got a lot of people concerned. Could there be dirty bombs? Could there be some other type of weapon that gets created, and how do you prevent that from happening?
AMH at the NATO summit this morning. We'll catch up with her again in about 40 minutes from now. Need to turn to the domestic agenda here in the United States. Treasury Secretary Scott Bessent saying House and Senate Republicans will reach a SALT deal over the next 2 days, saying he thinks senators can begin the multi-day voting process on the package by Friday.
Yeah, with pressure from President Trump telling senators in a Truth Social post today, or overnight, lock yourself in a room if you must, don't go home and get the deal done this week. How much is this deal sort of the first step before some of the tariffs get negotiated? And this is sort of the 1-2 punch. How important is it to get that July 4th vote before you can even begin to solidify what gets agreed on or not with the tariff discussion? And I think that that's sort of the sequencing that they're trying to get out there.
I couldn't agree more. The interplay between those two deadlines is very interesting, even though they are self-imposed deadlines. Some news here in New York City. Zohran Mamdani delivering a stunning political upset. The 33-year-old Democratic socialist is the presumptive winner of the Democratic primary for mayor of New York City. The election is set to take place on November 4th.
So there's a lot to say here. I will go very narrow to say that this highlights the fight for the soul of the Democratic Party in terms of the more centrist versus the more progressive, more socialist type of wing. It also highlights the social media presence and how much that has changed the narrative in a significant way and how different candidates game the ranking system. A lot of people thought that the ranking system would actually make the primaries more fair or more sort of accurate in terms of reflecting people's will. And what Mamdani did was he entered into partnerships or pacts with other candidates to try to get some sort of ranking that was beneficial to him. Look, there's a change strategy right now with social media and with some of the new voting rubrics.
What's the cheat guide for not offering your opinion? Just cite someone else, right? I'll cite Gary Kasparov. Socialism is like polio. It comes back when people forget about the horrible damage it did last time. His opinion, of course, and not mine. Let's turn to crude. President Trump surprising traders by posting on Truth Social that China can continue purchasing oil from Iran. Brent crude coming off the biggest two-day decline since 2022. And Rita Sen of Energy Aspects joins us now for more. And Rita, I want to get to this line that's coming from the president. Can you help me answer this? When did China stop buying Iranian crude?
I think that's a question you might have to ask him, but basically there's been a lot of confusion since that statement that, to your point, China hasn't stopped buying Iranian crude. China is still buying 1.5 to 1.7 million barrels per day of Iranian crude. There was maximum pressure under the first Trump administration, which did get exports down to 400,000, but then since the Biden administration took office, it's been kind of creeping up, and then election and high oil prices were an issue, so the administration turned a blind eye. So yesterday, when the kind of tweet came out, everybody was like, okay, does this mean sanctions are being lifted? Anyway, the point being, since then, the White House has clarified this is not a change in sanctions policy. However, we would also say this does mean that there's not going to be a tightening in sanctions either, i.e. status quo prevails. China continues to buy about 1.5 to 1.7 million barrels per day of Iranian oil.
Just build on some of those numbers, Amrita. What is that of a share of total Iranian production? The amount of barrels that are on the market right now already?
So Iranian production is about 3.5-ish million barrels per day, oscillates a bit between 3.5, 3.7. All their exports, whatever they are exporting, goes to China, and the rest of it is consumed domestically.
Which is the reason why this is such a big potential buyer and why this is such a big deal for the oil markets in terms of who else would supply that and what this would mean for the price. Does this suggest that this is part of the ongoing negotiation, that the goal is to keep oil prices low, and to bet against that is frankly a fool's errand?
I would say that's exactly how the market's interpreting it. You know, when we're talking to our clients, the general impression is that, look, we know President Trump wants low oil prices. He's going to get it one way or the other, right? So if that means that, especially because we were in the high 70s not that long ago, that means that we're not going to see tightening of sanctions. And I think traders are very much focused on that, the fact that he wants low oil prices, especially ahead of the bill. And he has been saying that consistently, right, that he doesn't want prices to go up. Inflation is a big concern. So that's where I think the market kind of that's why the market reacted the way it did in terms of selling it so hard. But at least since then, it's been clarification that sanctions are still in place. This is China avoiding sanctions and the U.S. not doing anything about it. But yes, it does mean that there's more oil in the market than otherwise would be.
But from a trading perspective, Amrita, doesn't this act as a cautionary tale to anyone who tries to expect oil prices to rally in any kind of material way? That there is a Trump put, in essence, on that there is a willingness to navigate the geopolitical situation in a way that brings down oil prices one way or another. So why would you bet on $100 crude or $90 a crude, which is the worst case scenario that so many people are talking about?
Yeah, no, I completely agree. And I've been surprised that people have been calling for that. You know, we've never, I mean, I've been with you guys saying that, you know, in 70 and 80 is not going to be sustainable given where the balances are. And, you know, people are looking towards those bills that we are also predicting from Q4 onwards. I think the challenge, of course, is that this is not a market you can short either, because these risks and the geopolitical risks are real. Fundamentally, though, the right here, right now remains very, very tight. Stocks are very tight. Cushing, just look at that. It's super low. So this is also equally hard to short. But on a macro level, your point is very valid that Trump and his policies will somehow make sure that prices don't run away too quickly. It does mean that generally there's a bias towards the lower side.
Amrita, can we just finish up by asking you what the demand side looks like at the moment? I think economists are really scratching their heads at the moment about where the economy is, particularly here in the United States. We're trying to gauge where we are, speaking to company executives. What's your take, just looking through the prism of crude oil?
Yeah, I mean, it's not great, but it's not dire either. And I think we're kind of in between. Our demand number is between 700 to 800,000 barrels per day growth year on year. Again, the U.S. is actually doing okay. Europe is doing very well. China, not so much. And I think that's kind of the spectrum. We don't think this is a recessionary environment in the sense of what people were expecting when tariff fears were at its peak. But it's also not an environment where global growth is humming along very nicely.
Amrita Sen of Energy Aspects. Amrita, thank you for the update and the clarity there on the Iranian crude that's already going to China and what difference it will make if they just permit it this time.
Well, if they just permit it this time, first of all, it is possibly a loosening up in sanctions. But to your point, it just means that that constraint on oil supplies, that some of the offset from Iranian supplies that would be taken back if there were sanctions put on, that won't have to be made up. So you can continue with everything status quo.
Javier Blas was talking about this earlier on this morning. These are sanctions that just haven't been enforced for a long, long time. This Iranian crude, these barrels have been on the market now for years and years.
Yeah, so how much of a negotiating chip is this? And how much did this actually participate in the discussions that they had to negotiate a ceasefire? The idea of people not knowing about it, do they have to know? Or is this just basically de facto policy as has been written?
What a round trip we've seen on crude oil, Brent and WTI over the past few days. That's the situation with commodities. Let's get you an update on stories elsewhere this morning. With your Bloomberg Brief, here's Yahara Anand. Hey, Yahara.
Hi, John. We start with some other China news. Officials there are confident they can build the consumer sector into a key engine of the economy. Chinese Premier Li Qiang says China is positioned to have its economy evolve into a mega-sized consumer powerhouse on top of its strength as a manufacturing giant. For now, the reality is China's economy continues to struggle with a weak consumer. Meanwhile, the U.S. and Mexico are negotiating a quota system to reduce tariffs on some steel imports. The proposed quota would be limited to a certain volume of imports and would exempt that amount from the 50% tariff. However, steel would still be subject to a 10% baseline charge. And Hims & Hers is standing firm after Novo Nordisk abruptly ended its distribution partnership over what it called deceptive marketing. In his first interview since the breakup, Hims CEO Andrew Dedham says they won't back down from offering cheap weight loss shots. Shares are up about 0.7%, but they had their worst single-day drop earlier this week on news of the breakup. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next on the program, well positioned to wait.
For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
Up next on the programme, we'll get the thoughts of Greg Deco of EY, and we'll catch up with Mike McKee, who sat through the whole thing yesterday, and will do exactly the same thing again today, so you don't have to. Live from New York, this is Bloomberg.
Incidence of cancer, which is to say people getting it, is higher than it was 20 or 30 or 40 years ago. Is that because detection is better than it used to be?
All right, so the dirty secret is we have no idea. We don't collect data well in the United States. What we do know is that there's not a dramatic rise in cancer in the United States, but what we are seeing is a troubling trend is younger people are getting more cancers. That's real. We have no idea why, but we are seeing younger people, more colon cancer, more breast cancer, and other cancers in younger individuals, 20, 30, 40-year-olds, that we never used to see.
What do you think could possibly be the cause? I assume pollution or the environment in some ways?
We assume it's either something in the environment, we assume it's diet, it's ultra-processed foods, it's microplastics, it's changes in the microbiome. We really don't know.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Equity futures right now in the S&P very close to all-time highs, at record highs on the Nasdaq 100 this morning. Equity futures just about unchanged and positive 0.1% on the Nasdaq at the moment. Under surveillance this morning, well positioned to wait.
Policy changes continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Increases in tariffs this year are likely to push up prices and weigh on economic activity. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
It's the latest this morning. Fed Chair Jay Powell back on Capitol Hill today after reiterating his wait-and-see stance just yesterday. Powell emphasizing that many paths are possible. Bloomberg's Mike McKee joins us now for more. Good morning, Mike. You sat through it all. What were the highlights?
Well, I'm not sure there were highlights, John. It was mostly the same show that we have seen for a while from Jay Powell. I saw the dress rehearsal at the press conference last week, And he took the same lyrics to Broadway yesterday. The Fed's argument is we don't have enough information yet, so we're going to sit and wait. And we will cut rates at some point, but it has to be when the data tell us it is a good idea. That has kind of clashed with what the president's view is, and the White House was looking for somebody, according to Mr. Trump's tweets, to take down the numbskull yesterday, but nobody really did. Everybody was pretty polite, although there were questions about the new sort of predictions from Chris Waller and Mickey Bowman suggesting that maybe they could cut rates in July. That didn't go over well with the rest of the Fed, it seems, because we heard from a lot of Fed officials, including Mr. Powell yesterday, who said that's not going to happen, basically, because we're not there yet. We heard from Powell, Williams, Barr, Goolsbee, and Schmidt, Bostic, Hammack, Daly, and Kashkari. They've all spoken since the Fed meeting, and they've all said, we need more information. And that's what the basic takeaway should be from this, is the Fed has not changed its position. It is going to be waiting. July is a very long shot, maybe September, and we don't know what's going to happen because we got a lot of news on tariffs to come yet.
Mike McKee, looking forward to day two. You are, I'm sure. Mike McKee, thank you, sir. If the president wanted a grilling just yesterday, I think you realized you weren't going to get it when they started asking questions about what is demand and what is supply.
They were actually sticking to the economic backdrop. I will say, though, that you did see a huge surge in the expectation for a September rate cut after that testimony. So there was definitely something that made people feel dovish.
The door is ajar, apparently. Greg Dacko of EY writing this. A July rate cut is in play, but the odds are low. September is more plausible given expected labour market erosion and tariff-driven demand destruction. Greg joins us now for more. Greg, good morning. Good to see you.
How are you?
If April 2nd didn't happen, would they be cutting interest rates already?
Oh, yeah. I think that was the main element in the testimony. It was that Fed Chair Powell mentioned that had there not been the tariff and the tariff-related uncertainty, the Fed would have continued on its cutting cycle. And that's really a reflection of where monetary policy stands right now. Fed Chair Powell has noted on a number of occasions that monetary policy is slightly restrictive. They probably want to get closer to neutral, given what we're seeing in terms of the slowdown in labor market momentum and the gradual erosion of final demand. In that type of environment, they don't want to maintain excessively restrictive monetary policy.
Based on that, it sounds like they're tariff dependent. So how dependent are they on July 9th and the outcome of the trade negotiations?
I think we're all dependent on July 9th and then August 10th, which is the date at which the 90-day suspension of the reduction in the China tariffs comes to an end as well. So those two dates are going to be critical dates over the course of the summer, because should there be a re-augmentation of these tariffs back to levels that we experienced in early April, then we're likely to see a much faster set of shocks, essentially, that lead to demand erosion, a slowdown in the labor market that's faster than what we're experiencing, and then the recession odds start to increase. And let's not forget, there's another date in play. We have this self-imposed July 4th date for a tax bill to be passed. That is, again, another deadline that we have to pay attention to, and this interplay between tariffs and taxes is going to be essential over the summer in driving the economy going forward.
There's been a perennial question, when do we have enough data to be actually forward-looking and not backward-looking? I mean, this continues to be a conversation not just about the level of tariffs, but what companies and consumers do with them.
Well, the thing is that the Fed has been excessively data dependent, in our opinion. We've seen that for the past 18 months, essentially, the Fed has been only relying on economic data. In this environment where there's tremendous policy uncertainty when it comes to trade, when it comes to taxes, when it comes to immigration and regulation, the Fed has essentially hidden behind the data and said, we're going to wait to see more data until we make a decision. It serves them well in this environment, but they also have to be a little bit more forward-looking. In my opinion, there is a window for the Fed to be easing, given that second-round effects from the inflation side of the picture are not likely to materialize in a weaker labor market. And what I mean by that is that for businesses that are facing these higher costs of goods sold, they're not necessarily going to allow for higher wage growth, and therefore there isn't going to be more persistence in terms of inflation. This is in line with the Waller argument.
This is reason why a number of notes after Powell's testimony said this just dials up the attention that much more to the unemployment rate.
Yes.
Not necessarily the headline numbers, but the unemployment rate more than inflation, because ultimately that will determine how sticky any tariff-related inflation could be. Do you agree with that? What is that sort of tipping point that would put July back on the table for the Fed?
The labor market in general is very important. I would be very cautious with just focusing on the unemployment rate, because the unemployment rate is a fraction. It's the number of people that are looking for a job relative to the overall labor force participation. And we know that labor force participation is under tremendous pressure because of reduced immigration. So the unemployment rate may not be proportional. The increase in the unemployment rate may not be proportional to the slowdown in economic activity and the slowdown in labor market momentum, because both labor supply and labor demand are being affected. So I'd be very cautious just focusing on the unemployment rate. I would focus on the hiring rate, which has been at a decade low. I would focus on initial claims for unemployment, which are currently rising. I would focus on job cut announcements that are up 50% relative to last year. Those are all better gauges as to the dynamics in terms of the labor market and where it's likely to head over the course of the next few months.
How instructive was the so-called labor differential in the consumer confidence numbers yesterday?
It's another measure of where consumers feel the labor market is headed. And why that is important is because we're not just focusing on what businesses are doing, but also what consumers are likely to do. And consumers have been excessively pessimistic about the outlook for the past 3 years, essentially. That's not been in line with how the economy has been doing and how they've been spending. What we're now seeing is increasing concerns about income trends and about labor market developments. And we know those are the key pillars to consumer spending activity. So I tend to put more weight on these indicators, these gauges of how people are expecting the labor market to evolve and income trends to evolve, because that will directly affect how they spend.
This begs the question then, if the potential for second-round inflation effects are low,
yeah,
even if the uncertainty around tariffs is high, why don't you reduce interest rates anyway?
I've been arguing for the Fed to actually proceed with rate cuts because the economy is softening, and because if you want monetary policy to be forward-looking and anticipate any potential slowdown in economic activity, then you should actually be considering further easing monetary policy. Let's not forget, if you look at the real Fed funds rate, it's currently around 2%. If you compare that with other economies around the world, they're either back down to 0% when it comes to real policy interest rates, or they're actually below that. The Fed is alone, along with the Bank of England, with a slightly restrictive monetary policy stance, and I think there is room to accommodate without necessarily risking inflation expectations becoming unanchored, as has been the key risk that the Fed and Fed Chair Powell have been highlighting over the course of the last few weeks.
Greg, super sharp analysis as always. Great deco there of EY. Lisa, to your point, this is Governor Waller's argument at the moment, his and others.
And you pointed to the Conference Board survey yesterday, and I think we really have to highlight that. The number of consumers, the share of consumers who said that jobs are plentiful in this survey dropped to below 30%, and that is the lowest going back 4 years. It raises a question, how are we measuring a labor market that's highly in flux, with a number of people exiting stage left, whether it's immigration or whether it's retirements, and it's an increasingly difficult thing to do.
What did the Treasury Secretary call this? Tariff derangement syndrome. Isn't that what he called it? Is that Neil Dutta's line?
I don't remember exactly who coined that. I will give some sort of credit when I look it up, but there is this question here about whether it's political or whether they're conditioned by their experience of the past of getting inflation wrong. And that, I think, is what a lot of people are discussing. At the same time, how long are they going to wait before they have to pull the trigger?
The scars of 21-22 run deep, without a doubt, Bramo, without a doubt. Looking ahead to claims. Claims tomorrow, we're looking for jobless claims of 243. That's the estimate in our survey at the moment. The previous week, 245. Up next on the programme, Stephen Orth of Federated, John Lieber of Eurasia Group, the former Chief of Staff to Vice President Mike Pence, Mark Short, and Tina Adatia of Goldman Sachs Asset Management. Live from New York, the second hour of Bloomberg Surveillance. Up next.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human beings, for the world.
Flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
The only way you can end Iran's nuclear program is through a deal.
Tells the world that the United States is pushing for diplomacy.
Peace comes through strength, and that's been demonstrated by President Trump.
Does not want to get involved in wars.
If they don't come to the negotiating table, they're going to continue to see their regime and their capabilities weakened.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
So hot, I keep forgetting what day it is. Wednesday. Keep checking. I've checked 3 times already in the last 60 minutes.
Well, I'm telling you, it's frying my brain too.
Wednesday. Coming into Wednesday, within 1% of all-time highs on the S&P 500, at record highs. On the NASDAQ 100, your scores look like this morning, totally unchanged on both the S&P and on the NASDAQ. Day 1 on Capitol Hill for the Fed chair yesterday. Day 2 later on this morning, this time in front of the Senate Banking Committee. Look out for that at 10 a.m. Eastern Time. Look out for this as well later on this morning. The NATO summit, 9 a.m. The President of the United States in a news conference.
With a very different tone than 4 years ago, or I should say 8 years ago, when he was in the room with people who really disliked him. Now you've got people who are saying thank you for pushing us to spend. A real question here about how much this actually brings allies together and how much this is just a changed world. I was struck by one of the leaders, Alexander Stubb of Finland, who came out and said, this is a new world order where you have to be more transactional and Western dominance is over. So this is the type of rhetoric coming out of the NATO meeting right now.
Anne-Marie's on the ground at the NATO summit. We'll catch up with her in about 15 minutes' time. Need to focus on the data as well. Tomorrow, jobless claims. Day 2 for the chairman later on this morning. On day 1, no real daylight between what he said last week and what he said yesterday. But people believe the door might be slightly open for a move in July?
So there might be no daylight between what he said on Wednesday and what he said yesterday, and yet what you look at in terms of the odds of a Fed rate cut in September went from about 60% on Wednesday after that Fed conference to about 84% today. In terms of an almost near certainty about a September rate cut, the odds of a July rate cut have gone up, but it seems like there is a coalescing, aside from two members of the Federal Reserve, around the idea that they need a number of more data prints before they feel the comfort of actually cutting rates.
They need one data point. It's July 9th. It's July 9th because that's a self-imposed deadline for the trade story, and then again in August with China, because they've all but acknowledged at this point that if April 2nd didn't happen, they'd be cutting rates already.
Yeah, he said the effects of tariffs will depend, among other things, on their ultimate level. I mean, this is for Jerome Powell yesterday in his testimony, essentially saying we are dependent on exactly what that level is. What if we don't get clarity? Are they saying that they don't have enough information until, say, December or October? And this is sort of the question. At what point do you have enough information to take a look at the disinflation that the market is sort of sniffing out and say, all right, we got to reflect this?
Some people think they've got it already. We've talked about the various economists who believe that. Greg Daco of EY was just on the program, pointing to a labour market that he does not believe is sufficiently strong enough to worry about second-round inflation effects. So why bother worrying about the inflation effect of tariffs that we might or might not get? Focus on one thing, look at the labour market. Does it warrant a reduction or not? Given the disinflationary trend we've already witnessed.
You know, there are a number of people, and I would say an increasing number of people coalescing around this. It is predicated on the idea of a de-escalation theory, the idea that President Trump will be inclined to de-escalate on all fronts. We saw, for example, oil prices surge in the heels of what was going on in the Middle East. De-escalation, disinflation. Do we see a de-escalation with some of the tariff discussion that also leads to that less inflationary environment? And this really is, I think, sort of the debate between markets and what the Fed is seeing as possible.
We'll continue to have that debate on this program. Equity futures at the moment on the S&P, marginally positive, but just about unchanged. Coming up on the program, we'll catch up with Steve Orth of Federated as a risk-on mood grips markets. John Lieber of Eurasia Group on disputing reports on damage in Iran, and the former Chief of Staff to Vice President Mike Pence. Mark Short on Trump's tax bill. We begin this hour with stock steady after hitting fresh all-time highs. The Nasdaq notching its first record close since February. Stephen Orth of Federated staying bullish long-term, writing, while you are peering out your window at the present violent storm passing overhead, try to look a little beyond it, or better, look to the end of the rainbow. Steve joins us now for more. Steve, good morning.
Morning.
I love that. Good morning. You know, with rainbow and sunshine. Walk me through it. What's hopeful about this moment for you?
Yeah, look, the news cycle is all over the place. But let's just look out 6 months or even 12 months from now where we're going to be. The tariff discussions are going to be behind us. We think we're roughly going to be at 10% on a 30% of the U.S. economy, with half of that being paid by the exporters. So very little impact. The tax bill is going to be passed, probably by July 4th. The deregulation effects on increased investment by U.S. companies because higher after-tax returns on investment going to be in place. Economy is going to be growing pretty quickly as a result. All the uncertainty that's been holding people back in the first half of the year here is going to be off the table. Companies are going to be able to invest. AI is going to really be starting to work in terms of productivity, which is softening up the labor market. And, inflation is going to be running 2 to 2.5%. The Fed is sitting here at 4%. So we're 150 basis points at least above where they're going to land. So we've got 6 cuts in front of us. I don't know if it starts in July or September. I don't really care. It's going lower. That's pretty equity market friendly. We've got earnings at 340 out in 27. We think the multiple on the market should be about 22 because half the market is in big cash flow generating asset-light companies, which is different than people's heuristics on what the market should trade at. So you add it all up and we're heading higher. That's kind of where we are.
Let's unpack some pieces of that. The first piece, the trade piece. I think you said something like half of it's going to be paid for by the exporters. So this is important. By definition, of course, and we repeat this all the time, so allow me to go through it all. The importer pays the tax, they pay the tariff, but how the cost is shared is the real debate. Exporter, importer, does it go through margins? Does the consumer have to take on it? All of it. What gives you the confidence that half of it's going to be paid for by the exporter?
Well, historically, that's been the case. When we did it the last time around in Trump 1.0, that's kind of what we saw. And it kind of depends on the exporters, but certainly on exporters, sending cheap cotton T-shirts and sneakers to us, they have very little power in the agreement. So they end up having to eat some of it. And some of it just gets eaten up by productivity gains.
So why do you see inflation? Do you find that there is a contradiction between the idea that inflation is going to go back down to the Fed's target, already is there, or close to it, at the same time that the labor market remains resilient? I mean, how much room are you letting in there that there is going to be a weakening in the backdrop for labor?
So, Lisa, one of the things you said earlier this morning, I was watching the show, was this idea that the Fed could cut because they can cut as opposed they need to cut. I think you're on to something there, right? And this is what we've been saying, that if the inflation numbers come down, the Fed can cut. We've never seen them cutting because the economy is weakening substantially. But the more resistant they've been, and we call them data resistant, the more they're causing the economy to soften up. So at some point, they're going to get pushed into cutting. We don't see a recession anywhere near us here, but the labor market is softening up, so they're going to have to cut.
Well, it raises a really good point. And yesterday, people were saying that the reason why people were pricing in a greater degree of rate cuts was because of disinflation, not because of necessarily weakening in the underlying economy.
Yeah.
What's the threshold where the Fed has to cut by a certain time, or else you have to start worrying about a hard landing, a further deterioration of the U.S. economy?
Oh, goodness gracious. I mean, if they don't cut by the end of the year, I think this Fed, look, they're not that data resistant. But by September, once we get the tariff discussions behind us, they'll have very little excuse not to cut. And the inflation numbers are going to be very soft. We're already running around 2.5%. So they're way above the inflation rate. I don't know. I'd find it stunning if they don't start cutting by September, honestly.
So let's talk about the rainbows. You said that you have your target for the end of this year, 6,500, and potentially 7,000 for 2026. Not only is that realistic, but potentially undershooting the potential of this market. It might not be bullish enough. How much does this fly in the face of some of the U.S. exceptionalism discussions? I'll get it out of my mouth.
It's the heat.
What?
It's the 35-degree heat.
Oh,
triple digits.
I mean,
it
honestly,
does it to you.
It's warm out there.
I will just tell you, yesterday, I don't know about you, I know you like warmth. That was another level.
I love the
warmth.
heat, but I was in the heat
God.
for a little while, and then I came downstairs and I sat on the PC and forgot the password.
So if I mispronounced something,
Mrs. Farrow
Stay hydrated, John,
and ask her for the password to the
Stay
PC.
hydrated.
I so relate to that, but I just wonder, how much you buy into the idea that this is going to be the U.S. Really instead of everybody else, or whether this is everybody benefiting from a really constructive backdrop.
We think the whole market looks pretty good, actually. We're actually overweight emerging markets. I saw you had my friend Jay Pulaski on earlier this morning, and I agree with him on that. I'm not as optimistic about Europe, and they've got a lot of defense spending to do, which is going to cut back social spending, and we're going to be the beneficiaries of some of that because we're the major manufacturers of defense equipment. So, I see the U.S. as continuing to lead us here. We've got the big companies that are leading this bull, which is AI-related, technology-related. But the worst world is coming along, and it's a lot cheaper, especially emerging markets. And if you look at the world and you say to yourself, who else has got tech besides the U.S., it's actually China. So, they're a big piece of the emerging market index, and you can buy those stocks a lot cheaper than here. So we like EM here.
One quick question. There is one point of tension, I think, between you and Jay. You believe the exporters will pay the tariffs, which is another way of saying you believe they're going to have to take a hit on margins. Now, I'm not sure if that's Jay's view of the world. How can you be overweight or even like international equities if you believe they're going to have to burden a lot of the tariffs?
Yeah, I think that's a fair point. I don't think they're going to bear all the tariff, Jonathan. I think some of it. And, there's a lot of companies overseas that are not necessarily exporters into the U.S. Those aren't necessarily the companies that we would be buying here.
That's fair.
Yeah.
Stick to Chinese tech.
Chinese tech looks pretty interesting to us.
How interesting? Was it the DeepSeek revelations of earlier this year, or is there something else going on there?
I think that was a tremor in the market there. But we've been, we were long, we went overweight EM back in November. So we were a little bit early, frankly. So it was before DeepSeek, for what it's worth. We weren't predicting DeepSeek, but that probably helps us on that call.
Steve, appreciate your time.
Thank you, Jonathan.
Just bullish and right all the time at the moment.
at the moment, John.
At the moment? Okay. I'm not trying to jinx this for you, okay? Just trying to give you credit. Stephen North there of Federated. Some people believe still, April 2nd, all these things going on, that the DeepSeek revelation at the start of the year is still the biggest story of 25.
Yeah, and there have been other stories about how there are many deep seeks out there that are coming to the fore. I just want to set the record straight for those of you who live in the United States. 35 degrees is responding to Celsius
I
metrics.
said triple digits as well, didn't I?
Yes, but in Fahrenheit, we think about 101 and the humidity, which it felt like 115.
Okay.
Yeah, he said it, but I'm
Got
just
a transatlantic
saying,
audience. Bit for everyone.
I'm just, putting it, the numbers.
Brother.
It's hot anytime.
It's
Yes,
hot. Confirmation of that, all right? Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. President Trump expressed support for NATO as he arrives at the summit earlier this morning. Trump telling Secretary General Mark Rutte the U.S. is, quote, with them all the way. NATO is set to formalize plans to increase defense spending to 5% of GDP, a major change that President Trump has been pushing for. Meanwhile, Fed Chair Jay Powell continues his testimony on Capitol Hill later this morning. This after he reiterated yesterday he's in no rush to cut interest rates. He did say that if inflation pressures remain contained, the Fed may cut rates sooner rather than later, but he did not take the bait, refusing to point to a particular meeting. And a surprise here in New York, Zohran Mamdani is poised to win the Democratic nomination for New York City's mayoral race. This after a commanding win in the first round of voting. The New York State Assemblyman is running on a progressive platform amplified by social media and policies, including vowing to freeze rents and making buses free. His rival, former Governor Andrew Cuomo, has conceded. That's your Bloomberg Brief. John?
Yahara, thank you. What's the trade here? Get long realtors in Westchester County? Is that the trade?
I'm not sure. I think that the trade is see what happens. Social media. I would say invest in social media stocks because honestly, the social media spending really highlights the new for political advertising.
Super diplomatic.
Thank
That was
you.
smart. That's good. All right. Up next, conflicting reports.
Mr. President, what's your reaction to the intelligence reports saying that the Iranian nuclear sites were only partially devastated?
We hear it was obliteration. It was a virtual obliteration.
Up next on the programme, we'll catch up with Anne-Marie on the ground of the NATO summit, and we'll speak to John Lieber of the Eurasia Group, live from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Live from New York City, good morning to you. Equities at the moment just about unchanged on the S&P 500, positive on the NASDAQ, adding some weight to the rally and the all-time high at the close in yesterday's session on the NASDAQ 100. The focus shifting to Europe and the NATO summit under surveillance this morning, conflicting reports.
Mr. President, what's your reaction to the intelligence reports saying that the Iranian nuclear sites were only partially devastated?
They don't know. I mean, they did a report. We hear it was obliteration. It was a virtual obliteration. When you take a look at the ground above, don't forget, the flame is all underground. But everything above, if you look at the before and the after picture, everything above is burned black.
Here's the latest this morning. President Donald Trump disputing reports claiming the airstrikes he ordered on Iran had only a limited impact on its nuclear program. Joining us now from the NATO summit is Anne-Marie. And Anne-Marie, I think the administration this morning stressing that this is an initial assessment. It will take time to get a more comprehensive one.
That's what we heard from the Defense Secretary Pete Hegseth, who was sitting with the president as he started this bilateral meeting with the Secretary General Mark Rutte when you heard him speak there. This is preliminary, and in the intelligence world, when something is preliminary, usually there's low confidence. We also should remind our viewers that the Defense Intelligence Agency, where this report came from, is just one of more than a dozen intelligence agencies. And individuals I've been speaking to will talk about the fact that this was high-level machinery and weaponry that was dropped on these 3 nuclear facilities. And the fact of the matter is, for a precise report on the damage, there's going to need a lot of reporting on the ground, and that is going to take a lot of time in terms of the data. We also heard from the IAEA, the chief, Rafael Grossi, who's been on our program before as well, who before the U.S. strikes was even concerned that they were unaware of where the 400 kilograms of 60% enriched uranium in Isfahan was at that moment, said that the significant damage is done, but questioned whether or not this is going to be putting Iran's nuclear program back months or years, but then stressed that his inspectors need to be there on the ground. So this is what I would call a preliminary report. It is very fresh, and there just needs to be a lot of time and data that we have to wait to figure out exactly precisely what components were hit and how far back this does put the Iranian regime from making a nuclear weapon.
It looks and sounds like you might need to take shelter from the wind, Anne-Marie. We'll catch up with you in the next hour. Bloomberg's Anne-Marie with the latest at the NATO summit. Number one question, and you've raised it a few times, and Anne-Marie has as well over the past few days, and I think we have to keep bringing this up, and hopefully they do in news conferences when the president speaks again later this morning. Do we know where the highly enriched uranium is? That's got to be a number one question every time we sit down with the president.
Yeah, and how urgent do they think it is to try to assess that, right? I mean, if they really are potentially weeks away from enriching it further or deploying it in some kind of way, is there some sort of active discussion for reigniting some sort of oversight program?
Joining us now to discuss, John Lieber of the Eurasia Group. John, welcome to the program, sir. Before we get sort of knee-deep with what's happening over in Europe, I think we want to talk about the president's agenda and the key deadlines still to come. July 4th, the self-imposed deadline for the tax bill. July 9th, this self-imposed deadline for a trade deal with a whole host of countries. John, where do you think we'll be by the time we get to the middle of July?
You know, this tax deal is coming together, and they're basically done with it. There's a couple of kind of dotted I's and crossed T's they've got to think about right now. And of course, there's the House of Representatives, who isn't going to like the deal that's coming out of the Senate necessarily, but I think is going to have a really hard time voting against this thing. You're going to have unanimity among the conservatives in the Senate to pass a bill with deep cuts to Medicaid, the most impactful cuts that they've done on an entitlement program in decades. And I think that some of the moderate members are probably where you're going to have a harder time getting the votes because of the issue with the SALT cap, which is the Senate's moved back down to $10,000. The House had passed it at $40,000. That's going to be an issue you have to work out. But President Trump now out there truthing that nobody should go home for the 4th of July holiday until this is passed. If it doesn't pass next week, it's going to pass shortly thereafter. On the tariffs, that 90-day pause is up on July 9th, and a lot of countries, are still negotiating their deals. So I think it's notable that despite the really early momentum around Japan, India, the UK, of course, announced something, you haven't finalized anything. So they're going to have to extend this 90-day deadline, and they're probably going to do it for most of the biggest countries. But I also think they're going to send a message here by increasing tariffs on some countries. Maybe not back to Liberation Day levels. Trump still has total discretion here as to what level he's going to get to. But some of these tariffs are going up, and only Trump knows which ones that is. The White House staff doesn't know, and I think they probably haven't made that determination and won't for at least a week or two.
John, this president doesn't stop. By the looks of things, he never sleeps. After the next few weeks, what's left of his agenda? What does he focus on?
I think that it's going to be crisis response, right? So, I mean, this is going to look a lot like the first Trump term, where they did the tax, they tried and failed on healthcare in the first half of the year. And then the second half of his first year was all tax reform. And then in year two, it was kind of just, Trump tweeting about all kinds of subjects that was whatever was on his mind and responding to what was going on in the world. And then, of course, picking a trade battle with China. He's already picked the trade battles. He's going to be done with his tax agenda. There's going to be foreign policy crises that come up from time to time, like we just saw in Iran this week, but he's not actively pushing much. And on the deregulation front, I hear a lot of people talking about the tailwind coming from deregulation in the latter half of Trump's term coming up, but that stuff takes time. And they're going to stop enforcement across a number of, for example, financial regulations, basically. But deregulation itself is a whole process. And if they want it to stick up in the court, they have to do it right. And doing it right means going slow. And it means you won't see the results from the deregulation, if there is any, until possibly the end of Trump's term or even after, when all of that, of course, could be reversed potentially by a Democrat.
John, there's a lot to unpack there. I want to talk about crisis response, in particular to foreign policy. It seems like people are taking the recent developments in the Middle East as providing something of a roadmap for how President Trump will respond to future international crises. What's your take on that? What did we learn from the way the president handled Iran and the attacks by Israel?
Yeah, I think what we learned, and this has been a pattern throughout Trump's time, is that foreign policy is pretty easy for him when there's a power imbalance. When there's a power imbalance and the U.S. can respond with overwhelming force and has no risk, really, of being struck back at, Trump will strike. He did it in Iran twice now with the assassination of Soleimani and now this unprecedented level of bombing. But if you look, for example, at Russia, where there's less of a power imbalance, they have nuclear arms already, there's nothing really Trump can do to intervene in that conflict. So I think this is going to be something that other countries are paying attention to. I'm sure China is paying attention to what happened in Iran this week. China's diplomacy and their ambitions have a much longer time frame, and they're much less of an active threat to their neighbors than Iran was. So that situation is obviously very different, of course. But I do think that I think that Trump is willing to act. He's not going to commit American troops on the ground. I think that's a red line for him. But he is willing to throw American firepower at countries that are irritating him if he thinks he's going to win without consequences.
This is kind of a curveball, but you talk about, we learned something about President Trump's response based on the mayoral primary election in New York. What have we learned about the Democratic response to President Trump's policies, if anything? Has that sort of served as something of a roadmap?
Yeah, I don't think so, no. I mean, New York City, great, most important city in the country, but it is not representative of the rest of America. And I don't think that a socialist mayor in New York City is going to be a look that the rest of the Democratic Party necessarily wants to embrace for the midterm elections. I expect the party's going to try to run from him. However, there is going to be a backlash against President Trump that is going to have a very left wing in its flavor, and that is going to be a national story. And you're going to have this battle inside the Democratic Party for who's most likely to win in general elections. The socialists emerging from the primary is not going to win in Missouri, but they can win in New York City. That's not really a roadmap for the rest of the party.
Hey, John, appreciate your thoughts as always. John Lieber there of the Eurasia Group. Appreciate that response as well. You can win the primary with these kind of characteristics. Can you win a general on the national stage? Much, much harder.
That's why I think the general election for the mayoral race in New York City will actually be very interesting, because the demographics have shifted and a number of people did vote for President Trump in the last election.
Up next on the program, we'll catch up with the former Chief of Staff to Vice President Mike Pence, Mark Short, on Trump's tax bill. Live from New York City, you're watching Bloomberg TV.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
2 days of gains on the S&P 500 following 3 days of losses this morning, just about unchanged, very close, within 1% of record highs on a benchmark stateside. On the Nasdaq 100 at those levels already after the close yesterday, and up another 0.2% this morning. With 2 hours until the opening bell, let's get you some morning movers and cross over to Danny Berger for more. Hey, Danny.
Hey, John. Starting with a tech company, and let's be honest, a blast from the past. BlackBerry, you know, you love it for making those phones. Now it is just a software company reporting really strong earnings yesterday, upgrading its revenue outlook, saying that specifically demand for its cybersecurity software has been really strong, which means this uncertain business cycle, it's been able to really stay above it because of concerns about things like hacking and cybercrime. Those shares up about 7% in the pre-market. To the downside, we heard from General Mills moments ago reporting their earnings. Shares are down nearly 2%. They had a very weak forecast, looking at losses as much as 15% for their earnings per share for this year, given a constant currency. Really a concern that in the grocery stores, consumers are pulling back on name brand items. They also noted weakening margins because of higher input costs. Now, along the same lines, FedEx also had really weak earnings after the bell yesterday. Its forecast going forward for profit, that missed expectations. It also declined to give a full year outlook, saying that it can't predict what is going to happen from here. The CEO noting the sharp fall off in shipments between the U.S. and China, which is their most profitable route. That really hurting, sending shares lower by 5% this morning, John.
Danny, thanks for the update. More from Danny in about 60 minutes from now. On our radar this morning, our top story, President Donald Trump arriving at the NATO summit, expressing support as the group bolsters defense spending.
With this 5%, the Europeans and the Canadians will equalize their defense spending with the United States.
We will be equalized very shortly, and that's the way it has to be. It's going to be a lot of money, too, a lot of defense.
Trillions extra.
Yeah, and we have a great relationship. We've really worked on this subject for a long time.
The President Donald Trump alongside the NATO Secretary General Mark Rutte there. Mark Rutte, and the round trip that we've seen from the alliance he now represents in the last 8 years, started by this president back in 2017.
At the time, it was considered hugely adversarial and something that was really problematic for a lot of the NATO members. Now, the members, the almost 36 of them, come together and say, look, Russia and China are existential threats, and we need to raise our defense spending to 5%, except for Spain, and we'll get into Spain, I'm sure, at another time. I will just say, I wonder how much the sort of kumbaya feeling extends to some of the trade negotiations that also are kind of looming out there.
I think we can sort of put a line between them both.
I think so. I think that's probably fair.
But I would say they're also connected in one particular way, that this president has pushed this continent, Europe, to do things that are good for them. And he's pushed them because he's tested the alliance, questioned the alliance, and made them think they need to fend for themselves. And that's what's pushed them to come around, that and the threat next door coming from Russia, to start spending more on defense.
Yeah, the circumstance has changed on a large level. I will say that Finnish President Alexander Stubb, what he said about how that we got intellectually lazy in the past few years, and that frankly Western dominance is over, and that you need to understand a world that is more transactional and more multipolar, highlights how there has been a sea change in terms of this alliance.
You know what? I don't know if that sums it up enough. I think it was sort of European establishment, elitist nonsense to look down their nose at anyone that was questioning them. That's why they were in the position they were in. And now they've been forced to recognize they need to change. I think they thought they weren't intellectually lazy. I think they thought they were intellectually superior to some of the criticism they were getting from elsewhere. And it's only 8 years later from the president's first term that have had to wake up and realize that ultimately he was right on a whole bunch of things.
There's a lot that needs to be reconciled, and certainly it seems like there has been a reconsideration there. I won't weigh in on all of that. You said it beautifully. Invest in social media stocks.
You'll come back for everything this morning. We'll get back to that story later. All right. You want us to talk about trade? The EU planning retaliatory tariffs on the US if President Trump implements a baseline levy on the bloc. EU officials also expecting the US will keep some tariffs in place even after negotiations are completed.
So can we really say that it's priced in? I'm just still thinking about what Jay Pulaski said, that all of the tariffs and the potential retaliation is priced in, and that we can look past that. That really isn't going to be part of what's going on. I'm not sure that that's true, because maybe we understand what President Trump wants to go after. But as the European Union raised, I don't think we understand the retaliation or how angry some of the trading partners still are.
You've mentioned this before, July 4th connected to July 9th. What happens with a tax bill might inform what happens with the trade deals?
Yeah, if there is no deal passed by July 4th, does that push off July 9th? What actually gets passed on July 4th? How does that affect what needs to get paid for by July 9th? I mean, there are a whole host of different connections, but these two dates are intimately intertwined, and it does seem like one could affect or push back the other.
Danny mentioned one of the big movers in the pre-market, FedEx. FedEx forecasting worse than expected profit for the current quarter, expecting softer demand and citing a, quote, uncertain global demand environment. The carrier's US-China shipments falling significantly in May. The stock's falling as well this morning by more than 5%.
Yeah, and saying that Chinese U.S. shipments are expected to remain low. FedEx used to be a bellwether of the economy. It's kind of shifted as it focuses on cutting costs, but it highlights how difficult it is for some of these companies that are really at the epicenter of trade disputes for them to gather exactly what the volume is going to be and what the reaction is going to be. And it highlights the uncertainty, frankly, in global trade flows and economic activity.
The stock is down, and down hard this morning. Let's turn back to Capitol Hill. The Treasury Secretary, Scott Bessent, saying House and Senate Republicans can cut a deal on SALT within the next 2 days, believing senators can begin voting on the bill by Friday. President Donald Trump writing, "No one goes on vacation until it's done." The former Chief of Staff to Vice President Mike Pence, Mark Short, joins us now for more. Mark, good morning. Good to see you, as always. Thanks for being here. Thank you for being here. You were a big part of passing the president's first tax bill in his first term. How different is this effort? How much harder is it this time?
I actually don't think it's harder, because I think the prospect of having a $2.5 trillion tax increase for a lot of Americans, or $2,100 per family, is a big enough threat that it keeps Republicans united. So there's going to be a lot of noise over the next several days. There'll be a lot of noise on the Medicaid provisions. There'll be noise on SALT. But I think ultimately there'll be sufficient votes in the House and the Senate to get it done.
Can we get to the noise on SALT? And I'd love your personal opinion on this. What you think they should do that they aren't doing right now?
Well, I think from a policy perspective, the SALT provisions are terrible. I think the reality is that you have middle America subsidizing blue states that are poorly run. And they have enormous deficits, and so they provide enormous deductions because their taxes are so high. It provides no incentive for them to actually fix their own problems if their wealthiest taxpayers are able to have enormous deductions. Having said that, what I think is actually going to happen is I think that with the standard deduction now at $30,000, the priority for those who want the SALT deduction is to get it to $40,000, but they'll lower the income threshold. Now, how many people have income under $400,000 that are taking deductions of over $40,000? I think is probably a pretty small number, but the realtor base, actually the lobby base, is more concerned about getting the deduction back, because one of the provisions that we passed in 2017, prior to that, there were 31% of taxpayers itemized. Today, it's down to 9 or 10%. And the real estate industry wants that back. And so I think you're going to see them fight for the $40,000, but lower the income threshold.
I will just say, New York does contribute about 8% of the GDP to the overall United States of America, and it doesn't get the same amount back. So there is this argument being made by a lot of representatives in New York that actually the U.S. is, that a number of blue states have been cheated by U.S. spending. Sure. So, I mean, that is sort of a backdrop here, just to recognize that.
I think, Lisa, there's just an argument to go on a per capita basis, sure, but I think it's hard to argue that New York and federal cities aren't getting their fair share of federal dollars.
just take a step back and beyond the SALT debate, which I'm sure could be, we don't want to get too New York
Social
here.
media spending.
No, social media spending, I'm telling you, just definitely invest in it and hone those strategies. But I am curious about, just going forward, how important it is to get those offsets and how attenuated some of the Republican Congress members are to offsetting any kind of increase in the deficit, if it's not from potential cuts, then from increasing tariffs.
Well, okay, those are two big different questions. I'm a little bit cynical on this, I confess to you. The reality is that neither party is addressing what's driving the deficits and the debt. Neither party is willing to address entitlement spending. So you're going to hear people who pound their chest and say, we're fiscal conservatives and we need more cuts here. But we're really talking about pennies on the margin of the size of this bill and the size of where our debt is today. So if they were really serious about wanting to cut the debt, they'd actually be addressing entitlements. And so, yeah, I think you'll see some posturing from some people. But ultimately, again, I think they're going to fall in line because it's not just the fact you have an enormous tax increase on working families. There's also significant border funding in this. And if you can tell me that there are going to be members from border states who are Republicans are going to oppose this bill with President Trump in the White House, I just don't see it happening. Now, on the tariffs, look, the reality is you talk about the significant revenue coming in. I think that, again, that's a tax on the American people. That's where the revenue's coming in. It's not coming from foreign governments. It's coming from American importers. And the reality is you're 100% right on the dates of this, that, we were anticipating from Peter Navarro 90 deals in 90 days. We see where that's gone so far. And I think they wanted to push the July 9 date because they're hoping they get this all wrapped up by July 4th. If it slides past July 4th, I think you'll see that date slide as well. But you're going to continue to see, I think the president wants to leverage to be able to use the tariffs however he wants, whenever he wants, which provides enormous uncertainty in the economy.
The president of the NATO summit today, I'd love to turn to foreign policy with you. What did you think of the strikes over the weekend and the current posture of this administration?
I think it was exactly the right call, and I think that it's actually pretty consistent with where he was in the first administration. If you recall the maximum pressure campaign and the strike on Soleimani, I think what is different is that I think the first administration had a pretty united foreign policy. And I think there's much more divergence in the second administration on what that foreign policy was.
Within the White House?
I think so. I think within the White House, too, not just with outside.
What do you think the biggest difference is at the moment within the White House?
Well, I think that there's a lot of people who have embraced sort of the isolationism of the party today, and I think they are represented. Their voices are represented in the White House. But I think the president made the right decision, and I think that, I think moving forward, Iran wants ceasefire because it buys them more time. I mean, how many ceasefires have Iran and Hamas agreed to since the Iranian Revolution 46 years ago? So I think it's important the United States stand with Israel.
And this is going to sound somewhat contradictory, but to be successfully isolationist, do you have to be interventionist sometime? Do you have to demonstrate that to do nothing, you have to be willing to do something now and again?
Well, that assumes that those who are articulating isolationist views today are actually consistent in their viewpoints. I think that in many cases, there are plenty of grifters that have surrounded the president. And so they were isolationists in this moment. They were interventionists 8, 9, 10 years ago. So I think the premise of your question implies there's actually consistency on those articulating that view today, and I don't think there is.
Just pairing this with NATO, do we have a sense of what the final word's going to be with Russia and Russia-Ukraine, given the willingness to use intervention in Iran? Is there a discussion around that and support for that in the case of Russia?
I think that's one of the biggest, starkest differences between the first administration and the second administration. In the first administration, President Trump, would be very proud about having sent Javelin missiles and talked and ridiculed that Obama only sent blankets to Ukraine. There was plenty of, I think, deterrence against Russia that it seems this time around that is not that same position. And so I'm not sure that what happened in the Middle East and Iran actually applies to what's going to happen in Ukraine and Russia. It seems that this administration is not as supportive of Ukraine as the first Trump administration.
Mark, what do you think changed?
I think that there's several things that changed. I do think that there's a different personnel in the White House. I think that from where it was as far as the State Department, the National Security staff, and frankly, the Vice President. I think those are big personnel changes that differ in this foreign policy views.
Mark Shaw, appreciate your time. As always,
for
good to see you. Thanks for being here. Really good to see you. If you are just joining us, welcome to the program. Tracking equities for you. Equities just about unchanged on the S&P 500. With an update on stories elsewhere this morning, with your Bloomberg brief, let's cross over to Yahira Arnott for more. Hey, Yahira.
Hi, John. Sources tell us here at Bloomberg that Chinese President Xi Jinping will miss the BRICS Leaders Summit in Rio de Janeiro next month. The country citing a scheduling conflict as the reason for Xi's absence. This will mark the first time the Chinese leader has skipped the summit since taking power. Meanwhile, pro basketball in Minnesota is under new leadership. The NBA's Timberwolves and WNBA's Lynx have been purchased by a group of investors led by entrepreneur Mark Lohr and former baseball star Alex Rodriguez. The group also includes Michael Bloomberg, the majority owner of Bloomberg LP, which is the parent company of Bloomberg TV. The sale is valued at $1.5 billion. And in a mission carried out by SpaceX and Axiom Space, a crew of astronauts from 4 nations were sent to the International Space Station. SpaceX's Falcon 9 rocket lifted off at about 2:30 a.m. local time from NASA's Kennedy Space Center in Florida. It's the first time astronauts from India, Poland, and Hungary will go to the ISS. The launch had been delayed several times due to various issues. That's your Bloomberg Brief. John?
Yara, thank you. Does that mean we get free tickets?
To space?
Mike's involvement in sports.
Yeah. Oh, yeah.
Do
Maybe,
we
yeah.
get more free tickets?
No, that doesn't.
I say more. I haven't had any yet.
I was going to say, what are you
If anyone out there's
first?
listening. All right. Up
Is
next.
there anybody out there?
Someone. Up next. Already too late.
Previously, you said that if you wait for inflation to get back down to 2% to cut rates, you are already too late. What is the reason not to cut rates?
Well, it's uncertainty about the size and potential persistence of the potential but highly uncertain inflation from tariffs.
Up next on the program, we'll continue the conversation on the Federal Reserve with Tina Aditya of Goldman Sachs Asset Management, live from New York. This is Bloomberg.
In case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting this. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. You know, with all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Coming into Wednesday, close to all-time highs on the S&P, at those levels right now on the NASDAQ, and adding just a touch of weight to the rally, up another 0.25% on the NASDAQ 100, up a tenth on the S&P, following 2 days of gains. In the bond market, the focus at the front end of the curve, the 2-year, just starting to give way. Yields lower over the past few sessions, just about unchanged this morning. The 2-year at 379.30, with the focus on the next move from the Federal Reserve. Under surveillance this morning, already too late.
Previously, you said that if you wait for inflation to get back down to 2% to cut rates, you are already too late. What is the reason not to cut rates?
Well, it's uncertainty about the size and potential persistence of the potential but highly uncertain inflation from tariffs.
Here's the latest this morning. Fed Chair Jay Powell facing a grilling on Capitol Hill as he sticks to script and holds off from signaling imminent rate cuts. Tina Adatia of Goldman Sachs Asset Management writing, growth risks have receded, but our base case is for a soft second half of the year. Tina joins us now for more. Tina, welcome to the program. I'm going to pick up on the Congressman's question. Are they already too late?
Look, I think your question is a good one. I think if you think about kind of what we learned yesterday from the testimony, was really first and foremost that the Fed is in wait-and-see mode. They're still kind of data dependent. And the reason for that is what he kind of already said, which is if you think about that second point around inflation, on inflation, if he sort of says, okay, well, I need to start cutting rates, the reality is you have an environment where tariffs are going from an effective rate of 2% to a rate which is kind of closer to 14%. We know from previous trade wars that it takes a few months for tariffs to kind of pass through. On top of that, you have this situation this time where there's been a lot of tariff uncertainty, right? So you haven't necessarily seen the pass-through on prices as quickly as you might have hoped. So Powell's saying that he's going to wait for the summer months to kind of see what the pass-through effect is on inflation. Their base case is for transient, but it may also not be. And so they kind of have to watch that. I think that's the first point of why they don't want to cut rates. The second point, I think, which we learned this time, but also from their previous announcements after the FOMC meeting, was that they're much more focused on the labor market. And I think if you start to see labor market weakening, then for sure you will see the Fed act. So if you think about it, what have we seen so far? Labor markets have been pretty robust. You've had reasonable payrolls. Unemployment rate has stayed in line. What you would expect, though, is if the unemployment gets closer to sort of 4.5, then probably they're more likely to move faster. What you're seeing in those second-round effects on labor markets right now is that some of those revisions of labor markets are looking a little like downtrending. So that's, I think, something that will be much more of a focus for them to cut rates as opposed to just inflation. Tina, there's a big question in markets right now, and you can kind of feel it on the FOMC as well. Is there a window for the Fed to cut for the right reasons? And I put right in quotes with this idea that it comes on the heels of disinflation without the threat of really a reignition of some sort of rapid price increase from the labor market. Is that window now versus do they have to see the weakness that the market was worried about for the Fed to cut for the wrong reasons, which is to prevent further deterioration?
I think the reality is that's kind of where we were a few months ago, where pre-Liberation Day, you had that environment where the Fed was able to do kind of more of that proactive cuts before weakness. I think where you are now is those risks have become a little bit more balanced, number one. So the inflation risks are not completely well understood, and I think the Fed wants to learn from those risks. And also on growth has actually held up reasonably well. So whereas kind of at the beginning of the year, there was kind of an environment where people had started worrying about kind of growth. That's not necessarily the case. So if you look at kind of corporate balance sheets, they've held up pretty well. Consumption has held up well. Yes, some of those softer indicators are looking like they're trending down. But I think it's just much harder for the Fed to make the case when they haven't necessarily see at least a little bit more weakness, and also to ensure that that inflation animal, which is less understood because of this exogenous tariff shocks, is not well understood. So you kind of have to see that before the Fed is able to kind of cut rates more proactively. I think the point around the window is a more interesting one, which is that does that window to cut rates narrow because in 2026 you start seeing some of those fiscal measures that make it much more difficult to then cut rates. So I do think that there is a narrow window, but it's quite difficult for the Fed to balance that environment between those higher looming potential inflation risks, which is still maybe not as well understood and something that has to be watched, but also the fact that labor market weakness hasn't really come through and actually looks pretty solid and robust.
Tina, if the Fed were to cut next month, with the long end, would yields rise?
Oh, look, I think what we think is that you are going to continue to see an element of curve steepening, and you've already seen quite a lot of curve steepening, particularly at the long end globally, for a variety of reasons, mostly down to obviously the fiscal and also potentially some inflation, although not really, because forward-looking inflation expectations in the medium term look kind of okay. I think probably we're going to continue to see a reasonable amount of term premium. We have curve steepeners on in our US position, and we will keep those on. Whether they will actually rise at the long end, I think, is a little bit more nuanced. And the reason for that is obviously if the Fed does cut rate, then obviously the debt service starts coming down. The other thing that you see, and you will continue to see, is generally, debt management around kind of where issuances happens kind of globally.
Tina, do you see that in Germany as well? Just to jump in, when they issue more debt, are they doing it at the front end in the same way that the United States is, or is there a different base there of demand that they can take advantage of, similar to what we see in, say, the UK, with much longer average maturities?
Well, that has changed a little bit in Europe, actually, and it's changed for a few reasons. It's changed partly because, of course, you've had in Germany that announcement around the fiscal, which has caused steepening. But interestingly, of course, the curve still is not as steep in Germany as it is in other parts of the world. And I think your point points to insurers and pension funds. On the pension fund side, I think it's a little bit more nuanced. You've had things like Dutch pension fund reform, where there might have been that environment to buy the long end of that curve is maybe less there. On the insurance side, I think that demand kind of remains. So they've seen steepening of the yield curve still, not to the same degree as maybe you have seen in the US or Japan. In Japan, of course, is the extreme of that market. But across the board, you've seen steepening of the yield curve, just in recognition of fiscal deficits rising.
Yep. Tina, technical but important. It's good to hear from you. Thanks for being here. Tina Adatia there of Goldman Sachs Asset Management on steeper curves. This morning, a little bit steeper as well. The long end yield higher by a single basis point in the Treasury market. The 30-year about 4.84. Up next on the programme, Alicia Levine of BNY Wealth, Sheila Kahlu of Jefferies, Claudio Irigoyen of Bank of America, and Matt Hornback of Morgan Stanley. The third hour of Bloomberg Surveillance is just around the corner. A focus on day two with Chairman Powell on Capital One in front of the Senate Banking Committee this time, after going in front of the House Financial Service Committee yesterday. No daylight, little daylight between what the chairman said last week at the Federal Reserve News Conference and what we heard just yesterday from New York City. This is Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
The flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function. It's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah. We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Even though equities are very expensive, there's more liquidity in the system today than there was pre-pandemic.
This market is just pushing you into risk, and it's been really hard to resist that momentum.
You need to be risk off to be back to risk on.
It's looking pretty bullish right now. You still have to be careful.
The market will respond when the circumstances change, for the better or for the worse.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now with equity futures near session highs and about another 0.2% on the S&P. Your scores look like this on the Nasdaq 100 coming into Wednesday at all-time highs and up another 1/3%. Later on this morning, 2 times to look for 9 a.m. Eastern time. About an hour from now, you'll hear from the President of the United States, scheduled to hold a news conference at the NATO summit in the Netherlands. Then later, an hour later, day 2 on Capitol Hill, for the Chairman of the Federal Reserve, Jay Powell at 10 a.m. Eastern time, going in front of the Senate Banking Committee.
With one of the key questions being how much data do they need before they can cut rates, given the fact that we have seen a disinflationary trend in the data. How much are we depending on jobless claims continuing to roll over? And this is why I think actually tomorrow the jobless claims is going to have a renewed focus, especially given the Conference Board Consumer Indicator yesterday that showed that people are getting a lot less confident about their ability to get work.
Jobs just aren't as plentiful. We saw that in the data point just yesterday. Jobless claims round about near the highest levels of the year so far, which has made some people just a touch nervous about the position this labour market is into going into the summer.
So it goes to this question of data over dependence, as Steve Auth was talking about from Federated. Is this Fed looking backwards and saying, look, we don't know enough to extrapolate out into the future? Is it entirely because of tariffs? And do they get that clarity on July 9th that they need to really move forward? Or is this dependent on something else, the reaction function, if you will, of companies and consumers about what they're willing to absorb and how much strength there is in the underlying economy?
Steve Auth made a couple of points. First one is he doesn't believe they're data dependent. He believes they're data resistant. at the Federal Reserve. His point on tariffs was interesting. So by definition, and we say this all the time on the program, the importer pays the tariff, but how the costs are shared is up for debate. He believes that half of the costs are going to be burdened by the exporter, and that's going to be someone else's problem potentially.
Which is somewhat controversial because some people say that it's not going to really bear that will have a greater impact on either company margins or inflation. Even Mark Short, the former legislative director for President Trump, saying that it would be borne by the consumer. This is the question. Is there too much complacency in the market right now around the tariff negotiations, especially at a time where the European Union right now is raising the prospect of retaliatory tariffs? This is going to be an ongoing question as we hit the 1-2 punch of July 4th and July 9th.
Two key days coming up over the next few weeks into that all-time highs on the NASDAQ 100 and very close on the S&P 500. Coming up this hour, we'll catch up with Alicia Levine of BNY Wealth with tech stocks at record highs. Shilakolu of Jefferies with defense spending in focus. Anne-Marie will join us from the NATO summit in about 10 minutes' time. Plus, we'll catch up with Matt Hornback of Morgan Stanley on underpriced risks in the bond market. We begin this hour with tech stocks back at all-time highs. Alicia Levine of BNY Wealth writing, the pain trade is higher as the market shrugs off lingering tail risks. We still expect a slower economy given the tariff shock and lingering uncertainty. Alicia joins us now for more. Alicia, good morning.
Good morning.
Just reconcile those two things for us. Help us understand it. The equity market continues to do well. At the same time, the economy continues to soften.
So I think we've seen the slowing, right? All the data points you're talking about in the labor market, we've had 3 weeks in a row where new claims data are above 240. The expectations for it to slowly creep higher. So you're seeing some softness already. I think in the recent CPI, you also saw some softness, not just in the services for housing, but also for discretionary spend on travel. So you're starting to see a little bit of demand destruction for some discretionary spend. At the same time, we do have these dates in front of us. I think for the most part, with everybody focused on what was going on in the Middle East, the tariff story went to sleep. It was overload. It was flooding the zone. And so there are some risks in there. I just would say this. I think the market has been remarkably resilient in pushing through this. And you could say that the 20% decline in March and April really reflected all the risks that are out there, and in some ways it was already priced in. So I would expect some consolidation here, but I don't think you're getting a major sell-off here. And with that, the market's moving higher. I mean, it's showing you, if I gave you the fact pattern of what happened in the last 2 weeks in the Middle East, right? And the highest we got on WTI was 78 for a second. And now, just the market was not pricing in anything devastating to growth or inflation or to oil prices, seeing this is essentially contained, which is amazing.
Let's sit on the price of the market, and I agree with you, it's absolutely amazing, phenomenal. We've got this elevated forward multiple, and I've heard from guest after guest who said that reduced our capacity to absorb shocks. And what do we do repeatedly? Absorb shocks. And I'm just wondering how much of a constraint that elevated forward multiple actually is.
So, we're back to the multiple we were in, at the end of December, early January, but the multiple on most of the tech stocks is actually lower. And what it suggests actually is that earnings are actually going higher for 2026, because we're at that time of the year where investors are focused on 2026 earnings. Whatever happens with 25, it's in the rearview mirror. It's a cinch backward looking, even for the third and fourth quarter here. That's where you'll get some volatility. But the market's looking at 2026, and I would suggest that the earnings are probably going higher because the multiple's hanging in there.
If your head's spinning, join the club. And if you're trying to understand how much you can take the flood of information and actually process it through markets in any way, shape, or form, it really raises the question, should we just shut it off and look at ChatGPT and how it's being applied across companies and how much we can invest in those companies?
So this is a great question. I actually gave a talk yesterday to a bunch of folks who are implementing AI in all of their businesses. We had a big conference on it. And I gave a macro markets talk. And people said, wow, you cut right through it. And the reason I say that is that we are bombarded. We are bombarded by news, whether it's inflation or Jay Powell in front of Congress or consumer sentiment, where it's just these negative data points everywhere. But the fact of the matter is that the market's looking through it. That is also a signal. The market is forward looking. So you have to shut it down. You have to look at what you go back to, which is earnings. And the 50% of the S&P are implementing AI at an extraordinary rate, which is going to drive the margins higher for the overall index. We're talking about information technology, consumer comm services, and financials, right? These are the sectors that are really, there's an arms race in who can implement faster. That's productivity, and that's margin growth. And that means that the trade that we've still had of increasing margins in the growth areas of the S&P will continue, which means you can go higher.
Does this just divorce the link between the economy and the stock market all the more? Where you could see a labor market that continues to weaken based on the fact that productivity is going up and the workers who are there are doing more and better work, and potentially there are fewer employment options, particularly for new entrants to the market, but profit margins keep surging at a select number of small of large companies.
So that is the disconnect. But we always talk about how the S&P is not the economy, but over time it is. So as your GDP grows, your nominal earnings go higher as well. They are linked over time, not in specific points of time. So it's a subtle difference, but it's true. But you're right. I think that's where we get the disconnect. That's maybe where we get some volatility in the market, when we get those lower jobs numbers. You know, when we get sort of job growth under 100,000, that's not going to be so great for the market. But again, I think what you're seeing is that young workers, the unemployment rate there is actually 6.5% in the 18 to 24-year-old. And I see it, I see it out there. That's really what to keep your eye on. The new job growth doesn't seem to be there, and we know that the Magnificent Seven are not hiring, and in fact, they're having, rifts. So that's really where to look. I think the white-collar jobs seems to be stalling out, and that's your productivity. It is a disconnect. I don't think the market's going to absorb that. Those numbers, those labor force numbers, whether it's new claims on Thursday mornings or whether it's the Friday BLS numbers, that will have some effect on the markets as well.
We've been having this conversation for at least 12 months now.
Yeah.
And we've been in this holding position for at least a year. Any reason it can't continue?
So it can continue if growth goes below 1%, right? If GDP is 1%, you will have dislocation in markets. That is really where it is. I think we've been looking at the labor market as a tell. So far, it looks like it's hanging in there. But you can still grow under 100,000 jobs a month and actually be in equilibrium with the supply of labor, right? So we're used to these numbers. If you go back to the beginning of 2024, the average job creation monthly was 155,000. Now, we also know that gig workers are not included in that number, because the economy is growing in an interesting way, in a different way that the official numbers are not really picking up. So at 139,000 jobs in the last jobs report, you're sort of in that 155 average number for the last year and a half. That's still there. Even if you go below 100,000, you're still in equilibrium with the supply. If there's an equilibrium in supply, it can continue.
Torsten Slok of Apollo, what did he say yesterday? 50K.
Yeah.
Maybe get used to 50,000 a month, never mind 150.
Yeah, and where those lack of jobs are, the fact that it is people who are entering the workforce. I mean, talk about a lost generation. I'm not to get all political here, but there's this question of how do you deal with a time of transition where the technology is transforming the way that we think about jobs so quickly, in order not to have an entire generation that doesn't get jobs for a number of years out of college.
If you just joined the program and haven't been following, every time we get to the edge of being political, Lisa just turns around and says, invest in social media stocks.
So I think we're getting close.
Invest in social media stocks.
I think that you need to look at social media.
All right, that's super helpful. Let's finish on tech leadership. Maybe that's a good place to finish this conversation. We've questioned tech leadership in this country repeatedly.
Not all of us.
Not you.
Not all of us.
Why are you sticking with it?
Oh, because it's clear. This is where the growth is, and this is where the margin growth is, right? There's a concern about overspend. There was a concern that the CapEx spend was going to crush free cash flow, and that's actually been the leading indicator of where these stocks go. That it has somewhat, but I think what's been made clear, and you saw in the first quarter, that they're just powering through. That's really the story there, right? The story really is, can you get increasing margin growth out of these companies? The answer so far is yes. They grew at 34%, right? So in the first quarter. As long as the growth is there, the market is fine, as we know. But I'd say also, as the diffusion of AI goes, you're getting higher margins everywhere throughout all the sectors, and specifically 50% of the S&P. So tech, comm services, and financials.
Alicia, it's good to see you. As always, thanks for dropping by. Alicia Levine there of BNY Wealth. The headline just crossing for you. NATO allies agreeing on a new defense spending target of 5% of GDP. It will be marked as a big win for the President of the United States, who's at that NATO summit right now. Anne-Marie's over there in the Netherlands. We'll catch up with AMH in about 5 minutes' time. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. President Trump says he expects to discuss Ukraine with President Zelensky at a meeting later today as both leaders attend the NATO summit in The Hague. Trump also saying he has been speaking a lot with Russian President Vladimir Putin. He said to reporters that he told Putin he doesn't need help on Iran. Instead, quote, "I need help with you." Meanwhile, Zohran Mamdani is poised to win the Democratic nomination for New York City's mayoral race. This after a commanding win in the first round of voting. The New York State Assemblyman is running on a progressive platform amplified by social media, as Lisa has said, and policies like vowing to freeze rents and making buses free. His rival, former Governor Andrew Cuomo, has conceded the race. Meanwhile, a check on shares of FedEx. They are down 4.8% in the pre-market after the delivery company warned its profit will be worse than expected this quarter due to pressure by U.S. tariffs. And although it typically provides a full-year forecast, FedEx said it would only share its outlook for the current quarter due to uncertainty over global demand. That's your Bloomberg Brief. John?
Yahara, thank you. Thank you very much. More from Yahara in about 30 minutes' time. Up next on the programme, the Morning Calls Plus, Sheila Kayolu of Jefferies, as these two headlines cross from the NATO summit in the Netherlands. NATO allies agreeing on new defence spending. The target is now 5% of GDP. The leaders reaffirming their commitment to the collective defence clause. That conversation is just around the corner with Sheila and Anne-Marie on the ground at the summit. Live from New York, this is Bloomberg.
Brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The opening bell is 1 hour and 14 minutes away. Stocks are higher by 1/10% on the S&P. On the Nasdaq, up by 1/3, adding to the record high that we closed out in yesterday's session. On the Nasdaq 100. That's the price action. Here are some morning calls for you. First up, Loop Capital raising its price target on Nvidia to a street high 250, saying it's well positioned for the next golden wave of Gen AI adoption. Your second call from Wells Fargo raising its price target on Microsoft to 585, saying its AI business could reach 100 billion in revenue by 29. And finally, Citi cutting its price target on FedEx to 259, pointing to weak guidance due to the impact of tariffs. That name is down by almost 5% in the pre-market. That's some of the stories, some of the morning calls. Let's turn back to one of the biggest issues globally. Just moments ago, NATO allies agreeing to a defence spending target of 5% of GDP. With reaction to the headlines, Anne-Marie at the summit in the Netherlands. Good morning, Anne-Marie.
Good morning, John. It's quite an ambitious goal, and Mark Rutte, the Secretary General, has been talking about the fact that he thinks the alliance was going to be able to get this over the finish line. 5% in terms of GDP spending needs to go to defense now if you are part of this alliance. There's some nuance this that we should talk about. Right now, when it comes to core defense that each member state should be spending, it's at 2%. So they are increasing this. For core military spending, think of ammunition, tanks, all the artillery, that will go to 3.5%. The remainder 1.5% is part of the industries that potentially could support the industrial complex. Maybe some funds can go to things like cybersecurity or border patrol. So that's where that 5% comes into play, and they have a decade to do it. This is going to 2035. So some countries that potentially have been naysayers when it comes to this, like Spain, Mark Rutte is saying, well, they're going to have to spend a lot more in the course of the next 10 years. So this is a big feat for him, and obviously this is a massive win for President Trump, who Marco Rubio, the Secretary of State, told Politico heading into the summit that this is really Trump's summit. This individual, the President of the United States, has been talking about the fact that he doesn't think NATO spends enough for decades, and now they have a very, very ambitious target ahead of them, and that means trillions of dollars of spending, especially from the likes of a lot of these European countries.
Anne-Marie, spending on what and what for? What are they going to do about Russia? And are they going to get the president now to put even more pressure on Vladimir Putin?
Well, that's a big question for a lot of these individuals, especially Volodymyr Zelensky, who is here and who will be meeting with the president on the sidelines. The president said that he actually had a call with Russia's President Putin regarding Iran, and Putin said, can I be helpful when it comes to Tehran? And the president says, actually, you could be helpful when it comes to Russia. That is a huge foreign policy goal for this president, to bring a ceasefire and an end of Russia's invasion of Ukraine. And for countries in Europe, and this is in the document, and it is also in the Financial Times piece that you had the Chancellor of Germany, Friedrich Merz, and Emmanuel Macron talk about, they say they have a threat right here on the continent. This war is still waging on the European continent. And that is why when you hear from the German Chancellor, he says everyone wants to say we were pushed by Trump, which they definitely were pushed by Trump when you ask Mark Rutte, the Secretary General, but he says we have our own collective experience of this war, and that is why we need that defense spending, and that is why they are lifting when it comes to the core military spending of ammunition, tanks on the ground. They are lifting that from 2 to 3.5%, but of course, this isn't going to be done overnight. They are getting a decade-long time frame to get that defense spending up.
Anne-Marie, thank you. More from Anne-Marie later on this hour as we count down to an important news conference with the president about 40 minutes from now. Anne-Marie mentioned Mark Rutte, the Secretary General of NATO. For too long, one ally, the United States, carried too much of the burden of that commitment, and that changes today. The president, you made this change possible. The words of Mark Rutte earlier this morning.
With a policy overlay that really expedited the urgency of the matter, which was Russia and the invasion of Ukraine. But this is a complete about-face versus 8-9 years ago, where the NATO meeting sounded very different than it currently does.
Huge, huge change, that's for sure. Let's stick with defense. Sheila Kahulu of Jefferies writing, U.S. operations against Iran likely put further emphasis on the fiscal year defense budget. Joining us now is Sheila. Sheila, good to see you.
Good seeing you.
Defense spending very much in focus, given this headline as well, coming out of the NATO summit. Companies like Rheinmetall, German defense operator, that stock is already up 177% so far this year. How much of this story is already well priced?
Well, we focus on the U.S. names, as you know, Jonathan.
Of course.
And in terms of what we're seeing is we were at the Paris Air Show last week. It's historically a commercial aerospace show, but a lot of focus on defense exposure. European defense companies are trading at 50 times EBITDA. These multiples are ridiculous. And we're seeing a lot of focus from U.S. investors into European names, but also undiscovered names, whether it's a name like AeroVironment that reported last night. Elbit in our coverage, it's an Israeli name, 30% Israel exposure, 20% U.S. exposure, 25% Europe. So who has hidden European exposure that could benefit from some of the NATO spending, which is going to, pour hundreds of billions into additional defense spending?
Do we have a sense of which region of defense contractors Europe will be working with disproportionately? Will it be mostly European defense manufacturers? Will it be the United States? Will it be elsewhere? Does it matter? Is this being used as a diplomatic tool, or is this just where they can get them in order to get their forces up?
Historically, it's been 2/3 of European spending has been flowed back to the U.S., but companies like Rheinmetall are really emerging, investing in their local capacity. In the last month, we've met with all 5 defense contractors, and the common theme is local for local. Yes, we have a facility in Spain. We have a facility in Poland. So we think about 50% of the NATO spend will come back to the U.S., and I actually think over the next 5 years, it'll be focused on missiles, munitions, replenishing what got lost in Ukraine. And over the long term, I think what we'll lose out on is the fighter aircraft. You know, the local teams, France, Saab, will have local manufacturing of larger equipment in Europe, and U.S. will still supply missiles, air defense, which is where the U.S. really excels at.
Yeah, to build on that, there was this feeling, and John, you mentioned it, it was like watching Top Gun in action over the past couple of weeks in terms of the B-2 bombers and what they actually engaged with, and how much is that, you know, different countries around the world saying, I want that, versus just the very nuts and bolts of, you know, I need another missile here, I need another thing there. I mean, is that kind of the sort of more humdrum aspect of what we're actually talking about here from the European build-out?
Yeah, I think we have to give the Northrop B-2 bomber a minute here, because I think it's so amazing, and it just happened this weekend, and everybody brushed it off on Monday morning. The last time it was used was against Yemen in 2024. But aside from that, it was used in Libya in 2017 and 2011 before that. So we don't use these that often. I went to the facility in Palmdale where Northrop sustains them. I mean, the coating itself costs hundreds of millions to recoat every time. So it's a pretty cool aircraft. We only have 20 of them. We used 7 over the weekend. So I think it also helps accelerate the Trump agenda, whether it's the next generation fighter with NGAD, which they awarded to Boeing, and pulling forward things like the B-21, which is also a Northrop aircraft.
What about what we have seen take place in Ukraine, in the war between Ukraine and Russia, and their ability to cause serious damage to air defense of the Russians with just drones? That seems to be a major development over the last couple of years. The character of war has changed, and I wonder if the type of investments, the kind of things that people invest in defense, is changing too.
I think a little bit of both. The reconciliation bill, which is about $150 billion, has $9 billion dedicated to drones and other autonomous vehicles. So the Trump agenda really focuses on accelerating technology and what the next war will look like, whether it's against China, but it also pushes forward their agenda. One of the things I do really appreciate is how the bill really pulls forward programs that are already accelerating, whether it's like Textron's FLRAA program. If we have it, if it's in the air, why are we waiting for certain milestones to be reached?
Sheila, important conversation. Good to see you, as always. Thank you. Sheila Coley there of Jefferies on defense spending, on the headline that just crossed just moments ago, now targeting 5% of GDP, when not so long ago you'd struggle to get countries to spend 2%. The new target's 5%.
And now you have the German parliament actually signing off on some $200 billion or billion euros of spend over the next number of years. Where this is going to be spent, and to your point, John, how much this has already been priced in, is really going to be the question.
Things are changing, and they're changing fast. Up next on the program, we'll talk about the economy. Claudio Irigoyen of Bank of America with a focus on the next move from the Federal Reserve and why some people think July might be in play, and others who have wrote to me this morning. In a 24-hour news cycle, Bloomberg journalists hint at rate cut that is not coming in an attempt to talk about something. So we'll do that next on the program.
That's correct. Well, what do you suggest?
Pretty harsh words this morning.
You know,
right.
I will just tell them, please, we're open. The suggestion box is open. What would you like to talk about?
From New York City, good morning.
Social media stocks.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Stocks are positive, up another 0.15% on the S&P 500. On the Nasdaq 100, all-time highs in yesterday's session. We add some weight to that move this morning. On the Nasdaq 100, up by 1/3 of 1%. Let's get you some morning movers. Let's cross back over to Danny Berger, who has more. Good morning, Danny.
Hey, John, got some earnings to work through, and there has been some notable weakness, especially in ones facing consumers. FedEx, for example, reporting after the bell yesterday, their outlook for the current quarter missed expectations when it comes to profitability. Also declined to give a full-year outlook, too, something FedEx usually does. This time around, the CEO saying that it's too unclear, the outlook from here, so they are unable to do so. Shares falling more than 5%, especially with a steep drop-off in U.S. and China shipments. We also heard from General Mills, another one of these companies, saying that the uncertain environment means that consumers are pulling back. They called it the value-seeking consumer. Shares down 3.9%. They see EPS for the year falling as much as 15% with a constant currency. That is more than expected. Also noting that just consumer tastes have changed. No one wants to buy their sugary cereal anymore, apparently. Finally, rounding things up with a little bit of sell-side action, Stellantis getting an upgrade from Jefferies, saying that they see a positive turnaround with this new CEO. They're refreshing their lineup. They're fixing stocking issues, so those shares up 4%, John.
Danny, thank you. Cereal, very expensive.
Yeah.
Ramo, you noticed that?
Well, especially if it's on one of the shelves that you see immediately because they pay for that shelf space.
So they need to get the money back.
And you really want to look at the up shelf or the down shelf because that's where you get the better deals.
You know what I call it, right?
What, I know you
cattle feed for humans.
I know.
Yes.
You know, honestly, you didn't grow up in Lucky
Absolutely
Charms. I think it's embrace your inner child.
I think my mum came back with Lucky Charms once and put it on the kitchen table.
My grandma.
And never again.
Yeah, well, in my household, we would have cornflakes, and my father would just pour sugar over it. So it was a different household.
Same thing, basically.
Yeah. Pretty much. All right,
Got there in the same way.
Social media stocks.
Fed Chair Jay Powell. Let's do that instead. Heading back to Capitol Hill for day 2 of his testimony to lawmakers. Bloomberg's and Michael McKee joins us now for more. Hey, Mike, are we expecting anything different later on this morning?
Actually, we might get a little something different, John. Not from the chairman. He's likely to give us pretty much the same arguments he gave yesterday to the House about why the Fed is on hold. The Fed is basically managing tariff risks, is his argument at this point. Inflation and unemployment are likely to rise, so the Fed is better off waiting to make sure they know what's going to happen to the economy. And with the economy solid, they can wait. The rate cuts that they had talked about are still likely to happen this year, Powell told the House, but he wouldn't put a time frame on it, even though there's been some talk of July from a couple members of the Fed. The new news today may be made by Senator Tim Scott. He's the chairman of the Banking Committee, and he and some of his colleagues sent a letter to Powell last night saying that they are going to be asking him about a couple of important things: the Fed's plan to renovate its buildings. In the letter, Scott said, at the same time Americans are struggling to put food on the table, the Federal Reserve has been spending billions of dollars on the renovation of 2 of its offices in Washington, D.C. As a matter of fact, they're spending $2.5 billion. The original budget was $1.9 billion. and that has now expanded to $2.5 billion for the Eccles building and the Fed East building. The Fed argues that these were built in the 1930s, and it takes a lot of work to bring them up to code, plus the fact that they're historical buildings, so it costs more to renovate. But the senators are saying that that is not acceptable at this point. We do not find the justification sufficient, especially considering that this lavish renovation is being done at a time when the Federal Reserve has not made a profit since 2022. So we could see a little bit of a spark there between the chairman and the chairman.
Mike McKee, thank you, sir. That's the Federal Reserve. Let's head over to the NATO summit. The President of the United States just standing by. Let's take a listen.
I know, I realized, yes. I was listening as well, yes. Yeah, you did a beautiful job. Yeah, thank you, Mr. President, and thank you for being at the NATO summit. I think together we made a big achievement in NATO today. And going and agreeing on the 5% and making a real big step forward. Right. And now working together on defense industry and make sure that we got the deterrence and defense in the Western world, Europe, America, Canada, together, right. Make it strong. Thank you very much. Thank you. Big decisions today. Great honor. Yes, my honor.
So thank you very much, everybody. We're going to have a press conference in a couple of minutes. So.
Thank you, Press.
How about we'll do that? We're going to do it in a couple of minutes. Some great statements just came out from the Israeli Atomic Energy Commission and from Iran, as you know, that it was complete, total destruction. And CNN turned out to be fake news, as always. That's why they have no credibility. That's why they have no viewers. But we're going to read it to you if you haven't seen it. Have you seen it, Jeff?
Yes, sir.
Have you seen it?
Yes,
okay.
Sir.
Pretty good. Very unfair to the pilots that risk their lives for our country, and then they get fake news, New York Times and CNN, make up a phony story to get some hits. That's the only reason I cared about it, because those pilots were so brave. I've never seen anything like it. They flew into the hornet's nest, and then they got hurt so badly by what the fake news wrote. And it was CNN, it was the New York Times, and they're both disgusting, really horrible groups of people. The pilots did an unbelievable job like nobody's ever seen. They hit pay dirt. You see where I guess you probably look, they call it the wound. You see where the wound is. Three of them right next to each other. Perfect. And they should be admired and respected for what they did. And the fake news, in order to try and hit me, the fake news made them look bad. But now they look really good again. So that was the Israeli Atomic Energy Commission. And it was also about the High Commission of Iran. Just said it was totally demolished. But we're going to have a news conference in a couple of minutes, and we'll see you, because I don't want to burden the Prime Minister with this, okay? Thank you very much, everybody. Thank you.
The President of the United States there, alongside the Dutch Prime Minister at the NATO summit in the Netherlands. There will be a news conference at the NATO summit in around about 25 minutes' time, after NATO members agreed to spend 5%, or at least target 5% of GDP on defense spending. The President once again taking the opportunity to speak to the press, to push back on reports of an initial assessment from the Pentagon about the damage done to those several nuclear sites in Iran hit over the weekend.
And this is the second time that he's indicated that Israel sent agents over to Iran to inspect what damage there actually was. He's now calling about the Israeli Atomic Energy Commission putting out a report saying that there was substantial damage done to the nuclear facilities. We did hear from Iran, also from the foreign ministry, saying the same. So doubling down on that, and it really does affect the road of the road to travel going forward about how these discussions with Iran do evolve.
Just getting that headline from the Israeli Commission that I think the President was attempting to cite. The U.S. strike rendered Fordo inoperable following the strikes over the weekend.
Which has been a question, given the fact that the satellite imagery has been inconclusive to some people. Both the New York Times and CNN, a number of other media outlets citing the Pentagon putting out a preliminary report. I'm sure we'll be getting additional reports, preliminary and otherwise, in the weeks and months to come.
That statement coming from the Israeli Atomic Energy Commission. More from the President of the United States at around about 23 minutes' time. So look out for that news conference in just a moment over at the NATO summit. We need to focus on the U.S. economy and day two of testimony from Chairman Powell on Capitol Hill. Claudio Irigoyen of Bank of America writing the following: the tariff roller coaster rumbles on as geopolitical risks re-emerge, but global growth remains resilient. With recession risk receding, we raise our growth forecast to 1.6%. Claudio joins us now for more. Claudio, good morning.
Good morning.
1.6% at the start of the year would have sounded dreadful, but on April 2nd, it would have sounded wonderful. What's changed for you?
Well, this is just to clarify. First of all, nice to see you again.
Good to see you, sir.
John. First of all, I think this is the number for the U.S. Growth forecast for the U.S. 1.6%. For global growth, we uplifted 20 basis points to 3% now. And I think what has changed is that even though we had a massive escalation on the tariff side, we also had a very swift, quick de-escalation. And since we changed the forecast about a couple of months ago, we had a significant improvement in trade negotiation dynamics. And this is one of the reasons why we think growth will be at that higher. We are not going to have such a slowdown in the third quarter. We expect the third quarter to be around 1% quarter over quarter. And the second quarter is going to be a bit higher than expected because of the payback from the aberration of the first quarter due to the massive increase in imports.
What you just said, your analysis, very, very similar to what we heard from the Federal Reserve's Michelle Bowman. Michelle Bowman also saying that the situation at the moment now is demonstrably less risky, which is why she thinks we should open the door to a rate cut as soon as July. Why are you and the team on that now?
That's a great point, because less risky doesn't mean that it's riskless. And what we think is going to happen is that you are going to see the impact of tariffs throughout the second half of the year. Because what companies are doing first, obviously, they try to front-run as much imports as they could before the impact of the tariffs. And now they're going to spread out the increase in prices because they don't want to lose market share. So you're not going to see a massive spike in inflation, but you're going to have more persistent inflation during the second half, which make the Fed's job much harder because it's going to take longer for them to see the peak in inflation. And I think that's what Powell means when he says, we need to see more.
When do you think we're actually going to see this inflationary shock, given the fact that we already have had tariffs that have been on, and you haven't necessarily seen it so far in the CPI prints?
Yeah, I think you have a combination of two things. You had a disinflation trend, and now you have this additional shock. As I said before, when companies decide to spread out the increase in prices to avoid losing market share, that means that probably end of the third quarter, fourth quarter is when we're going to see the big impact. Actually, we reduced the peak on inflation measured by core PCE from 3.5% to 3.1% for the fourth quarter of this year, but we're still going to see an increase in inflation from here.
Which raises the issue of how much room there is for fiscal expansion. And that's another one of your calls, that you don't see fiscal consolidation, and certainly the discussions heading into July 4th would support that there isn't necessarily any kind of true net retrenchment in terms of fiscal spending. How much do you see that as fueling some of the better than expected growth that you now expect globally for the remainder of this year?
I think you're going to see the impact of the final budget bill towards the end of the year and at the beginning of 2026. We expect something around 6.4% overall deficit. You have 3.3 percentage point of GDP just paying interest, which is too much. And we need fiscal consolidation in the U.S. The simple issue is that 70% of the spending is mandatory in the U.S. So it's politically very, very costly to do it. Obviously, the market will respond at some point, but probably it's going to take longer for the market to see that. Remember that that number includes close to a percentage point of GDP coming from tariff revenues. Those numbers might be lower, and spending might be higher. So we might end up in a situation in which the market start wondering about the sustainability of the debt again.
It feels like we've been on disaster watch for a bunch of reasons for a long, long time. And one thing that's been proven by the last few years is that we've consistently underestimated the resilience of this economy in America. What is behind that? What's the biggest pillar of that resilience? Is it the fiscal spending? What do you believe it is?
That is part of that, but let's be honest. Productivity growth in the U.S. is significantly higher than in the rest of developed economies. And just 4 or 5 months ago, people couldn't believe that productivity growth was so high relative to Europe, for instance, or Japan. So that's one important thing, which is a structure that's not going to go away. When people say we're going to take the money out of the U.S. and put it into where? Europe? Japan? suddenly people say, yeah, probably we're massively overloaded U.S. assets, but once we rebalance a little bit, the U.S. story is still the best one. And on the bond market, let's remember what Rudy Dortbush used to say: in economics, things take longer than expected to happen, but when they happen faster than expected. So it's impossible to know the timing, but I think at some point the market will test fiscal policy again.
Claudio, it's good to see you.
Great to see you too.
Thanks for being here. Thank you. Claudio Irigoyen there of Bank of America Securities. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross back over to Yahara, who has more. Hey, Yahara.
Hi, John. Iran's foreign ministry spokesperson says the country's nuclear sites were, quote, badly damaged by U.S. airstrikes. That's according to the Associated Press. The comments come after President Trump disputed a U.S. intelligence report that said the attacks didn't cripple core below-ground components of Iran's nuclear program. Meanwhile, President Donald Trump surprising oil traders and even his own officials when he announced yesterday that China can continue to purchase oil from Iran. The comments appear to undermine years of U.S. sanctions on Iran aimed at cutting the regime's main source of revenue. A White House official later clarified the sanctions remain. And Fed Chair Jay Powell continues his testimony on Capitol Hill later this morning. This after he reiterated yesterday he's in no rush to cut interest rates. He did say that if inflation pressures remain contained, the Fed may cut rates sooner rather than later, but he did not take the bait, refusing to point to a particular meeting. That's your Bloomberg brief. John?
Yahara, thank you. Thanks for this morning. Up next on the program, we'll set you up for the day ahead. Plus, we'll catch up with Matt Hornback of Morgan Stanley on underpriced risks in the bond market. Live from New York, this is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The opening bell about 42 minutes away. Equities at the moment positive by 0.1% on the S&P 500. On the Nasdaq, up by 1/3. That's just the price action of the moment. Things can change through the next couple of days. So here's the trading diary for you. Later on, the NATO summit underway at The Hague at 10 a.m. Eastern time. After we get a news conference from the president in about 12 minutes. An hour later, we'll hear from the chairman of the Federal Reserve and his testimony, this time in the Senate. On Thursday, US GDP plus another round of jobless claims. On Friday, core PCE and UMich consumer sentiment. Just minutes now from that news conference with the president at that NATO summit. Bloomberg's Ollie Crook joins us now for more. Ollie, quite a morning already. A big agreement, it seems, and a major target.
Absolutely, John. I mean, this is really sort of a historic moment. I just spoke with the president of Finland, who, of course, was not even part of the NATO alliance 2 years ago, and is now sitting around the table with these other leaders. He was not president. He was called back to run for election to become the leader of that country in order to also now represent Finland around the table. These 32 nations that have come to this massive agreement of boosting defense spending to 5%. Remember, this is the pledge that Donald Trump was really demanding of European leaders, basically saying that they'd been slacking off on their sort of commitments to NATO. And he had sort of floated that number a few months after he was elected, before he was inaugurated. And I would say, John, that 6 months ago, this was really an inconceivable thought, that you would have European countries spending 5% of their GDP going towards defense. And now it has become, as of this morning, a reality. So this is something that Donald Trump is going to claim credit for. And I think no matter who you ask, even here in Europe, no matter how many of these leaders feel about Donald Trump, it is something that he deserves credit for at this stage. We're hoping to hear from him in just a few minutes' time. The couple caveats here, John, that I think are worth pointing out is only about 3.5% of that spending will be on military hardware, guns, ammunition, tanks, that sort of thing. The other 1.5% is a little bit of a fudge that can deal with things like cybersecurity and the infrastructure to kind of move some of this military equipment across the European continent. And again, there's also the question of the deadline. The deadline is 2035, so it gives a lot of runway, and there is a little bit of concern by some of the countries on the Baltic, on the eastern side of Europe, that this could be used to basically, kind of delay the pricing, delay the buying. Potentially, Trump is not president anymore. They could get out of it. But overall, everybody I've spoken to, from the sort of Baltic to the other leaders across Europe, are very content with this agreement, and something that really Donald Trump has made a sort of center stage of his policy proposal, and it's something that he's put through today here in The Hague.
Ollie, important clarity. Thank you, sir. Ollie Crook there at the NATO summit in the Netherlands. There's going to be a lot of spending on defense in Europe and again in the United States. What does it mean for fixed income and this bond market? Matt Hornback of Morgan Stanley joins us now for more. Matt, welcome to the program, sir. We're going through the mid-year outlook from yourself and the team. Let's talk about the bond market call and the dollar call with that in mind. What's the new base case for you and the team?
John, thanks for having me on the show. We see both of these assets going down. The dollar we see going down in price. We have the dollar depreciating about 10% over the next 12 to 18 months. And then for Treasury yields, we have Treasury yields also falling. We have the 10-year yield ending this year at 4%, and we have it ending closer to 3% by the end of 2026. Now, both of these forecasts, of course, are related. They are driven primarily by a Federal Reserve, which ends up cutting policy rates much more aggressively than what markets are currently pricing in. We're more confident, I would say, on the magnitude and the direction of those rate cuts as opposed to the exact timing of those cuts. As I'm sure you read in the note, we don't have the Fed cutting this year, but we have the Fed cutting a lot next year. That's an interesting feature of the outlook, but is one that's subject to change, of course.
Matt, what are the economic conditions that lead to those deep cuts in 26?
Yeah, so ultimately, the first is that we get past the hump on tariffs, right? Tariffs create a temporary inflationary impact. Our economists have that impact concentrated in the third quarter of this year. And then by the time we get to the fourth quarter, those tariff effects are starting to fade away, and you begin to see the weakness in the labor market really come through. That's ultimately what catalyzes that discussion on the Fed to begin lowering rates, which our economics team has happening in the first quarter of next year.
Why aren't you worried, Matt, that when the Fed does lower rates, it won't cause the long end yield to rise, akin to what we saw last year?
Yeah, well, I think what happened last year, Lisa, is the Fed did cut rates and interest rates did go down temporarily, but then we went into the U.S. election and the market, being forward-looking, began to speculate on what was to come after the election. And of course, at that time, investors were thinking about much larger deficits, more government bond supply, kind of a better economic outlook than we think exists at the moment. So it was a different time, and we're not expecting that to happen again, at least for another 3.5 years.
Matt, given the discussions heading into July 4th and then July 9th, it does seem like the deficit's going to deepen in the United States. Why is that not a threat to your call to go into duration, to buy those 10-year bonds that maybe other people are steering clear of?
Well, the expectations for the deficit have actually changed. Investors didn't expect the Trump administration to do as much with tariffs as they have done. And so when we think about what kind of revenue are these tariffs going to generate, and don't ask us, you can ask the Congressional Budget Office what it thinks about the revenues generated by the tariffs that are currently in place today. And the CBO scored that tariff revenue around $2.5 trillion over 10 years. Presumably, some of that's front-loaded. So we are seeing a meaningful increase in revenue that was not expected coming into the year. That's going to mean that deficit expectations are actually lower than where they were right around the time of the election last November.
Matt, have you got a window in that office? Got an external window, some daylight?
I do have some daylight.
Good.
But really my daylight comes from the picture of my daughter behind me.
Oh, that's beautiful. Matt Hornback of Morgan Stanley. Matt, thank you. That's touching, isn't it?
Did you set him up for that?
That's beautiful.
You were like, okay, your daughter's going to be listening.
I was about to say Ted Pick should give him an upgrade and give him a better office with a window.
Well, he has one, but then he had to go to his family. He has a window into the love of his family.
Isn't that touching?
It is
touching.
touching.
It's a beautiful thing. It's a reminder that none of this matters. Just that.
Yeah,
family.
except that, and then you have the rest of the day to go ahead and, do business.
Like this, coming up tomorrow. Stacked program. Scott Croner of Citi, Jim Zelter of Apollo, the San Francisco Fed President Mary Daly, and Russell Brownback of BlackRock. Mary Daly is the interesting one there. Out of all of those, we love the rest, but of course, Mary on the Federal Reserve, given day 2 of Chairman Powell, is coming right up.
Yeah, how much dissent is there actually on the FOMC, or is there some sort of coalescing around the idea of what data they are watching and what the path of travel is going forward? Can they cut, for the right reasons, disinflation without the weakness in the economy?
And how much is getting done in the meantime? The so-called macro paralysis that Zelter talked about a few months ago. We'll get an update from Jim tomorrow morning too. From New York, that's enough of us. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
We'll have to see over the next 3, 6, 9 months how the tariff discussions play out and what does it mean.
I do factor in some effects of tariffs now on inflation, on prices.
I like the idea of the 10% tariff across the board.
I've spent my entire career focused on fiscal discipline. I don't think these people have the foggiest notion what they're doing. And I think DOGE is doing tremendous damage to government.
Elon Musk is probably the inventor of our age, but who understands that we're in the midst of the most profound convergence among technologies.
When we are facing a once-in-a-generation technological disruption,
we cannot close this retirement gap without private-public partnership. We have to have good policy.
Do you think, Dawn, that the market is correct to be, as of now, pricing in 3 rate cuts in 2025?
I would take the other side of that bet.
incidence of cancer, which is to say people getting it, is higher than it was 20 or 30 or 40 years ago. Is that because detection is better than it used to be?
All right, so the dirty secret is we have no idea. We don't collect data well in the United States. What we do know is that there's not a dramatic rise in cancer in the United States, but what we are seeing is a troubling trend is younger people are getting more cancers. That's real. We have no idea why, but we are seeing younger people, more colon cancer, more breast cancer, and other cancers in younger individuals, 20, 30, 40-year-olds, that we never used to see.
What do you think could possibly be the cause? I assume pollution or the environment in some ways?
We assume it's either something in the environment, we assume it's diet, it's ultra-processed foods, it's microplastics, it's changes in the microbiome. We really don't know.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We are headed for a record 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, President Trump prepares to deliver remarks from NATO this hour and reiterates his claim of complete and total destruction of Iranian nuclear sites. Meanwhile, on Capitol Hill, investors await a second day of testimony from Fed Chair Jay Powell. Treasury yields fell as he spoke yesterday, and the NASDAQ 100 set to extend its record-setting rally. We may get a record on the S&P today as well as we await Micron earnings after the bell. Katie, what are you watching?
Let's talk about what we saw on the earnings front yesterday afternoon, because FedEx shares down mightily right now after it said that profit will be worse than expected this quarter due to the impact of President Trump's trade war. The firm also noted the huge plunge in U.S.-China shipments last month. It also declined to provide a full-year guidance look. You can see shares down about 5% at the moment.
All right, I'm also watching General Mills. It is also out with a forecast that disappointed the street as Americans limit grocery spending on their cereal products. You can see the stock is down 3.3%. Katie?
All right, we'll tackle the earnings front, but let's talk politics, because while trying to strike deals with NATO countries in the Netherlands, President Trump is disputing a leaked U.S. intelligence report. The president has repeated that the nuclear sites were, quote, obliterated last weekend, while an early assessment from the Pentagon's Defense Intelligence Agency said that the bombing likely didn't cripple the core components of Iran's program.
They said it was actually, the report said it could have been they don't know. I mean, they did a report. I could have Pete talk to it because his department did the report. They really don't know. I think Israel's going to be telling us very soon because Bibi is going to have people involved in that whole situation. We hear it was obliteration. It was a virtual obliteration.
Joining us for more on the Iran assessment, a virtual obliteration, and NATO summit is Bloomberg political correspondent Tyler Kendall. She is in Washington, D.C. So, Tyler, I guess the most interesting thing here is that President Trump is contradicting his own Pentagon report. Why?
Yeah, hey, Matt. Well, it does seem like President Trump is trying to put forward that there was more substantial damage. And we should say, you showed the headline at the top there, that Bloomberg News had confirmed earlier reporting that a preliminary intelligence assessment shows us that the U.S. airstrikes had a limited impact. That's according to people familiar with the matter. Sources say it likely set the program back several months to a year, but the White House has really rejected this assessment. And the other side of it is that analysts tell us that it is going to take a longer time to get a more firmer assessment of the damage that did happen. We heard from President Trump also at the NATO summit suggesting that perhaps the Israelis could come forth with a more firm assessment about the complete destruction at those sites. And I would also point out that we did have retired General Frank McKenzie on Balance of Power last night. He's the former commander of U.S. Central Command, and he said that he would put some caution in preliminary reports because it does take some extra time. One of the big questions here that's also going to take time is that there is still a big question about where the stockpile of enriched uranium currently is. We had heard from the Vice President, J.D. Vance, who suggested that perhaps it was buried in these strikes. But the IAEA has said that their inspectors at the moment haven't been able to get in to locate it.
Yeah, it's interesting. The AP also reported that Iran, for their part, said that their nuclear installations were badly damaged by the U.S., but that might be some maneuvering on their part. Let's talk a little bit about NATO and what President Trump is doing in the Netherlands, because it certainly seems like a victory lap moment, especially when it comes to defense spending.
Definitely, Katie. I mean, President Trump really does view this as a win for him, considering he has called for NATO allies for so long to boost their defense spending up to that 5% GDP target. And we should say we've actually heard him use this rhetoric, particularly when it comes to trade deals, too. Often when he's talking about striking deals with the European Union and those member nations, he brings up his qualms when it comes to their defense spending. And it's also interesting, though, because President Trump's sort of walking the line here, though, when it comes to him being happy with them boosting their defense target, but not totally in support of Article 5, which would mandate that any of these nations would come and defend each other if under attack. President Trump, on his way over to the summit, said that there's multiple definitions of what Article 5 would really look like. Now, another thread that, of course, we're watching here is that we are expecting President Trump to meet shortly with Ukraine's President Zelensky. He does say that he has been in touch with him, but the other side of this is that we've heard many times from President Trump in recent days that he's also been in touch with Russian President Vladimir Putin.
All right, so a lot of conflict, a lot of geopolitical issues to deal with. What about trade? Tyler, do we expect any announcement from President Trump on tariff deals?
So at the moment, it's unclear if we're going to get something at this summit. I will say that I did ask NEC Director Kevin Hassett earlier this week at the White House when we can expect the next trade deal, and he told me likely after he sees the Senate get done with the reconciliation package. And that does track with what we also heard from Treasury Secretary Scott Bessent yesterday on Capitol Hill, who's essentially said that they're falling into a timeline here. They are, in their view, they've resolved the conflict in the Middle East. Next, they have to hit the July 4th target for the tax package, and then they will see the trade deals start to emerge. Now, of course, there is that July 9th deadline that really is looming, but the Treasury Secretary has previously said that it is highly likely they could extend it if they start to see some serious movement on any of them. Matt and Katie, I'd point you to the fact that yesterday we heard from the EU about how they are preparing retaliatory tariffs if there isn't some sort of progress here. They did say that they have made some, but at this point it might be all relative, considering that the Commerce Secretary Howard Lutnick has previously indicated that the EU and these European nations might be last in line for a deal.
All right, Tyler, great update as always. That is Bloomberg's Tyler Kendall joining us with the latest from Washington. Let's turn to earnings now, because FedEx under pressure in a big way as tariffs eat into profits. The company withheld its yearly forecast when it reported earnings last night, with the trade war creating, quote, an uncertain global demand environment. Joining us now to discuss is TD Cowen analyst Jason Seidel. He has a buy rating on the stock with a $269 price target. Jason, great to have you with us. You take a look at the details of this report. You consider the fact that they're withholding guidance. It doesn't look great, and you're seeing that reflected in the stock price right now. You're sticking by that buy rating that you have. Tell us why.
Yeah, well, look, I think there's a few reasons why. When you look at what FedEx has been doing over these last couple of years, whether it's their drive program to sort of generically take out a lot of costs in their network, or the Network 2.0 plans that they have to combine both ground and express, we really think they're setting themselves up to really lift their margins once the business levels come back, especially in the B2B and industrial sectors. So we just think that in the out years, FedEx is going to look a lot stronger in terms of their earnings power. Plus, you have the freight spinoff that's coming sometime in the middle of next year. We think that could create some value. You also have to remember that because of this spin, what they're doing now is incurring a lot of upfront cost, particularly on the sales side, by ramping up that individual LTL salesperson spend.
Jason, I wonder if we're backing away from globalization, if we're looking at deglobalization, right? We stop buying goods from overseas and start making them more at home. How is FedEx a winner in that scenario, which is going to stick, right, for at least 3 more years?
Well, I think when you look at the domestic marketplace, I mean, that will really help their domestic volumes. because anything that's manufactured domestically tends to have more of a multiplier effect on the transport side. So it'll probably really help their freight business out the most, followed by their U.S. Parcel business. But right now, what we're seeing is really pressure on that Trans-Pacific trade, which for them right now is one of their more profitable lanes. You saw growth in the month of March, you saw growth in the month of April, although less, and then you saw a fall off in the month of May. And that's going to hurt their earnings in the near term, and that's why we cut some of the numbers for the out quarters, despite them not providing guidance. We chose to be a little more conservative.
And so when it comes to FedEx, you think about some of the issues that they're facing. I mean, this seems like an industry-wide pressure when you think about some of the forces that Matt just mentioned, deglobalization and the like. How much of this is idiosyncratic to FedEx versus something that all of its competitors are dealing with as well?
No, I think this is something that you're going to see across the board. We've done a bunch of channel checks throughout the supply chain for providers, and it's sluggish out there, particularly on the trucking sector. When you look at the international container volumes, there's had that air pocket. Now things are coming back. But, we hosted a call with the head of the Port of LA recently, and he was telling us that, for the peak season, that's more of the trucking and rail peak season, not the parcel, that orders looked a little bit down year over year when you look out to the fall. So I think it's sluggish right now. I think this affects everyone. I like the fact that FedEx has trimmed down their network and sort of, preparing for some of this. And I like some of the things that they're doing in terms of a spin. So, we're sticking with the stock. It's probably going to get a little ugly today. We think that's going to present a buying opportunity for longer-term shareholders.
All right, Jason, really appreciate your time today. Jason Seidel there of TD Cowen talking FedEx, and shout out to the Orange Men of Syracuse as well. Some more movers on our radar this morning. Micron reports after the bell. Those shares have doubled since April. They're down about 1.3% right now, but it's really kind of a guppy in the sea of chip makers, right? It's worth $150 billion, which used to be a hell of a lot in terms of market cap.
Yeah, good context there. It might be a guppy now, but it would like to be a big fish, so we'll see its progress report after the bell today. Loop Capital also raising their NVIDIA price target to a street high and predicting its market cap could reach $6 trillion. That's your big fish right there.
$6 trillion. That is absolutely nuts. Coinbase, you can see gaining 5% here as well. Bernstein upgrading that stock on hopes revenue at Coinbase will double by 2027.
Now coming up, Hims & Hers Health CEO, he's not backing down after Novo Nordisk ended the partnership between the two companies earlier this week. We'll take a look at that brewing battle up next. This is Open Interest.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function. It's being an executive for the company.
I would say it's prioritization.
Complete the sentence. the hardest part of being the CFO is?
Telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
Very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Let's get to high interest now. Look at what's making headlines around the world. A shocking upset in the Democratic primary for New York City Mayor. Zoran Mamdani is poised to win the Democratic nomination after a commanding win in the first round of voting. The Queens lawmaker ran on a platform of freezing rents and free public bus rides. His rival, former Governor Andrew Cuomo, has conceded. And just a disclaimer, Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent company of Bloomberg TV, did endorse Cuomo. Now, Bumble shares soaring in the pre-market after announcing it's cutting its global workforce by about 240 roles. That's 30% of the company. Bumble also boosted its guidance for the second quarter, and as a result, you can see a 15% gain here in the pre-market. Hims and Hers is standing firm after Novo Nordisk abruptly ended its distribution partnership over what it calls deceptive marketing. In his first interview since the breakup, Hims CEO Andrew Dudum says they won't back down from offering cheap weight loss shots. The shares are up, but they had their worst single-day drop earlier this week on news of that breakup. Katie?
Yeah, specifically about 35%, I believe, in a single day. So for more on Hims pushing back on Novo, Sam Fazeli of Bloomberg Intelligence joins us now. And Sam, this is the quote that the CEO gave to our Madison Mueller, saying, "There's just no way in hell we're going to cave on that, no matter who the pharma company is or what the partnership looks like." I mean, Sam, I'm curious to hear your perspective on the fact that, I mean, Hims and Hers is trying to stand firm here and trying to continue to sell these cheaper weight loss shots.
Yeah, so obviously that's the kind of surprise, or not maybe. I mean, this is a cutthroat business. There's a lot of money at stake, a lot of money that people can make from obesity drugs. And I have to be honest, when Novo first announced this partnership, if you want, I was a little bit surprised. I think the market was generally a little bit surprised. And I think Novo was under pressure to get, or continues to be under pressure, to perform better commercially. Lilly has got what looks like a better product, Zepbound, in terms of the data that they've presented. So, you know, they were trying all kinds of avenues, and this was one of them. And it sounds like that the two have not been able to meet eye to eye in terms of how to conduct this partnership. And what's surprising is that Hims, despite the fact that the FDA has said you cannot compound anymore, has found a way to continue to do this. A possible loophole is the best I could put it. So, and don't forget, just to wrap this up in the first comment, is that we do have a situation where that deal was done under the previous, or the CEO that they had. There's no CEO yet, but maybe there's some elements of that also played in, and the company decided to change tact.
Sam, what are the deceptive marketing claims? I note that Hims and Hers also sells medicine to regrow our hair. Will it actually work?
Yeah, but look, Matt, if you and I really believed that, we wouldn't be sitting here looking like this, right?
You guys look great, by the way.
Thank you. My wife thinks so too. But in any case, I think the issue is that it's easy to use words like this, deceptive marketing claims. Maybe Novo is referring to the fact that the company is using that, what seems to be a loophole in the FDA rules against compounding. And it's possible that they're going out there saying things that Novo believes are not correct, which is like, you know, we have fractional dosing, we have different ways that you can get access to our products. maybe they have methods of helping people, walking people, hand-holding individuals. I don't know exactly. I've never really looked in too much depth as to exactly what HIMSS is doing. But then, so those are the sorts of things that I think could be happening. And, you know, I think this is a breakup, and breakups are never that pretty.
They say baldness can be optional, Katie.
Really? On HIMSS and
so
hers?
I could choose, me and Sam could choose, if our wives didn't love the way we looked, which is what they say, right? But we don't.
They're
know what they're
contractually
really
obligated to find you handsome. But anyway, Sam, I want to talk a little bit about what this means for Novo Nordisk. We were talking about the big drop that we saw from HIMSS earlier in the week. You also saw Novo shares fall, since this partnership was one of the ways that they plan to reestablish themselves in the U.S. market, try to take back some of that market share from Eli Lilly. I mean, where do they go from here?
Yeah, so Novo's bigger issue, if you like, for want of a better phrase, is to catch up with Lilly on its pipeline. Now, Lilly has got a whole variety of drugs in development. We've just seen data at the American Diabetes Association conference on their oral product and some of their amylin equivalent. You know, these are the newer products that are coming along. And then Lilly looks in a very strong position. And in fact, my colleague, Michael Shah, who was there, kind of gave them the conference, although he agreed, of course, that Novo had a significant presence too. But they have a lot of catch up to do. There's a lot of work for Novo to do on these novel combinations, etc. And that's where the focal point is at the minute, I think. I think for them to compete, they need to get this broad menu of products coming along going forward.
Absolutely. Sam, great to get some time with you. That is Sam Fazeli of Bloomberg Intelligence. I do want to meditate a little bit on the divergence that we're seeing between Novo Nordisk and Eli Lilly. If you take a look, I have a 3-year chart pulled up right now. There's the 5 years. You can see really they were trading kind of on top of each other. Then fortunes started to change. Eli Lilly remaining resilient, and Novo Nordisk really falling from its highs. That's ultimately why we saw the company oust its CEO, Lars Frogard Jorgensen. But I like to focus on these kind of duopolies. You think about Uber, Lyft, you think about Airbus and Boeing. There's another example.
Well, I mean, I'm sure a lot of drug makers are hoping this doesn't stay a duopoly, right? So drug makers like Pfizer looking to get it in the game as well. It's going to be the pill that really proves the winner here, because I think aside from the early adopters, not everybody wants to inject himself or herself once a week.
Not investment advice, but an interesting perspective from our own Matt Miller.
No, never. Coming up, is tariff fear actually priced into this market? It sure doesn't feel like it as we approach a record high on the S&P 500. We hit one on the NASDAQ 100 yesterday. The chief strategist at UBS, Bonabuejo, says nope. We'll ask Robinhood's Stephanie Guild next. This is Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We're
basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
At this point, tariff fear is back at zero. And on July 9th, we may get tariffs going up, going down, we don't know. But at this minute, what we do know is that tariff fear is completely priced out. So given that this market has already climbed significantly higher walls of worry, given where we are going with tariffs on July 9th, we think it is, the caution is what is warranted right now. So at this minute, we won't be chasing the markets higher.
And that was the chief strategist over at UBS warning about complacency in markets when it comes to that coming tariff deadline. So let's discuss now with Robinhood Chief Investment Officer Stephanie Guild. Steph, it's great to see you in person.
Thank you.
So it feels like we might have forgotten about July 9th. Of course, that tariff deadline coming up. We also have that self-imposed July 4th deadline to get the big, beautiful bill across. And you add it all together.
August 12th, too, China.
There you go. So you put that all together, and against that backdrop, you could make the case that, okay, maybe a new record high in the NASDAQ 100 could look a little bit complacent.
I just think the whips, I've said this before, but I'm like the whipsaw factor is high, and the market has a lot of hope, and it will continue to have that. I think the market is assuming that tariffs will come in around that 10% mark on average, and that the economy and companies can bear it. And I don't know if you saw some of the data that recently came out showing how companies just immediately, like 75% of companies just immediately increase their prices, some are partially, in terms of the tariffs that did come through. So I think what company investors are assuming is that everything's going to end up being okay and they can look past it, just like what happened over the weekend is being looked past too.
Do you feel like a lot of the things we were worried about at the start of Trump 47 are turning out to be okay? Like, it does look like companies aren't passing on so much in terms of cost to consumers.
I don't know. I think the jury's still out on that. So that's why I sort of believe, agree with Powell is what I should say, because I think he's waiting to see, is it really true that it's going to be okay or not? And we don't know what the answer is. My target on the S&P is 6,200. We're not that far away from that. Wow. So I do think like valuations are not leaving very much room for error, and earnings expectations are already 9%.
Right.
So I'm not sure that we can go much higher from here, but
all
for
right,
different
Steph,
reasons.
we are just getting started.
Yeah.
We're back with the opening bell in just a few minutes. This is Bloomberg.
You were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer's customer, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
You could potentially see a brand new all-time record high for the S&P in the next few seconds. We're moments away from the start of trading. This is Bloomberg Open Interest. In the pre-market, we're looking at a gain of 0.2% on the S&P 500, 0.4%, double that, more than on the NASDAQ 100, which itself hit a record high yesterday. So this market really wants to rally. Near the opening bell on the New York Stock Exchange, you're going to see Jose Batista Sobrino, the billionaire owner of JBS, a meat processing company out of Brazil. So that's delicious at 9:30 in the morning. And then Crane shares, and check out, they have a little humanoid robot here. The idea is they have this ETF, KOID, KOID, and Benzinga says it's your entry to the $5 trillion humanoid robot market. But it's only been trading for a few days now. So.
Yeah, there you go. And thematic ETFs, they've had a pretty rough couple of years as of late, but we'll see how KOID fares. Let's talk about FedEx, though, down 5% at the bell. They reported earnings last night. They said that profit will be worse than expected this quarter due to the impact of President Trump's trade war. The firm also noted that huge plunge in U.S.-China shipments last month, also declined to give full-year guidance. You add it all together, shares taking a leg lower this morning, Matt Miller.
All right, so those shares are down. Shares in General Mills are also off after the cereal maker came out with a disappointing forecast. North Americans aren't spending as much on Cheerios as analysts would like, and as a result, the shares down only 0.5% in the pre-market, but it's a big $30 billion company, so we thought we'd bring you that news. Goldman Sachs is warning that risks are mounting for low-quality stocks that have been riding this market rally higher. Look at the non-profitable tech basket versus the S&P 500 here. Senior trader Lewis Miller says these low-quality stocks are being driven higher by short sellers covering their positions rather than by positive corporate fundamentals, and higher inflation readings could be a turning point. We're back with Robinhood Chief Investment Officer Stephanie Guild, and I guess, you know, the rising tide lifts all boats, even the bad ones. Do you think that sets us up for another leg lower?
It's always possible, right? Like, we definitely believe in investing in companies that have profitability. That's kind of the core of our Robinhood Strategies portfolios. And I think some things have been helped more recently. I mean, the rallies, I feel like it's only been a couple days of a rally, but rates are lower. So if you're thinking about rates being lower because inflation expectations have come down again, you know, the Fed cutting has started to creep in to be a little bit sooner. I think all those things help low quality stocks. Small caps on average tend to have 30% of their debt that's floating rate. So they really do need rates to come down to look higher quality. And you've seen small caps rally in the last couple of days, but they're still down for the year.
Yeah, absolutely. I track the Russell 2000 with some intensity, but when it comes to what you're seeing on Robinhood's platform, I could ask this about a different class of stocks. You think about what's going on in small caps, low quality stocks. You also think about what's going on in energy equities, also seeing a lot of interest lately. Are folks actually chasing those rallies?
We haven't seen people chasing the energy stocks. It's something you look at it and you say, oh gosh, should I be jumping in here? But I really do think it was short-lived. That being said, power needs for AI and for you seeing it all the time, like that is something where you're seeing a huge amount of CapEx go into, and power companies and maybe even energy companies should benefit from that. So that's a different reason, and may not necessarily be chasing it in a little more like secular in nature.
The big hyperscalers need that power. They keep making deals with nuclear power producers. What about the hyperscalers themselves? I mean, the Magnificent Eight. I'll say that for Katie because she wants Broadcom to be included.
Avcom. I don't want it necessarily. I'm just saying it's an interesting discussion to have.
They have to change their ticker first.
Yeah.
Nobody wants to buy Avgo. No,
right?
Obviously, it's huge. Everyone has been buying Avgo. So, do you think that continues?
I think size helps you no matter what. And they are certainly at the forefront. You are hearing about in certain companies like Meta going out and just giving people crazy bonuses to join the team to focus on artificial intelligence and how to actually make it come into all parts of our lives. I think over time, these companies could end up winning because I do think AI is, one, disinflationary, brought like longer term, and I think it's definitely going to be part of I see it, like, I don't know if you all feel it, but I feel it personally. Yeah. And so I do think it's something that we're going to not stop seeing. I think we're out of like the chip makers being like the only way to play it. That's what, and I think our customer base is seeing that too. And they're not afraid of taking bets in like other things like quantum computing, which we've seen.
Yeah, absolutely. There's some ETFs that track quantum computing that have just been absolutely skyrocketing. But it does feel like Meta, for example, when it comes to investment playbooks moving outside just the chips, that definitely is a name that comes to mind. But you mentioned inflation, so let's talk a little bit about the Fed. It's been interesting to listen to Jerome Powell over the past 24 hours, pushing back on some of his FOMC members, maybe saying that July is in play. How much does it actually matter whether we get the next rate cut in July or in September, or maybe not even until 2026?
I think it matters if we get it this year versus next year. I do think the Fed is they're being rightfully patient, in my opinion, for just a little bit longer. I think the two Fed governors who are really into, being a little more dovish might have some ulterior motives, to be honest.
Perhaps a little bit political?
A little bit just, seeing things that others are, because if you saw in the last economic projections, I think the number of governors who wanted to actually hold went from 4 to 7. So I think there are more governors that believe that we should hold on, and the economy can take it for now. We have to see what happens with the labor market, to me in particular.
I have not found it interesting to listen to Jerome Powell. At all.
He's so steadfast.
It's more interesting to listen to the crazy Congress people, right? I mean, they lead this country. It's nuts.
Well, that's exactly how he wants it. He's trying not to be interesting.
Well, yeah, they make him boring.
He's just being steadfast.
Stephanie, you like Circle here. This is a company, the stablecoin, I guess, issuer, thank you, that is worth 7 times what it sold for in the IPO. Like, what is going on there? Is it just a small float? Is it impossible to get short? Do you think this company really is worth 7 times more than investors paid for it 2.5 weeks ago?
So we don't personally own it in our portfolios, but it's definitely a company that has gotten a lot of at right place, right time, for sure. Like from a regulatory perspective, you said from the float, it's the shorting, and it's a company that is just involved in something that I think is the future of finance. It's just going to take probably a little longer to actually be core to finance. So sure, in all these kinds of things, can valuations get ahead of themselves in the short term? I think so. But in the long term, I also believe that stablecoin and digital currencies will be a innate part of financial services.
I'm really interested to see how this develops on the ETF front, not to, be a hammer that's only looking for nails. But you saw so many issuers come out with single stock ETF filings of Circle. They'd probably use derivatives to get that exposure. And I'm really interested to see if traders short those ETFs if they can't get a hold of Circle. But that's really speculative. So we'll have to see how that one develops.
Are there not inverse ETFs?
Not yet.
For Circle?
The thing just went public. So you have to file for an ETF, and then the SEC has to give its green light. There is some regulatory process.
I'm interested in COID.
The little robot?
The humanoid robot ETF.
Yeah,
you just see the one that has like jet powered now. There's like a new, there's one they just created that was like able to have
Crane
lift
shares?
off.
Or
No,
the
just like a
robots.
general company, like, was able to make a robot that jets.
I try not.
That's the one I want.
I try not to think about robots too much. I could get existentially worried. Steph, great to see you. That is Stephanie Guild of Robinhood. Let's get a check on this market right now, and that rally underway in the S&P 500, up about 0.2%. Today could be the day where we get a fresh record high on the S&P 500. But here's a worrying sign. Breath not too great at this moment. You have 138 names in the green. You have more decliners, over 350 decliners right now. You take a look at what is holding up this market. It's the stocks that you would want to see: NVIDIA, Apple, Alphabet, Microsoft, Broadcom, Avgo. Matt loves it. Really putting in the work here. But then you take a look at the downside. A big weight in the likes of Tesla, off of only about 1%, but it's such a big company that is your biggest points contributor to the downside. You also have United Health and Paychex, Berkshire Hathaway down too. Let's take a look at how this shakes out on the sector level right now, and it's a similar story. Bad breath up at the top. Infotech holding up this market. Communication services and discretionary a little bit as well. Definitely more red today. Financials there. You go down to the bottom. Energy, utilities, and real estate off about 1.3%, Matt Miller.
I'm looking at Iron Cub 3, which is apparently the world's first jet-powered humanoid robot.
I did not know that.
I didn't either, but now this is the one I want. Coming up, Micron among the stocks that helped push the NASDAQ 100 to all-time highs. We'll discuss that company's earnings and this big tech rally next. This is Open Interest.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this.
Stargate, put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Stellantis climbing on an upgrade over from Jefferies. The analyst saying most of its challenges are, quote, self-inflicted and fixable. Some harsh words, but the shares are up almost 5%, so that's good news. Next up, Bernstein raising its price target on Coinbase to a street high of $510, expecting annual revenue to more than double by 2027. Shares currently up also almost 5% if you round up. And finally, we end with Loop Capital raising their NVIDIA price target to a street high of $250 a share. The analyst over there predicts that its market cap could eventually reach $6 trillion due to relentless demand for its AI products. Shares currently trading about $100 below that. Now, we're talking about NVIDIA. Let's talk about Micron, because that's the next major AI player to report earnings after the bell today. Shares have roughly doubled since April, with the options market today pricing in an 8% move for Micron after the report. Now, Micron stock has helped to push the NASDAQ 100 to all-time highs as big tech really drives the current market rally forward, and that certainly is the mood today, Matt.
Yeah, absolutely. Let's talk about what to expect from Micron and Bloomberg Intelligence analyst Jake Silverman. He joins us here on set, and Bloomberg Tech co-host Ed Ludlow in San Francisco. Jake, I'll start with you. This is a company that has had its ups and downs. I was telling you during the break, I covered this when I started working here in the year 2000, and it's only risen 46% since then, but it's doubled since April. What's driving that?
Yeah, a lot of that really is just based on pricing strength that we've seen over the last couple of months. I mean, again, you have to keep in context that in April we were seeing potential threats from trade-related, tariffs, stuff like that. So there's definitely, some expected improvement in terms of supply and demand balance.
Let's bring Ed Ludlow into this conversation, and let's compare and contrast here, because we're talking about Micron, and it's had a fantastic run over the past couple months, Ed, but it just feels like everything is table stakes compared to NVIDIA. That is the benchmark against which all chip makers are judged.
Yeah, a little bit. I mean, since the April low, AI is still the primary growth narrative, right, for the technology sector. But I think we talked about this on the program. The idea is that investors are kind of rummaging a little bit deeper into the server design, looking beyond NVIDIA and looking, okay, around the GPU, what else is in there? And Micron and its high bandwidth memory is a big part of that. Jake raises a really interesting point that there is a scarcity value to what Micron does. You know, ultra high demand for high bandwidth memory, and you have to assess how much of a bottleneck that is for people building out infrastructure. Because when NVIDIA comes around with earnings, expectations are super high, but we always ask the question, is there a supply constraint here? In other words, could you have more of these GPUs from TSMC to meet demand that you're not currently meeting? And Micron, there is some analogous comparison there as well.
Ed, you taught me all about high bandwidth memory, so I appreciate that.
Yeah.
Good reason to watch Bloomberg Tech. It's not all about DRAM for this company anymore. Are they the only ones? You know, because NVIDIA likes to paint itself as the only one or the best of the GPU makers. Is Micron the best of the HBM makers?
No, not necessarily. There are essentially three players, which are Micron, SK Hynix, and Samsung. And actually, we're still quite early in this phase where the highest performance GPU makers or chip designers like NVIDIA, and those that design, build, and operate data centers are still validating and qualifying which works best. But Micron is clearly able to capture some of that market, particularly domestic market in the United States, because remember, in parallel to the sort of basic bottleneck of limited supply is the political effort to onshore manufacturing and build out capacity. Think of high bandwidth memory as just many little DRAMs squished together with wires running through them. That's basically the reality of it. The problem that Micron's got is that building that capacity is super expensive, and you had the headlines in the last month about their upped commitment to the United States of America. Jake and I were actually debating offline at that time, like, is this real? They just seem to be making numbers up to a certain extent. But they also still have that legacy NAND and DRAM business that is more cyclical, it's more commoditized, and they have to balance that as well. So watch margins a little bit when we get the numbers this evening.
Right, that's exactly where I wanted to go, Jake. I mean, Ed makes a great point when it comes to how expensive some of this is. And you think about margins, they were actually a little bit disappointing in the second quarter. You think about this fantastic run that Micron has had. When it comes to margins and you think about the stock performance, could it be a victim of its own success? How high are the stakes right now?
Yeah, well, margins are very important. They're a pretty important driver in terms of their valuation, but also obviously in terms of generating free cash flow. So I think one of the reasons that we were seeing some margin compression was because of NAND weakness in the business. But overall, if NAND is able to recover, if we're able to see solid supply and demand balance, and also if we see more and more HBM demand, which all the signals are pointing towards yes, as supply continues to increase and as they're able to improve yields, all of those are potential signals that margins could expand beyond what we're seeing now. And people are, of course, going to take a look at how were margins able to grow in the last cycle and compare the potential growth or margin expansion in the current cycle.
All right, Jake, great to get a primer from you and Ed. Jake Silverman of Bloomberg Intelligence, Ed Ludlow there of Bloomberg Tech. His program starts in an hour and 10 minutes. Could be preempted by either Jay Powell giving testimony today on Capitol Hill or President Trump. He is set to speak at the NATO summit this hour, but everything there seems to be being shifted later and later. We'll bring you the president's remarks as soon as he begins speaking. This is Open Interest.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what stocks are doing. So close to a record high for the S&P 500. You can see we're at 6,100 right now. So we just have basically 45, 46 points to go until we'd hit that closing all-time record from, I believe, February 19th. The NASDAQ hit a record yesterday and continues to climb even higher. The NASDAQ 100, I should say, at 22,273. In terms of the movers today, the big one is NVIDIA, and it's up 2%. So for a $3 trillion plus company, that makes a big difference. Micron is down, but it's only worth $140-some billion, so small in comparison. Stellantis moving up, Tesla moving down, Bumble cutting a lot of workers, and you can see Meta, Facebook unchanged there. But I guess the real deal right now, Katie, is we're waiting to hear from President Trump at NATO.
Absolutely. President Trump about to speak any minute from the NATO summit in the Netherlands. Back home, the president is facing a self-imposed July 4th deadline to pass his tax and spending bill, and he's 2 weeks out from the July 9th expiration of that global tariff pause. On all of this, let's bring in Bloomberg Washington correspondent Tyler Kendall. Let's start.
Look at the big man walking out to the podium there.
There we go. Yeah, due to start speaking any second. Tyler, just give us a drumbeat, what we've accomplished at NATO. We know that NATO leaders did back that plan to raise defense spending.
Yeah, hey, Katie. Well, President Trump really is billing this as a big success in his own words, since they did pledge to boost defense spending to 5% of GDP. That is 3.5% in core defense and then 1.5% in other sorts of investments, such as infrastructure or cybersecurity. And I'd point you to the fact that our analysts at Bloomberg Economics have actually crunched the numbers, and they say that the estimated borrowing by these economies to reach this spending limit would add about $4.6 trillion to debt piles over the next 10 years. Now, President Trump got this win when it comes to having our allies boost their defense spending, and what NATO Secretary General Mark Rutte got was a firmer commitment to Article 5 when it comes to these NATO allies and their pledge to defend each other if they were attacked. Now, on the way over, President Trump had said, as he was getting into Marine One, that there were different sort of definitions when it comes to Article 5, though he did say to leaders here at the summit that he does stand firmly behind it.
We're just getting headlines that President Zelensky had a long and productive meeting with President Trump. And I guess as we're all focused so much on Israel and Iran, the Ukraine issues have not fallen on the back burner, but it just hasn't been in the news cycle. How does that look set to work out in terms of President Trump's support of Ukraine?
Well, actually, much to your point, Matt, a person familiar who was in the room with President Trump and other NATO allies said that he told leaders that the situation in Ukraine has, quote, gotten totally out of control. So it is clear that this White House does want to see some sort of progress, some sort of movement when it does come to that conflict, considering that President Trump has previously pledged that he would be able to get them to come to some sort of resolution. We know that the president has spoken with Russian President Vladimir Putin in recent days, who offered to mediate the conflict when it did come to Israel and Iran. And he said openly that he told the Russian president that he should focus on mediating his own conflict first before getting into any other issues.
All right, Tyler, thanks very much. Tyler Kendall there in Washington. I guess I didn't see the really big one walking out too. But we are waiting for President Trump to walk out to that podium any minute now. And as soon as he begins speaking, we will bring you those remarks at the NATO summit. Also, Fed Chair Jay Powell is back on Capitol Hill, this time testifying before the Senate Banking Committee. They will be getting set up there right now. You heard his opening remarks yesterday because he delivers essentially the same speech to Congress that he does to the Senate.
But the questions will be different.
But the questions will be different. Sometimes you could argue.
Spiritually similar.
Of higher quality, though, out of the Senate. Plus, we're going to speak with Goldman Sachs Chief U.S. Equity Strategist David Kostin after the break. This is Open Interest.
another art museum called the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There, you understand the history of this great land, not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Also reasserted the credibility of American deterrence, which is like no other. The people at NATO said there's never been anything. You know, I rebuilt the entire military during my first term, and we have a great military. We have great generals. Got to know the good ones and the bad ones. We kept the good ones. Over the past 2 days, I was honored to participate in the NATO leaders meeting, and also had extremely good individual discussions with the King and the Queen, Secretary General Ruta, and the Prime Minister. Great discussions, very knowledgeable people. Major focus of our conversations at the summit was the need for other NATO members to take up the burden of the defense of Europe, and that included the financial burden. As you know, it was 2%. And we got it up to 5%. And they said, a couple of them came up to me. One in particular said, "Sir, we've been trying to get it up to 3% for 20 years, and we haven't been able, and you got it up to 5%. So they're going to be, most of them, I guess almost all of them, are going to be contributing now 5%, a number that people are surprised at, but you need it today. The United States accounts for 2/3 of all NATO defense spending, and since I began pushing for additional commitments in 2017, believe it or not, our allies have increased spending by $700 billion. I said to people, you don't have any money, and a lot of them weren't paying. And so I started the process, and I picked it up as soon as I got back, which is 6 months ago. And following my election last November, almost all have accelerated plans to reach the 2%, 3%, 4%, and then ultimately, very quickly, 5%. And all of this is going to be done very quickly, almost immediately. You probably know this as well as I do. I'm sure they've been talking about it. It's really been a big focus. In a very historic milestone this week, the NATO allies committed to dramatically increase their defense spending to that 5% of GDP, something that no one really thought possible. And they said, "You did it, sir, you did it." Well, I don't know if I did it, but I think I did. This will be known as the Hague Defense Commitment, which is pretty good, pretty appropriate. When the allies reach this number, it will add more than $1 trillion a year. Think of that, $1 trillion per year to our common defense. And this is a monument really to victory, but it's a monumental win for the United States because we were carrying much more than our fair share. It was quite unfair, actually. But this is a big win for Europe and for actually Western civilization. For years, past administrations failed to get most allies to contribute even the 2%. I remember when I came here, we had 4 countries that were up to 2%, and I remember Poland was there. A couple of them were there, and but most of them were. We had 28 at the time, as you know. It's increased a little bit, and they've agreed now to more than double their budgets in all cases. And Europe stepping up to take more responsibility for its security will help prevent future disasters like the horrible situation with Russia and Ukraine, and hopefully we're going to get that solved. Last week they lost 7,000 soldiers, mostly soldiers, but they're also getting hit in Kiev. They're getting hit in some of the towns also. And that means life. Life is disappearing also in the cities and towns. Should have never happened, would have never happened if I was president. Said it 1,000 times. And it never did happen. It's never even thought about. But it's vital that this additional money be spent on very serious military hardware, not bureaucracy. And hopefully that hardware is going to be made in America because we have the best hardware in the world. You saw that where 14 missiles were shot at us the other day. And they were very nice. They gave us warning. They said, we're going to shoot them. Is 1 o'clock okay? They said, it's fine. And everybody was emptied off the base, so they couldn't get hurt except for the gunners. They call them the gunners. And out of 14 high-end missiles that were shot at the base in Qatar, all 14, as you know, were shot down by our equipment. Amazing stuff. Amazing that they can do. It's like shooting a bullet with a bullet. It's the same thing if you think about it. 14 out of 14, and they weren't even that surprised. I said, do you do that well often? They say, we pretty much do, sir. The Ukraine crisis has also highlighted the urgency of rebuilding our defense industrial base, both in the United States and among the allied nations. We cannot afford to be dependent on foreign adversaries for critical minerals. And as you know, we made a deal with Ukraine to take a vast amount of the land they have for minerals. We need it. And once again, I want to thank all of the people in the Netherlands, incredible people. It's a great place. And all of the NATO allies for the tremendous summit that we just had. A letter just came in, and a statement came in from the Atomic Energy Commission of Israel. And I just wondered, this is an official letter, and they're very serious people, as you know. The devastating U.S. strike on Fordo destroyed the site's critical infrastructure and rendered the enrichment facility totally inoperable. It was devastated. We assessed that the American strikes on Iran's nuclear facilities has set back Iran's ability to develop nuclear weapons for many years to come. This achievement can continue indefinitely if Iran does not get access to nuclear material, which it won't. It's so sad that that whole thing had to go. But I just want to thank our pilots. You know, they were maligned and treated very bad, demeaned by fake news CNN, which is back there, believe it or not, wasting time, wasting it. Nobody's watching them, so they're just wasting a lot of time, wasting my time. And the New York Times, they put out a story that, well, maybe they were hit, but it wasn't bad. Well, it was so bad that they ended the war. It ended the war. Somebody said in a certain way, you know, that it was so devastating, actually. If you look at Hiroshima, if you look at Nagasaki, you know, that ended a war too. This ended a war in a different way, but it was so devastating. Also, they have, out of Dubai, just came that Iran's foreign ministry spokesman, this is Iran's foreign ministry, says its nuclear installations were very badly damaged by the American strike. So what bothered me about these reports with fake reports put out by the New York Times, failing, I call it the failing New York Times because it's doing terribly. Without me, it would be doing no business at all. But, and by fake news, CNN and MSDNC, all of these terrible people. You know, they have no credibility. You know, when I started, they were at 94% credibility, the media. Now it's at 16%. And I'm very proud of it because I've exposed it for what it is. But when I saw them starting to question the caliber of the attack, was it bad? Well, it was really bad. It was devastating. They were obliterated. In fact, you can't get into the tunnels. They just put that over. That just came out. They can't, there's nothing, there's no way you can even get down. The whole thing is collapsed in a disaster. And I think all of the nuclear stuff is down there because it's very hard to remove. And we did it very quickly. When they heard we were coming, it was, you know, you can't move it. Very hard, very dangerous, actually, to move too. And they also knew we were coming, so I don't think too many people want to be down there knowing we're coming. With the bunker busters, as we call them, we're the only ones that have them. We have the best equipment, best nuclear equipment, and we have the best equipment in the world. And by the way, we can't forget our submarine, which was out there, submarines actually, but submarine was out there. We shot 30 rockets into an area, every single one of them. I think it was almost 400 miles away, I think, Pete, right? 400 and long. It was in the ocean, long ways away. And we shot a total of 30. Every single one of them hit within 9 inches from where it was supposed to be. It took out a lot because we didn't do just Fordo. We did 2 others in addition, which hadn't been completely destroyed. So we hit them with a submarine from hundreds of miles away. Amazing, just amazing equipment. Greatest submarines in the world. Nobody's even close. They're 20 years behind us when it comes to submarine technology. So that's one, and the other was from the Atomic Energy Commission, and they have about 3 or 4 of them now coming in from Atomic Energy Commissions from various places. But the one that we have that just came out, we released it a little while ago, was from the Israeli Atomic Energy Commission, but numerous of them are getting to see the site, and the site has been demolished. And again, we had these brave patriots, these incredible flyers, these people that can fly a plane better than anybody can fly a plane, going into very hostile territory, flying into the territory that has got more missiles and things pointed at it. But it was very stealth. They didn't get to see it. It was dark. That's the amazing thing about the shots. They hit the shots perfectly, and yet it was dead dark. There was no moon. There was no light. It was virtually moonless. It was very dark, and the shots were hit perfectly. But when they get demeaned, and they were very upset about it because they knew how strong it would be. Back in Missouri, the pilots flew about 36 hours, 2 ways, far distance, and in those incredible B-2s. And we then had the F-22s, and we had the F-35s, and we had other planes, and we had, I think, a total of 52 tankers. That means the big tankers, because the refueling was a lot for all of the different planes that we sent. Incredible operation, and I have to say, General Raisin Kane was incredible. That's why he beat ISIS, and we beat ISIS in a matter of weeks. I was told it would take 4 to 5 years. We did it in a few weeks. And he was great. That's why he's the head of the Joint Chiefs of Staff right now, because I had a very good experience with him. He knocked out ISIS in a period of literally a few weeks. Amazing. And it was supposed to take a few years, 5 years to be exact. So we had a great victory there, and we then came here, and I think we had a great victory here. But this is an ongoing project. This is the safety of Europe, the safety of the world. And they've raised it from 2% to 5%, something which nobody, and you're talking about over $1 trillion a year. So we're talking about a lot of money from coming in from countries that were not paying nearly enough to be effective. So I have, as you know, Marco Rubio with me, and Pete Hegseth, Secretary of State and Secretary of War. Should we say Secretary? You know, it used to be called Secretary of War. Maybe for a couple of weeks we'll call it that, because we feel like warriors. Used to be called Secretary of War. In fact, if you look at the old building next to the White House, you can see where it used to be Secretary of War. Then we became politically correct, and they called it Secretary of Defense. I don't know, maybe we'll have to start thinking about changing it, but we feel that way. Do we have any questions, please? Wow. That's a lot of questions. Who's a nice person? Oh, you're not a nice person, but I'll let you ask one. Go ahead. What's he going to ask? He is not nice at all. I know him well.
Thank you, Mr. President.
Yeah.
Thank you for taking the time before flying home. You just said you believe the conflict between Israel and Iran is over. What makes you so confident it is? And what do you do if it isn't?
Because I dealt with both, and they're both tired, exhausted. They fought very, very hard and very viciously, very violently, and they were both satisfied to go home and get out. And can it start again? I guess someday it can. It could maybe start soon. I think a big telltale sign was when, as you know, Iran somewhat, by not much, violated the ceasefire. And Israel had the planes going out that morning, and there were a lot of them, 52 of them. And I said, you got to get them back. And they brought them back. They didn't do anything. They brought them back. It was very good. I thought it was amazing, actually. They have fought a hell of a war. They fought very hard. I think the war ended, actually, when we hit the various nuclear sites with the planes. And I just hope you people can give these pilots, these are the best pilots in the world. They're the best shots in the world. They call them shots. That's what they are. And wait a minute. And I just hope you can give them the respect they deserve, because they came home to fake news. And like, oh, gee, there was hardly any damage. The things are decimated. So, but I think, no, I think they're very much finished. I think Israel's going to get back to doing what they do. And I think that Iran's going to get back. You know, Iran has a huge advantage. They have great oil, and they can do things. I don't see them getting back involved in the nuclear business anymore. I think they've had it. They've been at it for 20 years, and I don't see that happening either. Now, if it does, we're always there. It won't be me. It'll be somebody else, but we're there. We'll have to do something about it. Yes, please, go ahead. Go ahead. Oh, fake news, CNN?
I'll hold it.
Oh, yeah, here we go. Wait till you hear this question.
Thank you, sir.
You should really say how great our soldiers and our warriors are.
I think everyone appreciates our soldiers and our warriors. I do have two questions for you, Mr. President. You just cited Israeli intelligence on these attacks. Earlier, you said U.S. intelligence was inconclusive. Are you relying on Israeli intelligence for your assessment of the impact of the strikes?
No, this is also, Iran made the statement, and it's also, if you read the document that was given, that Pete can talk about if you'd like, the document said it could be very severe damage. But they didn't take that. They said it could be limited or it could be very severe. They really didn't know, other than to say it could be limited or it could be very, very severe. And you didn't choose to put that because it was very early after. Since then, we've collected additional intelligence. We've also spoken to people who have seen the site, and the site is obliterated. And we think everything nuclear is down there. They didn't take it out. Okay, question? Please, go ahead. Go ahead. Yeah, blue dress.
Thank you so much, Mr. President. Yesterday, you said China can now continue to purchase oil from Iran.
Yeah.
Are you giving up on your maximum pressure campaign? Because there are sanctions right now.
With who?
On Iran.
No, look, they just had a war. The war was fought. They fought it bravely. I'm not giving up. They're in the oil business. I mean, I could stop it if I wanted. I could sell China the oil myself. I don't want to do that. They're going to need money to put that country back into shape. We want to see that happen. Would it? No, if they're going to sell oil, they're going to sell oil. We're not taking over the oil. We could have, you know. I used to say with Iraq, keep the oil. I could say it here, too. We could have kept the oil. No, China is going to want to buy oil. They can buy it from us. They can buy it from other people. But you're going to have to put that country back into shape. It desperately needs money. Yeah.
Mr. President.
Yeah, please. Here we go. I'm picking the beauties today. Go ahead.
Mr. President, Secretary General Rutte has described President Putin as an adversary, a threat, an enemy. Do you view him the same way? And in addition to that, you mentioned General Kane, your chief of staff, the chairman of the Joint Chiefs of Staff.
General Kane.
Yes, he has said that Mr. Putin has territorial ambitions beyond Ukraine. Do you view that in the same way?
Possible. I mean, it's possible. I know one thing, he'd like to settle. He'd like to get out of this thing. It's a mess for him. He called the other day. He said, can I help you with Iran? I said, no, you can help me with Russia. Because, you know, in the last few weeks, we took care of India and Pakistan, Kosovo, Serbia. I think on Friday we have coming in, the Congo is coming in, and Rwanda is coming in. That was a vicious war that went on, a machete war. Heads chopped off all over Africa. They're coming in. We did 2 others in addition to that. Nobody's ever done anything like this. No, I consider him a person that's, I think, been misguided. I'm very surprised, actually. I thought we would have had that settled easy. I've settled 4 of them in the meantime. But he did call up, and he said, you know, he's close to Iran. He'd like to help us get a settlement. I said, no, you help me get a settlement with you, with Russia. And I think we're going to be doing that, too. Yeah, please. Go ahead, please.
Thank you, Mr. President. You've made clear your position on what impact the strikes had. I wanted to ask you what is next with Iran. For instance, is there any indication from U.S. intelligence that Iran was able to move any material, including
No, we just the
uranium?
opposite. We think we hit them so hard and so fast they didn't get to move. And if you knew about that material, it's very hard and very dangerous to move. It's called in many people they call it dust, but it's very, very heavy. It's very, very hard to move. And they were way down. You know, they're 30 stories down. They're literally 30, 35 stories down underground.
You think you got it all?
Oh yeah, we think we got. We think it's covered with granite, concrete, and steel.
Can I ask you, are you interested in restarting negotiations with Iran? And if so, have they reciprocated?
So
or is
our
this
people,
sort of a settled
Marco could answer this, but our people are not. I'm not. The way I look at it, they fought. The war's done, and you know I could get a statement that they're not going to go nuclear. We're probably going to ask for that, but they're not going to be doing it. But they're not going to be doing it anyway. They've had it. They've had it. Now maybe someday in the future we'll want that. But I've asked Marco, do you want to draw, I just asked him the question as we were walking on the stage, do you want to draw up a little agreement for them to sign? Because I think we can get them to sign it. I don't think it's necessary. Marco, do you want to talk about that, please?
Mr. President, I think President Trump has shown a willingness to meet and talk to anybody in the world who's interested in peace. I don't know of any president that's been as willing as he has to meet with anyone and talk about peace. We'd love to have peaceful relations with any country in the world. And so obviously that'll depend on Iran's willingness not just to engage in peace, but to negotiate directly with the United States, not through some third country or fourth country process. But I know of no president, probably in our modern history, that's sought peace more than President Trump has.
Sounds like the door is open, but you're in no rush. Is that right? It sounds like the door is open, but
I'll tell you what, look, we're going to talk to them next week with Iran. We may sign an agreement. I don't know. To me, I don't think it's that necessary. I mean, they had a war, they fought. Now they're going back to their world. I don't care if I have an agreement or not. The only thing we'd be asking for is what we were asking for before about we want no nuclear, but we destroyed the nuclear. In other words, that's destroyed. I said, Iran will not have nuclear. Well, we blew it up. It's blown up to kingdom come. And so I don't feel very strongly about it. If we got a document, wouldn't be bad. We're going to meet with them, actually. We're going to meet with them. Yeah, go ahead, please.
Mr. President, Netherlands TV, thank you for visiting our country.
Good.
As I understood, I, of course, I'd like to know how you slept last night at the House of the King.
Oh, I slept beautifully.
But probably a more serious question. I think you just had a meeting with President Zelensky. Did you discuss any ceasefire in this Russo-Ukrainian war?
No, I wanted to know how he's doing. He was very nice, actually. You know, we had little rough times sometimes. He was, couldn't have been nicer. I think he'd like to see an end to this. I do. I think what I took from the meeting couldn't have been nicer, actually. But I took from the meeting that he'd like to see it end. I think it's a great time to end it. I'm going to speak to Vladimir Putin, see if we can get it ended. But look, these are brave people. They're fighting these wars all over the place. You know, last week they had, I guess, I told you, close to 7,000 young soldiers, Russian and Ukrainian soldiers were killed, 7,000 in 1 week. It's crazy. It's crazy. So I'll be speaking to Putin. No, I had a good meeting with Zelensky, and I had a lot of good meetings. We had a lot of good meetings with a lot of people, a lot of great leaders. But he's fighting a brave battle. It's a tough battle. Yeah. Go ahead, white dress.
Thank you. Ida Hallikainen from Finland, Ilta-Sanomat. You have played golf with President Alexander Stubb. How do you see Finland as a NATO ally and partner, and how would you describe your relationship with our president?
Well, he's a very good golfer, okay? In fact, he was on his college golf team. He went to a good college in the South, as you know, a very good college, and he was a good golfer. We had a good time. I think my relationship's great. I want to buy icebreakers. You know, you're very good at icebreakers. And I actually made him an offer. I didn't go to Congress. They'll try and impeach me for this. But there's an old, it's not old, it's fairly new, but it's used icebreaker. And I offered him about 1/3 of what he asked for. But we're negotiating. We need icebreakers in the U.S. And if we can get some inexpensively, I'd like to do that. Actually, they'll fix it up, make it good. Also, we may buy some icebreakers. You know, that you're the king of icebreakers, that particular country. They make them good. They make them really good, and they know what they're doing. And so we're negotiating with them for about 15 different icebreakers, but one of them is available now. It's old, and it's, old. It's like 5-6 years old. And we're trying to buy it. I'm trying to make a good deal. It's all I do my whole life. My whole life, that's all I do is make deals. Yeah, please. Go ahead. Sir, go ahead.
Yeah, a question for NewsHour, Dutch TV. First of all, on Article 5, on your way here, you spoke about the commitment of the U.S. to Article 5, saying, I'll give you my definition once we're here. What is your definition, and may the U.S. commitment to Article 5 change in case some of the NATO members do not reach the threshold that was discussed today? My second question is following up on a colleague on Iran. What intel reports do say that everything over there was obliterated?
Yeah, well, there are numerous of those reports, and they're coming out fast and furious. But the most respected ones we've already seen. And I will say that on a very confidential basis, they're looking at the reports, like numerous reports, and including people going to the site and checking the site. And they're going to be having, I guess you're going to be having over the next couple of days you're going to encapsulate it. But no, the site was obliterated, just like I said it was. And just like the pilots should be given credit for. As far as Article 5, look, when I came here because it was something I'm supposed to be doing, but I left here a little bit differently. I said, I watched the heads of these countries get up, and the love and the passion that they showed for their country was unbelievable. I've never seen quite anything like it. They want to protect their country, and they need the United States. And without the United States, it's not going to be the same. And you can ask Mark, or you can ask any of the people that were there. It was really moving to see it. They love their country. They were so respectful of me because I'm the head of the United States. And I made, the King of Saudi Arabia, when I was in the Middle East. So I was in Qatar for a different reason, not a reason to get shot at. We were in there for economic development reasons, Qatar, UAE, and Saudi Arabia. All three leaders of those countries, and we took back $5.1 trillion into the United States. All three leaders said, you're presiding over the hottest country in the world. The United States right now is the hottest country. Everybody wants to be there. Everybody wants a piece of it. He said, a year ago, your country was dead. You had a deadhead running it. You had a country that was dead, and it was dead. You had people pouring through the borders. You had inflation. You had everything. He said, you've made it in 5 months at that time. You've made it the hottest country. This is the hottest country in the world. The United States right now is the hottest country in the world. And when I was around that table, it was a nice group of people, many of whom I knew from previous. When I saw the passion they had for the country, and almost everyone, and you probably have the tapes, it was very public, but almost every one of them said, thank God for the United States. Without the United States, they couldn't really have NATO. It wouldn't work. it wouldn't work. It will in the future because now they're paying much more money, but it wouldn't work. It was great. And I left here differently. I left here saying that these people really love their countries. It's not a ripoff, and we're here to help them protect their country. Okay, we'll do one or two more.
Thank you, Mr. President. A question on Spain. Are you satisfied with today's...
Oh, I think Spain's terrible what they've done. No, I do. They're the only country that won't pay the full up. They want to stay at 2%. I think it's terrible. And, you know, they're doing very well. The economy is very well. And that economy could be blown right out of the water with something bad happening. You know, Spain is the only country that... Are you from Spain?
Yeah.
Good, congratulations. You're the only country that is not paying. I don't know what the problem is. I think it's too bad. So we'll make it up. You know what we're going to do? We're negotiating with Spain on a trade deal. We're going to make them pay twice as much. And I'm actually serious about that.